Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Made it.
Yay.
You know what's annoying me right now? How spot on the weathermen have been this week. They said it was going to be like
the hydro. What have they been calling it? Hydro something?
Hydroplaning? I don't know.
No.
The hydrologic outlook?
Yes. Thank you, Vanetta. You see, that's the educated one of the group.
This is what a full ride to Indiana gets you. You get
us two idiots over here.
That's fine.
Yeah. But it's just a fancy way of saying like water/rain, right?
Yes. Moisture. Yes.
Yeah. It's a sophisticated way.
Yes.
I got it. All right.
So fancy.
Spot on. They talked about fog and it being warm. It's we got fog and it's warm. Yesterday said it was going to rain at 2:07 and it rained at 2:07. I mean,
I'm sorry. How is it that you're amazed by meteorology in 2026?
It's usually not that correct, though.
You just find out about it.
It's unbelievable. I wish they could tell me what the market's going to do. That would be nice too.
Yeah, I wish. Shenanigans all around. Nikki, what are your plans for the weekend?
I don't have huge plans. I mean, today I have to. I shouldn't even mention this because my dad has somewhat forgotten about such activities. But tonight I will be picking up the winnings from the March Madness pool.
Oh!
You know what?
You forgot about it.
I did forget about it because if I remembered, I'd be busting your balls about it.
Yeah, I know. And I should have just said, I shouldn't have said anything, and I should have just picked up the cash, and no problem. So that has been arranged.
You could have had a free loan. So on Monday, I'm coming in with some tendies?
Maybe if you're lucky. I still haven't decided, you know.
You still haven't decided if you're going to give me my money?
Mm-hmm.
So Monday you're coming in with some chicken minis?
Yeah. You know what? I'm coming in with the chicken minis, Vanetta. I'm doing it this Monday. You want the little biscuits too? I'll get the little biscuit sandwiches.
You know this, man. Yes, that's what I want. And the hash browns and a fruit cup.
All right. I'm doing that.
Yay. You're my favorite person.
I'm doing that. It's finally going to happen. You've worn me down. You've got me finally.
It's so easy to buy her love. That's what I love about Vanetta.
I am a cheap date. I don't know. Like, I get the word out there. Like, I am easily impressed.
Yes. Listen up, everybody out there. All you need is a couple dollars of Chick-fil-A. You got this.
Basically.
Oh, that's so good.
Yeah.
Oh, that is exciting. So wait, will this gentleman, will he be home, or you have to go into his backyard again? Like,
well, the plot thickens a little bit too because my friend actually already picked it up from him.
Oh.
So I still have yet to meet him, and he texted. So
you're not even putting yourself in harm's way?
No.
If you're not putting yourself in harm's way, did you really?
Yeah, but every movie shows you that the transfer, that's the most dangerous part.
Yeah. I just got let into this pool in the last two things for Super Bowl and March Madness.
Oh, you're banned.
And I've basically won both of them. So.
Oh, they hate you?
I'm sure he's like, this guy. We had the little kerfuffle with a couple extra dollars that was, a little bit short, and there was some.
But we let it go. We let it go so that we can win the next time.
I mean, you went super Karen on the guy. You're like, let me speak to your manager.
Pretty much. Yes, that's what I did. I felt very, very odd about it.
I can't believe you went Karen on a bookie, but here we are.
And survived and lived to tell the tale. Yeah.
Your legs work. Your card didn't explode when you turned the key.
Yeah. So, but I was expecting to pick it up from him this time and be like, hey, listen, I'm sorry about that situation. I appreciate you putting the pool together. This is fun, blah blah blah. But now I remain anonymous. It's just a collector.
I gotta love it. That's great.
Yeah. So that's my plan tonight. I don't have much plans for the rest of the weekend. That's it.
If you're not doing anything, you can drive out here and deliver it.
I actually might be in your area tomorrow, so
there you go.
That would really add, another cost to you. That would be a surcharge. Delivery is no doubt a surcharge. We've already got, so I'm going to just add it up for you. So you have the 3% fee like they do at restaurants.
Sure.
Service fee.
Service fee, cost of living.
Sure.
They automatically put in there. Sure.
Yeah, cost of living. So you have the 3% on there. You got to obviously have a tip, so we'll take another 20% for that. If you're going to put a delivery on there, there's a flat rate. It's $49.99 for the delivery.
And the new that just kicked into effect on the 15th, fuel surcharge.
Surcharge.
I forgot about that. That's $9.99.
Right.
I mean, so we're talking.
I owe you $200.
Yeah.
And also, is any of this happening in the city of Chicago? Because that's an extra 10%.
Right.
It is Cook County, so this counts. You're Cook County, I think, right? Oh, if you were late,
that's an
you
extra
would have got a
$7.
discount, but not so much. Cook County taxes. So it's gonna be a little lighter than you expect.
I'm gonna owe you money. I get it.
Probably, yeah. It might not be like, might not be.
Can I claim some dependents? I thought I only had
cannot.
No, you
squirrel in
cannot.
the box. I have 2 squirrels in the box now.
No, you don't get to claim the squirrels. No.
All right. Well,
Yeah. So.
Big trouble now. I'm actually looking forward to this weekend now. This is really good.
Such a. Oh.
You made me very happy.
When I texted him that we won, his response was, "Oh, I didn't even watch, but that's great. I just spent the Super Bowl winnings. I need a re-up." And I was like, "Oh, you are such a." But
it is nice to be kept. I appreciate it. What's the next pool we can get into?
That's the big question. I think he does more of them. We'll figure it out. But we have
you must do a football thing that you can get us some money for.
Football hasn't started.
No, football's
like the draft.
You got to do like baseball now, but I don't know.
Yeah, baseball's a tough one. I don't know.
I don't know what he'll have.
Yeah.
So we'll see. I'll let you know. I'm sure you'll be game.
Maybe some FIFA. Maybe some FIFA, some World Cup soccer.
Yeah.
I don't know anything about soccer, football, whatever. I don't know.
You don't need to know. You just got to turn the horseshoe away, and it just falls in. It's good.
Mm-hmm.
How about you, Bat? What'd you do last night, or what are your plans for the weekend?
We got the update that we have 2 squirrels in the box last night, which was nice.
Okay, that's exciting.
Yep, we only had 1. Now we have 2. The wife is ecstatic. She wakes up. It's the first thing she does.
Maybe they're making squirrel babies.
They could be. That would just make her so. That would put her over the moon. It was one of her anniversary presents, so it is probably one of the better anniversary presents I've given her. So she's very excited about that. A hockey game this weekend, and crying from how we got from 6,600 to 7,100 without a doubt.
And you missed it. You missed it like a Johnny. That's why.
No. I missed this last 25% for sure. But I will say one thing: we never told anybody to get short. Really here, we never talked about.
No, never.
You gotta. If you're not short in here, when you never heard that from us. You heard
it's quite the opposite.
But
we were buying when everybody was screaming that the house was on fire.
So I'm proud. You never do as well or as good as you think you're supposed to when you look back. So I'll reflect a little bit on that, Vanetta, this weekend. But that's about it. My son did want to go to Starve Rock. Yeah, I did want to go to Starve Rock. We kind of put a little bit of a kibosh on it, going to be too wet kind of thing.
What do you think his Gore-Tex gear is for, baby? Like I want to hold your hand when I tell you this, but sometimes the weather is not great when you go outside.
That's for sure.
I'm kind of questioning why you think that he was inviting you.
No. He wasn't inviting me. He was just telling me what he was going to do.
Uh-huh.
And I suggested that, It's too.
The campground is open. Both the East and West Loop Starved Rock is open. So
I know, but I know what my own backyard looks like. I mean, standing water everywhere. It's going to be standing water around there too. I mean,
see, but that was your opportunity, Dad. You should have said, "Oh, you should totally go. You should totally go. You bring all your friends, all your camping gear. You should totally go." Because then they go and they're stuck in the mud and they can't, pitch the tent. They can't do anything, and then they're like, "Oh, this stinks." And then
I've lost my touch, son. You are 100% correct.
You didn't think about that. This was your opportunity. Oh yeah. Get Luca, get all the other dummies, and go out there right now. Smart idea. Good job. Yeah.
Good job.
For a very reasonable, nominal, some would say, fee,
You'll set them up?
I could discreetly watch over the kids. I have my own setup. I'd be fine. So, like, if you want someone, like, you want an auntie to look over the kids.
You two are too nice, because Vanetta, that's also not the way you play it. The way you play it is that you go there and you be the crazy lady on the campground.
I was just saying, if you promise to scare them, and it won't take a lot.
Yeah, you're supposed to go there and be the crazy lady that, like,
is blasting Taylor Swift from my Bluetooth.
Yeah, and screaming at them and throwing things and, like, shitting in the woods, like,
No.
Be pretty
you gotta
good.
be that crazy lady.
Dig your hole outside there.
Yeah.
There.
Yeah, tell them to move their tent because it's right on your potty hole.
I would help them. I would not be crazy screaming lady. I would help them.
No, I like my son's point of view here. I think you have to be that person.
Yeah.
I might have to be that person, so that's good. I like it.
All right. Well, hopefully he makes good choices. I don't know.
Yes, me too. How about you? You doing anything good?
We will see. Gotta see if I can get some things together around the house, and might go on an adventure, a little TBD, but I'm not sure. But
I mean, you did rattle off the Starved Rock, like, opening.
Yeah, I did. I have been looking.
Yeah, it definitely sounded like you've been exploring that opportunity.
Well, to be fair, I know when all state parks open, and most were around April 15th. So
okay.
But some are open year round. So just little fun facts.
Nice.
There you go.
April 15th, after they get the funding from us from taxes.
Yeah, everybody's like, damn, I need to go, like, take a walk after that.
No, it's normally when they think that they can reasonably keep the water on and running in the park, so it doesn't freeze. I'm telling people that don't know.
Yeah.
We got a lot of indoor kids that watch our show. But we have a great show for you today on this fantastic Friday. We are so glad that you are with us. Thank you so much for all of the support, for all of our content that we worked so hard to put out for you week by week. But this week we are finishing right on top, at the top of the 8 o'clock hour. We got the Weekend Stocks, Jamal in the house, giving his sort of recap of all the crazy things that happened this week. We had a lot of earnings, the bank earnings, and Netflix. We had massive moves to the upside and new highs. Jamal is going to recap it all. Then we have Fast Market at 8:40, one of my favorite segments. This is a viewer participation segment. Viewers submit their trade ideas to the bats, and I don't know what is left to buy at these all-time highs, but hopefully they've come up with something new.
Yes.
Yeah.
Maybe it's not a buy. Maybe it's a sell in some other products that we haven't really talked a lot about that still has high implied volatility. Oil still has high implied volatility. Maybe there's something in there to do. Back to 87, where it's been kind of bouncing off of 87. So maybe there's something to do there. You still got call skew there.
I think it'll be a lot of iron condors.
Yeah.
Like, everybody, like, you know what? I have no clue up, down, sideways, but I'm just going to do both sides here. And I think that makes sense. Most still have high volatility. Like, that's probably the way to go. It's hard to sit here and think about getting long 7,100.
Yeah, it would be a first for most people because we haven't been here before.
Yes.
Stinks.
Do you really want to be that first person? Like when everybody looks back at the chart and they're like, "Oh, look at this dummy that bought it, 7105." Like, the 3-lot trader. Look at this idiot. And it's like,
it did go to 7,600, but now look at us. We're at 8,600.
Of course.
And then at 9 a.m., we have a market measures, part of our Zero DTE series, trading zero DTEs with one DTE, PT1, part one. But trading zero DTEs with one DTE. Nikki, what does that mean?
It's a good one. I mean, we're looking at zero DTs and one DT positions. It'll be good. Like we're looking at like selling the next day, like right before the close of the previous day. So
okay.
it's like zero.
You stole this from Liz and Jenny.
Well, they now front run our content. But yes, exactly. So we're looking at if you like what does it make sense to sell at the close the previous day going into the next day? Like it's a PDT thing, but PDT will hopefully go away, so then you won't even have to worry about it.
Yeah, there we go. All right, well, we will break that down and look into it. And then at around that 9:20 time frame, we have live from the trade desk. We have Quentin in the house counting down the top trending tickers over at Tasty Trade. That is our run of show. But hey, make sure you're subscribed to the Tasty Live YouTube channel because we're going to start dropping a lot of content over the weekends. We know you guys are straight just degenerates for our content. And probably the most exciting news of all, Mike Butler is going to do a revamp of the Mike and His Whiteboard series.
Yes.
So that is headed to YouTube soon. But again, you just hit that subscribe button. Don't miss any of our YouTube content. Listen, Jenny, you're going to start doing stuff for the weekend. Errol has a series for the weekend. Dr. Jim has a series on YouTube. Bat shows are on YouTube. Nikki does stuff on YouTube. We're all on YouTube. So you get a tube, I get a tube, we all get tubes, but follow us on YouTube. But I really am excited for our weekend stuff, so that's gonna be great. But hey, in the meantime and in between time, you guys want your daily dose?
Yeah.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
news.
across the wire.
This
leading story,
just in.
top story, just in.
Today's headline. This just in.
Breaking news.
Oh, well, that was just very abrupt.
Yeah.
You did say you're easily impressed, so there you go.
Hopefully everything's okay. It's like, Laura, are you okay, girl?
Yeah.
Are you good? I think everything's fine. All right, everybody. Today is a fantastic Friday, April the 17th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
I love this headline. It says, stocks usually take an escalator up and an elevator down. In this latest rebound, it's happening in reverse. This is crazy. So Wednesday marked the first time ever that the S&P index rallied back to record territory in 11 days or fewer after a drop between 5 and 10%. Never happened before.
Yes.
Go ahead.
Go on. No.
No, I mean, first of all, I think they're stealing our headlines. I've been saying this for the last 3 or 4 days that it's been the reverse, right?
Yeah. I don't know if we could put up the headline here.
So they're definitely watching the show. There you go. Definitely watching the show. That being said, that's the little thing that makes you feel a little bit better about possibly missing the last 25% of this.
Because it's never historically happened before. Correct.
So you can't really play for it, but it stings just as much. Like there's nothing else. It stings just as much for me.
I mean, the flip-flopping of the headlines, you really have to turn off the news.
Yeah, you do. Right.
It's literally my job.
No. I just mean like you can watch the news if you sit there and just kind of take it with a grain of salt and then just don't take it as gospel because it is purely what is what is going to get the most eyeballs right this second. Like
Right.
there is nobody says, well, you know what? Microsoft is down 50%. Maybe it's a bad, situation we have in Iran, but maybe you should buy some. Like it's always,
you're going to hate the Microsoft headline I have in about 3 minutes.
I know, but it's like, you gotta be objective to the noise. And
today is Expiration Friday. What are you guys doing in the indices? What's the expected move for today?
Even the S&Ps have an expected move for the 0 days of 26 handles, which is what you have already in the market.
Yeah.
So
we can go home?
It's 26 handles from here. Yes.
Yeah, I don't know what to think today. I thought today would be, a little bit of weakness, just be.
You don't want the weekend news thing. Saturday's always the day where we come out with something.
Or just taking profits. That's what
taking
I thought.
profits.
Right.
That's what I would think.
If you haven't taken them already, right? I mean, if you held it to this point,
who the hell is taking profits on to going up 100 points a day? Why
Right.
are you taking profits?
Right.
But now you get, you're going to have 48 hours of no contact with the cash register.
You're going to have 48 hours of no movement in your positions.
Yeah, it's like, this would be the time where you'd be like, okay, I'm gonna go take a nap or something,
right?
And just relax for a couple days. But who knows?
Yeah.
In an interesting headline, people are actively managing their money more than ever, says Charles Schwab. Thanks, Chuck. We've been new. But in the face of a volatile market environment, the Schwab says that new brokerage accounts are being opened at rapid paces. Of course, we have been actively aware that there are bigger trends in the retail part. But where do you think we go from here in the terms of retail investors?
This is great. I mean, this is the way they should have been doing it. I mean, passive investing, you can still passive invest, but be actively managing. As Nick just said a minute ago, you can be looking at something saying, wow, market's taken off here. Microsoft hasn't take off. I mean, it's not an obscure name. It's not like an AAOI or something like that people don't, you really have to be trading to know that these are common names. You can, hey, the Mag 7's underperformed as the rest of the market rallied. Maybe I'm a little bit bullish here. I'm going to get overweighted in those versus the other. I mean, just logical stuff. I mean, I think this is awesome. About time.
Yeah, I think because it was always retail being dumb money. I think that's completely flipped on its head. I think even probably from COVID and the start of COVID, I think we've realized that retail might not be the smartest. They might be in mommy and daddy's basement, but they also have opinions and ideas and act on them and are fast and they move in and out and they trade these things. They're not like married to positions. I think the idea that retail is like late is totally off the table after all this stuff, because retail was getting out of positions / lightening up / changing their trading habits for the early part of this year, and they were the ones that front ran this entire move. So I think it's only going to get stronger.
I think so too. Schwab was one of the biggest decliners in the S&P 500 yesterday. So wah.
Yeah. Well, the companies that don't really cater to trading are probably going to continue to have a hard time.
Yeah, Schwab really hasn't gone anywhere. You're correct. It's at the low end of its range. It's been a pretty tight range from around 91-ish or so, where it's sitting right now, up to a high of around 105 or so. It went back about half of its move higher, which a lot of stocks have done, but fell off after earnings.
Yeah.
Former Treasury Secretary Hank Paulson, the man who steered the U.S. through the 2008 financial crisis, is uttering some dangerous words. He issued a stark warning about the $31 trillion U.S. Treasury market. And basically he says that a vicious bond crash is coming soon. When a former Treasury Secretary uses the word vicious, should we be scared?
No. He's on the travel circuit right now where he's getting paid to say something. And if he
seems nice.
Yeah, it is nice. Bonds are 114. If you've been watching this show, we've been talking about bonds sitting right here at 114 is kind of no man's land. And it is no man's land. Now, they've been as low as 111 and a half, and in this basically the same amount of time, they've been up to 119. They're just sitting here at 114. I mean, if they go lower, rates will go a little bit higher. If they go higher, rates may stay steady. I mean, that's it.
Yeah, bonds have been they've been sticky right here, 113 to 114. It seems like this is going to be the spot. I mean, it seems like nothing's going to happen with rates, despite
rank is 18.
Despite all the talk on both sides. Because you have, Trump on one side and that kind of theater of,
cut rates.
Yeah, cut rates, let the money flow. And then you got the other side that are like, we have inflation and stagflation and allflations and, rates are going to be at 10% or whatever the number is. And it seems like it's like, oh, well, maybe it's just somewhere in the middle.
Right.
Are you doing any bond trades, Nikki?
Not really. It's been far less interesting than
you got a market and everything else moving, but not like crazy. Even if it is in one direction, bonds have been going nowhere. Maybe a decent premium selling strategy, but an IV rank of 18 and a low monthly implied volatility just because the product itself doesn't have a lot of movement. There's other places to hide my money.
I've got positions in like the FX space. I'm long some USD in a variety of ways. I've been trading a lot of gold and silver as well. Not that those are like bond products, but there is some currency related aspect to them. So, but yeah, to my dad's point, it's just the trading opportunities have been equities and oil. I mean that has been the stuff that's got some juice to it.
Hey, can I change gears for just a quick second?
Sure.
Make sure maybe he can contact somebody on a break or something like that. The Stanley Cup playoffs start tomorrow, son. So maybe there's a pool there on the playoffs.
I wish you would interrupt me to talk about some hockey betting nonsense, man. You better get off my show.
No problem. Let me go get on that, me lord.
Can you do that after the show today?
Let me call my people, me lord.
I got to thank my Taiwanese sources for supplying that for me. Thank you, Dino.
Yeah.
Dino, you're on my list. In other news, like you mentioned, Nikki, oil falls on prospects on talks to end the war in Iran and revive supply. Good news, there is a 10-day ceasefire that seems to be holding between Lebanon and Israel, keeping track of all the ceasefires. Our ceasefire expires on Wednesday, but they are having talks this weekend, but then a new ceasefire was started last night on top of the other ceasefire. What are you guys doing in oil?
Well, it's not at 150, thank God, as everybody was telling us it would be. I think we've traded.
Not everybody, as the news was telling you, right?
Of course. But I think we've traded this about as good as we possibly could.
We sold a lot of upside, skew. That was
a ton.
Yeah,
we've hit the butterflies. We've hit diagonal spreads in USO. We've hit put ratios in USO. It's been this has been an amazing volatility regime. You've had volatility in little pockets that pop up at a historic level and allow you to do stuff. And you're still kind of getting it in the gold and silver, in the metals space as well. But it's not nearly as high as it was, a couple months ago when we had the first craziness. But you're getting these little pockets of extraordinary volatility that have presented huge opportunities that are in products that you don't normally trade. And oil has been one of those where you could do pretty much anything and you probably made money here. As long as you weren't just like speculating upside, calls.
Yeah. The
anything, whether you sold call spreads, sold put spread, sold strangles, iron condors, you did butterflies, you did ratio spreads, anything that you did other than just buying volatility, upside volatility, which is what everybody was talking about, 150, 200 oil, market crash, blah, blah, blah. As long as you didn't do that, you made money trading oil.
So what do you think of the price of oil right now with an IV rank of 52 or so, which is still good? OVX has come down into the 70s. That's the volatility on oil from 95, 100 plus. It's down $4.50 this morning I'll round up and say it's 87. But when you look at a chart of it, it's pretty much in the low end of its recent move, but still high relative. Yeah. I mean, before the war, I think it was 70. A couple of weeks or months before that, it was in the 60s. Now we're at 87. What do you think about oil here? Perfectly priced? Is it a both side trade? Is it a catch it on the way down a little bit? What are you thinking?
I think you could do both sides. I have been leaning into so I think USO is very interesting because you still have the dynamics of a drift in that product despite oil going down. So oil can go down and that product can kind of stay sticky at a high point. So you could do stuff like upside, like I've been doing crab trades where I'll buy a call 30 or 40 days out and sell 2 or 3 calls closer to expiration, further out of the money. You start kind of delta neutral / slightly short delta because you're doing more units, but it allows you to kind of inventory a little bit of upside gamma while selling that tail volatility. And because the product has this drift, there is kind of a potential for it to stay high for longer, to borrow from Jay Powell.
Yep.
Higher for longer.
Higher for longer. Hey, yes. In other news, the largest industrial IPO since 1999 kicked off yesterday. Madison Air raised $2.2 billion in its IPO. I have never heard of the company.
I was going to ask you the same thing.
So that's crazy. That was just hold on, I'll get you the ticker.
I mean, can't we talk about Bird again? I mean, what is it?
What's that stock doing?
At 10, it closed at $11. I'm rounding here. It looks like it's 12 this morning.
Wow.
Even the S&P's up 40, by the way.
Unbelievable.
Well, that's bonkers.
Unbelievable. This move. I'm speechless.
Yeah, it's MAIR. Thank you, James.
MAIR.
Yes.
It looks like it $31, $32 or so. It hasn't opened yet. Obviously no options on it, but
yes.
It looks like it's quoted up around 50 cents or so, but 31-ish was where it opened.
That's good for them. I mean, so
again, I don't know what they do. I don't know where they are. I don't know anything about their company, but $2.2 billion is nothing to sneeze at.
That's a lot of cleaning to the air.
Yeah, it is.
That's. I mean, the other IPOs have not been good, so that's good for them.
Good for them.
They're bucking the trend. I guess the whole space, air. Like they're in that
air and space. It's
air
a museum.
And space. Yeah, it's like it's a hot button. It's a buyable headline, right?
Right.
Like company focus on air. That's like, space. We're going there. That's cool.
I was wondering how they were thinking about this. There you go.
Yeah, there you go. Hey, big news last night was the Netflix earnings. Netflix, believe it or not, beat Wall Street expectations for first quarter revenue and reported a big jump on earnings. They brought in a massive amount of cash, but thanks to the breakup with Warner Brothers, $3 billion of that cash was just because of that breakup deal. The company did not, I guess the guidance was what was unfavorable. And the big news is that Reed Hastings, Netflix's co-founder and current chairman, is going to exit the board in June when his term expires. Again, he started this company with the simple idea of sending DVDs to people in the mail, and he basically, invented streaming, pioneered a whole industry. So put some respect on that man's name.
Yeah, but he was always good for a good soundbite that would send the stock lower. Usually, I mean, he every time he opened his mouth, it seemed like, and he may have opened his mouth this time. I would have thought with him leaving that the stock might have rallied on that news, but I was wrong. 97 down $10.
Yeah, a little surprising. We were talking about it a little bit on the break. It's just like the market not that Netflix is like the top of the market anymore. I mean, it's a big part of it. Obviously, it's a big.
Got an okay correlation of 41, but yeah, I know what you're saying.
A stock,
any news at all-time highs of even if it's earnings related and subject to that, specific to that one stock like Netflix, that it would have a little bit of a damper on the market, like you would
that or. The move would be muted to the downside. Like I was not expecting to see an at the expected move to the downside here on earnings. You figure with the way the market's acting, the move that would have been $10 would be $5.
Right.
But it's not. So that's kind of an interesting little tidbit here. But
did you trade it for earnings, Nikki? What did you do?
We did. We'll see where we open here. But I did a diagonal spread short term. I'm long the 10. Am I long the 100 or the 105s? Let's see. I forget exactly.
Does it matter to stocks?
Not really. I mean, it'll probably be the difference between $50 and $100 more. Right. So we'll probably lose some money here. I'm long the 105, and then I'm short upside premium in the 1 day, which will basically go to zero. So it'll be interesting to see where volatility kind of settles in here. If there's a little bit of a bounce again, it seems like nothing stays at lows for the day. So it wouldn't shock me to be at 105 by the end of the session.
Yay!
Ain't it the truth?
Yeah.
Good times. Hey, AMD has indispensable assets that are powering the stock to its best run in 2 decades. AMD stock is cruising into record territory as enthusiasm continues to build around the company's business of supplying CPUs. Shares of AMD rose 7.8% yesterday, and that they traded to their first closing high since October of 2025.
It's had an absolute rocket ship of a move here. It's gone 200 to 278 in the span of this market-wide face ripper.
Yeah.
I have a little short delta here. Naturally, I think this is one of my positions where there's no way you could have managed any sort of two-sided trade into this move.
That's okay. Fair enough.
Yeah.
I don't know what else to say.
We'll see.
AMD has been, like you said, a face ripper. I mean, but it is. I mean, all-time high. Well, not all-time highs. Recent highs. Maybe it is all-time highs.
It is all-time highs.
Yeah, 260 and change, and it's 275 right now. So.
Oh my goodness.
Yeah, it is down $3 this morning.
Scoopy.
Yeah, there you go.
Yeah.
Well, the competitor to AMD is NVIDIA, and quantum stocks have rallied this week after NVIDIA announced new open source AI models designed to advance quantum technology. IonQ, D-Wave, quantum computing, and Rigetti are tracking for massive gains. The stocks are down small this morning, but the announcements came on World Quantum Day. Did not know that was a thing. But what are you doing in IonQ, Quibbits, Rigetti?
We're getting to the point where I feel the slight deja vu of yesteryear of Avis stock squeezing higher. People are buying bird shoes because they're building AI. The quantum stocks are now back in focus. These are usually not the most fruitful times to get in. It's good to be long when they start, because that usually means that everything's going nuts and you need to catch whatever's up 15%, because the stuff that's up 5% isn't interesting anymore. But it feels like we're getting a little frothy.
Yeah. Anything in NVIDIA, since you're not trading a ton of the quantum?
NVIDIA's up about $1 or so. It's flirting with $200 here. NVIDIA, I guess it's near its all-time highs of 210 or so that it made in October. But before this rally with the market, NVIDIA has been following the market basically step for step.
Didn't you do a trade in NVIDIA this week on your podcast, Ben?
I did a little bit of both sides in NVIDIA. We'll see how that works. Probably with the $1 move, it'll be fine right now. It's a time play. So,
Microsoft stock has seen its best 4-day stretch in 6 years with an extreme bounce. That's crazy. What is going on in Microsoft?
It's been awesome. I needed this move.
The shares of Microsoft are up 13.3% for the week, making the best 4-day stretch since 2020. Stock was up 2% alone yesterday.
It's up another 1% before the market opens right now.
But wait a minute, that was preceded by an equally horrible move lower. I mean,
we don't want to talk about that. We only talk about positive vibes here, Bat.
Yeah, what are you talking about? Come on.
It is up $5. Here's one. We were just talking about like all-time highs on a lot of these stocks that follow the market, right? This all-time high was closer to $5.50, and it's sitting at $4.25, up $5. So it has plenty of room, relatively speaking, if it's supposed to gain its all-time highs in this market.
One analyst said the extent of Microsoft's gains relative to what the options market was pricing is something that should only happen out of every 100 weeks.
Well, he should look at about 1,000 other stocks because they've had similarly large moves. He could just look at the overall U.S. market. It's called the S&P 500. It had a 99th percentile move over the last 10 days. So I don't know. That guy's that was the first time he probably watched our content and we said it was an outside the expected move, and he took that a step further.
Yeah, but he can now buy a new boat. We're here just with our thumbs up our noses.
There's boats. Boats. That plane is really, that's the high society.
All right.
Boat's good. You're there.
Costco is raising its dividend 13%. Not sure if you care, but Costco boosted its dividend, but investors are continuing to be focused on gas prices and traffic trends that drive growth. What are you doing in Costco?
I did a little long trade in Costco. It worked within like a day or something like that from my option trades today, which is every day, Monday through Friday now. If you thought it was good every Tuesday and Thursday, wait until you get it every day.
Amazing.
Costco, $9.85. Basically unchanged this morning.
Yeah, we looked at a trade there for what's your assumption on Wednesday. The markets are very wide. Also very low implied volatility. I mean, you look at an IV rank IV rank of 26, monthly implied volatility like 22, 25. It's just it's basically like a SPY or a Qs. It's not as high a volatility product as you would think it would be.
Yep.
Bat, I pulled this just for you. Chipotle, CMG, they're bringing back their popular buy one, get one deal to celebrate the start of the NHL playoffs. Any customer who wears a hockey jersey to participating restaurants in the U.S. and Canada, after 3 p.m. local time on Monday, April 20th on 420, if you know, you know, you will get a buy one, get one free. So you just got to wear a hockey jersey. And it's a tradition that brings fans together around the Stanley Cup playoffs, said the Chipotle marketing officer.
They'll try anything to sell those shitty burritos. $35. Wow. It's unchanged. It's kind of on its butt. It has not participated with any type of rally in this market. It does have earnings coming April 20th, which is on Monday, I guess, right? They're doing this for
420.
Wow, interesting. Oh, sorry, April 29th. My eyes deceived me.
Okay.
Well, let Vinny know about this.
I was going to text him as soon as we go to the break to tell him I got it. I'm on
Perfect.
See, there you go. See, I'm doing the Lord's work there. Hey, finally today, because it is Friday, and I like to do a little thing I like to call Trader Taste Test. I don't know if you've ever seen the meme of like this blonde lady. It's like, it's the first time she has kombucha, and she's like, yeah. And she doesn't really know. Like, have you seen that meme? She doesn't really know.
But I've seen that face before.
Yeah, she's like, yeah. So, this is how I feel about this, but I think I eventually end up coming around. But are you guys into this? You can get this right here in Chicago. It's a sushi pop-up. What?
We're in Chicago trying the new sushi push pops from Umi. Umi is one of my favorite spots in general to get sushi from in Chicago because they fly their fish from Japan and sell sushi by the weight at a great price. My buddy Jimmy showed me how they actually make these push makis using some pretty unique machines to get the job done. Each one of these is $15 and they had a weekly special maki. It's a negi hamachi push maki that has chopped yellowtail with scallions on the inside, then wrapped in yellowtail sashimi, jalapeno, and the soy sauce in the tube was replaced with ponzu sauce to recreate a favorite of mine, yellowtail jalapeno sashimi. They do come in a wide variety, such as the completely vegan roll, and the salmon in Philly has cream cheese inside. My favorite, along with the negi hamachi push, was the Flaming Hot Cheetos California. It's a classic California roll, but then that subtle cheesy heat works in tandem with the crab meat. Super solid maki, and absolutely perfect for on the go. Let me know what you guys think.
Yeah, I would eat that. I also will say that guy is a real estate agent, like on the side, and he was in my condo building showing somebody around, and I was like, hey, you're
the guy on TikTok.
You're the food guy. You're the Chicago food guy, and he was like, yeah.
Wow.
Wow.
So I saw him. I spotted him. I felt, celebrity. Like
Bat, would you eat that?
You know what? When you first put it up there, I wasn't so sure, but I kind of like it.
I was the same way. I was like, oh no, and then I was like, oh, okay,
yeah,
$15.
I mean, you're walking around Chicago, you're walking around a city, and you really got to stop to eat a sushi roll if you're gonna. Yeah. I don't hate it. I don't hate it.
All right.
I don't know if I'm doing that like during a hot summer day though. You're carrying around a sushi roll.
You're thinking way too much into this, but I agree with you there. Yeah.
I don't know.
Hey, that's all my time. Bat, what's coming up next?
You know what? It also might be good for delivery too, because then they have.
Oh yeah, that's true. It's all covered. Yeah. All right. Good.
We're gonna take a quick 90-second break. You really gave us some food for thought here, but now this is very unintended. You really did good. We're going to take a quick 90-second break. We're going to go over a little bit about yesterday. We got some charts for you. We'll be back in 90 seconds. Even the S&Ps, 71.15.
Can't stop, won't stop. Up only, baby.
We'll be back in 90 seconds. It's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Niggy, we are back, son, and you know what that means. Well, before we do like confirm and send and everything else, let's take a look at this market because
I need somebody to tell me what happened. Did the war end? I mean, we got oil down $7.50. This is insane.
Yeah, that's why the market's rallying the way it is, up almost 60 now. It does seem to be a little frothy at this point. I mean, you maybe start looking at some of these diagonal spreads on the put side and maybe an SPY or Q. Or something like that. NASDAQ's up 230 and change. Russell's up 36. That's your leader in the clubhouse. The Dow, which has been the lagger for this.
Bonds just moved 25 ticks.
And that's a huge move in bonds.
Almost a full point.
$1,000 on that move. Yeah, they were under 114. They got down to 113.16. Volatility in by 50 cents. Nothing pointing to any kind of reversal in the market as of yet, but you keep an eye on volatility, see if that catches a little bit of a bid. Now you are going into the weekend, which is, usually a time where volatility does expand a little bit because you've got the uncertainty of, war news. I mean, we hate the news for the market, direction here, but it almost seems like this weekend, even good news might be bad news. Now, I've talked about, and I've said it on the show previously, that it seems like it's going to be a buy the rumor, sell the news to me, just on the price action. I'm not talking about politically, and I'm not talking about anything else. I'm just talking about if we're at all-time highs and oil is selling off the way it is and continues to do that, and they come up with some great news about the war is over, I think the market will actually have a negative reaction to that. That would be or at least a muted move to the upside. That would be my thinking of this, because this move has been one of biblical proportions. But listen, you can't fight the tape. I've said that also. We had no indication of any kind of sell-off here in anything. There's been no volatility expansion. Go ahead. No volatility expansion. There's been no outlier moves to the downside in any one product. It's been smooth sailing right now, and it continues right now. Bitcoin, 76,000 and change, 76,500. Ethereum up $11. Oil, you just mentioned it, fell out of bed here. It was down around $4 when we came on the show. Now it's down almost $8, $7.60. 25 cents off of its lows. Gold catching a little bit of a bid, up 53 or so. Silver catching more of a bid, up $2.50. Nat gas cannot catch a bid, although it is up a skosh here. We'll take a look at whoa, where'd you go?
Sorry, I had a little kerfuffle.
That's okay. Just kidding you. It seems like the market's getting, as my friend Aaron has said, getting a little frothy. But he did say that 20 handles ago too.
20?
Well, I'm just going by today. What have you done for me lately?
I mean, this is just an incredible move. This move in oil is. I'm looking for headlines. I don't see.
Remember, that 7-point move is a $7,000 move.
U.S. considers $20 billion cash for uranium deal with Iran. I don't know. I don't know what we're looking at here, but the move. I mean, you've got not only is the front down significantly, but the back has come in too. I mean, the back, the curve is very flat. We're sitting here like 30 days out and beyond is 80 or below. It is below 80.
Right.
I mean, we're basically back to pre-Iran oil prices.
Yeah, almost. Yeah.
Not right this second, but that's what's being priced in right now.
Yep.
I mean, that's crazy. Unbelievable.
Yeah. I've people always ask me, where was oil before the war started, and I always tell them it was around 70-ish or so.
Yeah.
So that's we're 82 right now. I mean,
but that's in the front. The back is there.
That's in the front, right? What Nikki is talking about is this volatility curve futures curve that we have here. You got front month for the next basically month, 27 days, trading 82 and change right now. But when you look out, 90, 150 days, you're getting oil back into that area that was, basically telling you by the end of the year or sooner now, the way it's acting, that you'll have, they're anticipating oil being right around where the war price started. So,
and volatility getting absolute. Vol futures are at 20 right now.
Yeah,
we've got. I mean, if you look at,
and that's after the roll, right? I mean, when you look at volatility futures right now,
and I can show. I'll pull up mine real quick,
go ahead.
just to show this, because
put the volatility curve up there.
Yeah, front month volatility. I mean, we're in a pretty decent contango now. Yeah. Shockingly, I mean, you're talking about almost a full point, on the rest of the curve. We've gone from,
which makes it pretty flat, because you got about $1,000 a point or so in premium, held into the future. So it's really amazing how fast it's moved.
It's unbelievable.
Have you looked at some of these prices in SPY, just the put side of things? 20-ish delta options with 30 to 60 days were getting you almost twice as much. They were double figures: $10, $11, $12. They're $5, $5.50. Yeah. I mean, volatility has really contracted here. I'm going to be curious if we ever get a flat skew again in SPY, and that might be an indication that maybe things have gotten too frothy. We'll have to look at that after the opening here, see how things going. I don't know, just on price here, the 71.30, we got to 71.35. I think you have to start nibbling a little bit on the long side. But yet again, there's nothing that points to anything doing anything but normal pricing today. Like, I'm not looking at a 3% move to the downside, like we had one from the 3% move to the upside off of the lows. I'm not looking for that, because there's nothing in volatility right now telling you that that's going to happen there, or anything anywhere across the board. Bonds are going higher. I wonder what the dollar is doing. Let's see what /6E is doing.
I mean, it's got it. You have bonds higher here.
Yeah, bonds higher. The euro's higher, makes the dollar weaker.
Yeah,
interesting. Really interesting.
It's unbelievable. I mean, this move in oil, we're at 82. It's done. Over.
Yeah,
I mean, that's what it's saying.
Yeah,
this is the conclusion is here.
Yeah. We had someone calling CGI is what volatility closed at on the futures.
I think you'll be at 50. Not that low. 60.
I don't think it'll move that low, but you'll get mid 60s. Maybe you flirt with the low 60. I think.
Yeah, bonds up a full point. Volatility futures in 1998. The VIX is below 18.
Unbelievable.
Just incredible.
I mean, it's the fastest move in history, basically, this whole reversal here.
Unbelievable. Mm-hmm. Unbelievable.
Yeah.
All right, let's do confirm and send.
Let's do a little bit of confirm and send. Let's do it. Even the S&P's up 55, Russell up 40. Russell's actually up 1.5 times as much as pretty much everything else. Now you got the Dow catching a little bit of a bid too. Friday, April 17th, son. You're all buttoned up for everything you had to do for taxes, I hope, right? I mean, it's too late now. I mean, you have to file an extension if you didn't, but you all good?
Yes, I'm good.
All right. I like you being, an on-time good person.
Thank you.
You're welcome. I want to create a long position by selling puts in SPY each month. I just talked about this a moment ago. However, I don't have permission to sell naked puts. Is there a way to do that? Way to do this without being able to sell naked puts?
Well, I
don't know who. Well, I'm going to answer. I'm going to take a little stab at this real quickly for you. So I'm going to help you. I don't know who the hell you trade with, but you got to get a different, liquidity provider here. Come to Tasty Trade or someplace else that at least, allows you. You should be able to do whatever you want with your money. Now, if you don't have the buying power to sell a naked put, because in a margin account, let's say it's anywhere, depending on the time frame and the strike price, I don't know, $6,000 to $10,000 to sell a naked put. You don't have the buying power. That's one thing. You got to create a vertical spread. But if you can't sell a naked put, I don't know if you're going to be allowed to sell a vertical spread.
Yeah, probably can't. So I would look at a different broker. If you're in an account, or we get a lot of Canadian traders too that, are not allowed to do kind of the strategies that we are allowed to do here. Being naked the put, I would say go to the put spread if you can do that. If you can't do a put spread, a call spread, an in the money call spread, like buy the call at the strike where you want the put to be, and then sell a call that's out of the money. It'll kind of give you that same sort of dynamic. But yeah, if you can't sell puts and you're in a margin account, or not a margin account, or you're at a broker where they just don't allow it, that is a you problem.
Yeah.
And you got to go somewhere else.
Yeah, agreed. I think really you got to. It's 2026, man. You can do whatever you want. Just walk outside. You can see everybody doing whatever the hell they want. So please do what you want in your own brokerage account.
Yeah.
Next one, please.
Do sector ETFs see the same type of volatility trend as individual companies during an earnings season? Does volatility increase ahead of earnings, and when does it collapse? Is it after each individual company announces, or after all the companies in the sector announce? Ooh, man, we're digging in the weeds here.
Yeah, you really. I'm going to say if it expands, I'm going to say no, and if it expands at all, it's de minimis. Maybe in the shorter dated options in a NASDAQ that might have, a heavily weighted NASDAQ stock that you'll get a little bit there, but I don't. You can't play for it. You can't do anything about it. I don't know. There's nothing to make any money with it. As a matter of fact, look at today. You've got a Netflix down. Not that Netflix is the biggest, NASDAQ stock, but I think it was one of the Mag 7, right? At least.
Well, it used to be. Yeah. And then we replaced it.
Right.
NVIDIA took the FANG.
Yeah, right. At least one at a time. And here it is down $10, and the market's making new highs up 1%. Let's just round here. And volatility is getting annihilated in by 2.5%. So no, I don't think there's a player. I like how you're thinking. You're thinking outside the box, but market's too big to be to find these little anomalies.
Yeah, I think that this also gets into like the hyper focusing on like trying to figure out exactly what is going to happen, exactly the perfect trade, all that sort of stuff. I think the key here is just that, generally speaking, volatility is high or expanding into an unknown event. That's just how markets work. If there's, a lot of uncertainty, like when you have like a war in Iran, there's a lot of volatility. Like that's just because there's uncertainty there. And so that happens in individual names. After earnings, you generally see that volatility come in. It's not going to come in an exact amount. It's not like it's every time you have an earnings event, it's a 10% vol crush or a 20% vol crush. Yeah. It could be more, it could be less, it could be, less into a downside move. It could be more into an upside move. Like there's so many variables here. I think just understanding the dynamics of volatility, why it is acting the way it does act, which is increasing into earnings. That's kind of the important part here. But yes, generally speaking, sectors, like you tend to see volatility be sticky into, the week of the Mag 7 earnings. It's not a shock because there's a lot of things that rely on that.
Sure. It usually sets the tone of what's going on, right? Yeah. Vanetta asked, what are we going to do this weekend? If the market's here, I'll probably be doing some drinking this weekend is what I'm going to revise.
In a good way or a bad way? Because
in a complacent way, a reflective way.
I would say it would be celebratory, excuse me.
Reflecting, but sure. Do sec, you want me to grab this one?
We already did this one. Next one, please.
Is a put ratio trade? Well, this is a good one for us. I don't know how you feel about this because I think you've been on the wrong side quite a bit. Is a put ratio spread bullish or bearish? Same question for a call ratio, please.
I created the omnidirectional trade. I'm the master of the omnidirectional trade. I even went so far that I created my own and called it the crab trade.
This is true, but a crab trade is directional.
It is. It's omnidirectional.
Okay, okay, but you put it on with the directional bias on the trade.
Not exactly. It's pretty much zero delta at the start. It's omnidirectional.
Okay, then I'm glad I'm asking an expert. I had no idea you were an expert in the ratio spread, but I'm glad you're an expert. Please do explain to me and explain what the crab trade is too. Let's get both of this.
The crab trade is essentially just moving the long option further out in time, and it gives you a dynamic of directionality to it via that option being further out in time. So you have positive gamma, you have sometimes a little bit more delta depending on what options you use, but you can set it up as kind of neutral right now, but with a skew to one side in terms of direction over time, over the period of the long option. For ratio spread specifically, it's traditionally you would say a call ratio spread is bearish, a put ratio spread is bullish. Your best spot is against your delta, and so that's why we've kind of called it an omnidirectional trade. It's a high probability of making a small amount generally, and then you have a small shot at a big number in terms of profit potential if the trade goes against you to a small amount. So it's kind of a little bit of everything.
Right.
Do you have anything to add?
No, I mean, it is a little bit of everything. If you do a classic ratio 1/2, let's just say it on the put side, stock's 100. So you buy the 95 put and you sell 290 puts. You're going to have long delta on that trade to begin with. So I say that a put ratio spread is a bullish trade. You have no risk to the upside. You have risk to the downside. You're synthetically short a naked put. If you're synthetically short a naked put, then that is a bullish position, and that makes it, I don't know how you can argue that fact. Now, you have done ratio spreads where you've added other legs to them and made them more omnidirectional. And by omnidirectional, you have risk to one side, but you make money inside an expected move, which is very similar to the ratio spread.
Mm-hmm.
So,
yeah.
Well, as we've evolved, I've learned to not be quite as rigid in my thinking. And I would have gone to my grave saying that a put ratio spread is bullish and a call ratio spread is bearish, and there'd be no way that you could change my mind. Delta is king.
Yeah, delta is king, but delta changes.
It is ever evolving and changing. You are correct. So I have learned from my mistakes, which a lot of you young people have not been able to do yet. I have learned from my mistakes to say, you know what? We can all be friends here. I agree with you. It's omnidirectional. And this is called compromise, son. And this is what the world hasn't learned how to do yet. I thought in my time they would be able to do this. We've learned how to compromise. I've learned how to see your point of view and say, you know what? Decent sense. I don't particularly agree with 100% of it, but 65% of it I agree with. So omnidirectional is a good place to go.
E-mini's up 65. Can't stop, won't stop. Unbelievable.
Market makers call this a blow off top when it goes lower in a day or two.
Yeah, exactly. On Wednesday, the VIX was up small on the day. Well, it's not up anymore, buddy. At the same time, ES was up about 0.75%. I thought volatility only went up when markets go down. No, sir.
No, but I mean, 85% of the time or more. We had a similar question a couple of days ago like this too. That is the relationship it works at. Now, when volatility gets too high, meaning, that 25 to 30-ish range, and when volatility gets too low, let's just call it this 15 to 18 range, risk has cost. So if you're going to take off risk, it's going to cost you something. And at some point, volatility, although it contracts, is just not going to contract as much because risk, to have no risk, you can't have no risk and not have it cost you anything.
Yes.
So it's going to cost you something. Volatility gets to a point where it reaches almost an artificial floor to it. Now, you still have theta decay. There's no advantage there, but you might see 1 month versus another month where you could start doing calendar spreads or ratio spreads or something like that, that you could take advantage of that.
Well said.
Well said. E-mini S&P is up 67. Unbelievable.
Unreal.
We're going to take a quick 90-second break. We're going to come back. We're going to get a tiebreaker here. You think the market's unreal. I think the market's unreal. We're going to bring in Jamal and see if he thinks the market is unreal. We'll be back in 90 seconds. Tasty Live. We've got
This Week in Stocks.
This Week in Stocks.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, we got this man Jamal in the house. How are you, my friend?
Doing fantastic, guys. How you doing? What's going on? What's happening?
Market's doing fantastic, too. I mean, this is all oil related right now, right? I mean, you got oil down $10.
It's at the lows of the session, 81 and change. I mean, this is...
I mean, if you didn't believe in the rally, this is it. If you've been short throughout the rally, I mean, this is well, hell, you might as well stay short at this point. But I mean, this is it. Like oil now, down $10, down to 80. I definitely think the conflict is done. I mean,
well, you've definitely lost a catalyst here for right now. But you know what? When you get a move like this of 10, 11%, I got to think the move is done in oil. I mean, I think it's gone too far, too fast for this time frame. I mean, those puts are probably bid in the stratosphere. Son, this might be time for one of your omnidirectional trades in oil that you were just talking about.
Well, I have them on already, so I mean, I things are going to be going nuts on the.
Yeah, we got lulled to sleep, right, Jamal? I mean, listen. I mean, Wednesday, Thursday, we opened higher. Volatility contracted. We stair-stepped higher. We didn't, it was kind of a fall asleep market. Would you agree?
Yeah. The way I've been playing it over the last 2 weeks is basically long a lot of the NASDAQ names. I'm also long a NASDAQ. I'm short a NASDAQ straddle. But it's mostly been in the money. I'm trying to keep long delta on, and I've been following Mikey in this year-long trade. It's a really interesting thing. Much like you've been learning new things, I've been learning new things too, Tony. I mean, really.
Good.
And so I'd never really traded like that, like having a year-long straddle in something. I mean, that was actually kind of a crazy idea to me. But I love the way he broke the idea down, and so that's what I've been doing. And I keep long deltas with it. I mean, just trying to be bullish in the market, and hanging with Mikey, you're going to be bullish no matter what anyway, right? Am I right?
No, that's not true. Him and Vecchio, they deserted me.
During this time period.
Yeah, during this time period, and now.
Yeah, and I'm most disappointed in Chris. I'm disappointed in Mike because he's an old timer and he knows better than to go against the old walrus. But the young kid Chris, I'm really disappointed in here. And
he'll remember this, though. He'll remember this.
I know.
We'll have him back again.
Yeah. I mean, look better from him.
I don't think he's ever really been a perma bull type of dude. He is more like, hey, what direction are we going in right now? Well, that's
no. He let his views and the news and headlines and all the bullshit.
Oh yeah. No, he got it.
and I'm not talking about having a different view on political or oil or market itself. It's just price. Like, he knows as well as anybody, you get a 5 to 10% move to the downside. How can you play for a 20% move to the downside? Like,
after that.
No, but the gold move shook him.
It definitely did.
That's what happened. That's what really happened. The gold and silver move shook him.
You get too macro. It's all bullshit. I mean,
the gold and silver move shook him. That hurt. It hurt him. It hurt him. Cut him deep.
That did shake him a little bit.
Yeah. And speaking of those, I mean, 4 weeks in a row, right? They've been following the market, so they're up as well. They're making moves. But the way I've been playing this is I've been trying to get long. I've been long the NASDAQ via that straddle, and I've been moving it up throughout this time period. I'm going to have to move it up again today.
Yeah.
And then as a result, I've also been long different names. So it's Microsoft, it's CRM, it's Palantir. I mean, it's a lot of those names that have really struggled. And but I've also had NVIDIA.
Palantir didn't. I thought Palantir would have. I'm sorry to interrupt you. I thought Palantir would have a much quicker move to it. It really stayed depressed for a while relative to the rest of the market.
Yeah, I mean, the software stocks are still a place that looks like a steaming pile of garbage.
Yeah,
I think we
and I tried to pick the bigger ones, right? Like I'm not going with the service. I'm trying to stay with Microsoft or Palantir or CRM. That's we're making my bed.
Totally, I'm with you there. I mean, I am now interested. Now I'm focused on the tech earnings that are coming up because with the volatility getting crushed, the war seemingly over based on the prices that I'm looking at right now and the way things are moving. If these earnings come in, like they have been in the last couple quarters, you got a face ripper ahead of you.
Yeah, no, it's true. I think because again, heading into this, we were thinking like, oh, they're going to complain about the dollar, they're going to complain about oil, they're going to complain about the war. Those were going to be their big complaints. And I don't know. I guess if you still managed to do well this quarter, despite that little dust up, I think you're right. It's going to be a face ripper. And I think even if you struggled, you're still going to be able to blame that. And they're going to be like, oh, okay, well, things are going to be fine now. So I feel like most earnings are going to work out well, right?
Yeah, I would think so. I mean, I'm
going to play a couple to the upside to start out, mostly the tech ones. I don't really mess with too many.
Are you,
I don't mess with any banks.
Dad, are you still in the buy the rumor, sell the news?
Yeah, I really am. Like I said, market makers call this a blow off top.
Yeah.
After it goes down for a couple of days.
You're right.
In hindsight trading, I don't know. It seems like we've gotten too frothy here. I'm not saying.
I feel that. I feel that.
Just on price and move.
But here's the thing: is the headline and the bear will tell you it's 10 or like we got to retest the lows or something like that. You ain't retesting those lows. There, 6,400 was no way. That was a gift. You might get a couple percentage down move.
Do you know how many times I've said that in my lifetime of trading? Now I agree with you because I agree with you 100%. But you know how many times I've said that in my lifetime? Way too many.
I think if it gets crazy again, we maybe get down to 6,850 or 6,800, and we really got to do something to get through there. 6,400 is that's. I mean, I should say that's not happening again. Like in the next month or two. Right. You know what I mean? Like that. If that happens again, it's down the road and it's a different catalyst. It's not this catalyst. It's got to be something new.
Yeah. I agree with that. I just think it's always into the down move. It always. The sentiment peaks before before everybody gets back in. Like it's still the first 400 points to the upside. Everybody was calling it. Was unwilling to dip the toe in, and now you're all.
Yeah, that's how it happens. Let's just look at from a day trade here. Like you got oil down 10%. What else is going to help you to the upside in the market? You got oil down 10%. You got gold rallying. You got bonds rallying already. If if I got to put a gun to my head right here, buy or sell even the S&Ps at 71.36.
You sell them.
Sell them.
Yeah, 100%.
I mean, but we have been up 90 or 100. I mean, we have been unchanged too. So it's the same $50 move. I mean, I think the most interesting play is how do you play the 0 day today? You've got almost a $30 expected move now. So volatility actually expanding in the front month. It was 25 or 26. I think it's 28 or 29 right now. I mean, 0 day. Maybe just call spreads here or broken wing call spread in a intelligent way.
We hit the butterfly yesterday for like $700.
Yeah, which was nice. Now you've got that house money sitting there,
Well, no, we're a net scratch after losing the one before.
You lost the day before. Yeah.
So
you had one.
You didn't manage your winner, and in the last 10 minutes of the day, it cost you full profit.
100%. But I said I was like, I'm not touching this thing. I'm letting it go.
You know how many times I've said I'm not doing something and then did it, 2 seconds later? Yeah, I mean, come on. Come on, son.
Look, when you guys say you hit the butterfly, like you kind of like got one that finished within the range on a 0 day?
Yeah, I did like a broken wing butterfly.
Nice.
I was long the 70-35, short the 70-50s, and then I had a wing that was like, 20 points wide. It was like 15 by 30 or 15 by 25, something like that. And SPX expired at like 70.42 or 70.41, 70.41 and change. So it was like, the long option was $6 or $7 in the money, which is nice, but the one before, which was like a 5 by 10, expired fully in the money. Or a 10 by 15, something like that.
Yeah.
That sounds nice.
Well,
yeah, look, the way I've been playing this is, like I said, I've got these long names, mostly NASDAQ. Tesla is also another one of my longs. Those are my long delta plays, whether it's calendar call spreads or Super Bowl trades. Mm-hmm. And then I've had a couple of, I guess you call hedges, quote unquote. I got a short call spread. It's like 69.50, 69.60 down there. It was part of an iron condor that I took the put spread off. I just was like, well, I'll just keep the short call spread. It's cool. And I got another super bear trade that's centered around 7,000. That's 100 points away now. And so I feel like I kind of have this straddle, if you will, with a couple of short vol plays in there. I'm short vol in CVX. I'm short vol in XOM. I'm short vol in gold and in silver. I feel like those have been still high vol. The number one thing you mentioned at the top of the show, Tony, is the idea of I hope this seems like this is the low end for oil. I hope so, because my downside put spreads are around 76, 75 with a short start. So I hope we kind of chill here and I can still collect that. I feel like gold, oil, and silver have still been the higher of all plays, and that's the way I'm doing it.
Yeah, I tend to agree with you. I think you're going to have to do something in oil. I think. Well, we got to see how the options open here. I'll be really curious to see what the skew looks like in there. If it's really flat, then then maybe you've reached a short-term low here in oil. If they keep that volatility skew to the upside the way they have, then it's the world is anybody's oyster. I think it's maybe set for more two-sided action. We'll have to see there. I'm curious to see what. Listen, this is expiration. You got what I'm starting to call a blow off top here. Going into a weekend, it'll be really interesting to see if you can play. If we close here, let's say, if you could play for another 50 points to the upside, because that's what we've done for the last 14 days or whatever it is. I mean, kind of crazy. Jamal, I'm gonna let you go, my friend. Enjoy your weekend. We're gonna take a quick 90-second break. What are we surfing now?
That's right. Yeah, that's right.
Yeah.
Hang loose, baby. You started doing hockey. I'm surfing. I mean,
fair enough. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We got the opening bell. I can't wait. We're back in 90 seconds. Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell. Let's take a look at what's going on here. Even the S&P's up 47, 71.24. They're about 25 handles off of their blow off top. NASDAQ up 208, Russell up 36, Dow up 500 and change, volatility in by 45 cents, off of their low by 25 cents. Dare I say the top is in for the move today, and probably.
Ooh, that's bold. I mean, I think we'll look at a
I haven't said it throughout this whole move.
I know.
I've been quite diligent, and I've kept my mouth shut.
I mean, so much has changed over this short period of time with us together. A move like this in the past, I think day one would have been probably.
Well, son, let me before we miss the opening, brother. You're only as good as the people you surround yourself with, and I was surrounding myself with somebody who wasn't very good. So I would have to struggle and really kind of work my way out of a hole to try to save myself. I don't have that type of distraction anymore, son. So I could see clearly, and surrounding myself with better people.
Oh, you're the best. You're the best.
I do my best to do that. I say this because volatility has come off by about 20, 25 cents. Nothing would surprise me today. Like, it wouldn't surprise me if we closed up 50. It really wouldn't surprise me if we closed unchanged, but it really would surprise me if we closed up 75 or 80. I guess that would be the one thing that would surprise me today.
Yeah.
I'm looking at this for trading today. So how do you trade this? If you've been lucky enough to have some long delta, maybe you put on a diagonal spread on the put side. You can do these $10 wide diagonals in SPY with the put skew for $5, for the next 2 weeks.
Yeah.
Buy 30-day options, you sell 2-week options. I talked about this with some friends of mine. That would be the type of play I'd be doing. You don't have to get out of your longs, but you could take some of that delta off. It brings in about 20 SPY deltas. So if you had 100 or 150 long deltas in your portfolio in SPY, and you're saying, I want to capture a little bit of this move here, man, you put on 2-3 of those diagonal spreads for $5. Maybe it costs you $2, but it can make you $4 or $5 if you get any type of move to the downside. That's the way I'd be looking at this right now. Let's take a look. What did you just do, by the way? I heard it.
I did another Super Bowl. I think you should be, and that is some USO calls. I did a Super Bowl in crude oil futures. I sold a put spread to buy a call spread. Further out of the put spread is further out of the money, around the 70 handle. I did it at basically zero. I think it was a 3-cent debit. Into this downside move, because I'm short so much upside volatility, and I just closed out of a bunch of it in USO. But it's for, maybe this is not the end of it. And I think even if you get a downside move in oil futures, your put spread's not going to move all that much, because it's all, you're at 70. Like, are we playing for 65 oil? I don't know.
Yeah, no, I agree. I tend to agree with you. I tend to agree with you. I think that's the way you have to play it. Let's look at real quickly what volatility is doing in there. OVX, CGI.
Yeah.
Oof, 63. Remember, prior to the market, it was around 73, 75, if my memory suits me correctly. And I said it would get into the low 60s. That's where we are. I think we'd be closer to 65, but we're 63. We're really back to volatility. Now, if you look at volatility when it was around 63, you're going back to, at the end of February. Let's look at oil futures at the end of February. End of February, oil futures were closer to their pre-market volatility in there, when all the news was coming out about maybe we'll go in, maybe we won't go in, kind of thing. So you have just taken out not only almost in the price, you're about $10 off from the price of it, but volatility options themselves, you've taken the whole war out of this now. I think it might be a little too fast, too soon.
I somewhat agree.
But volatility will do that. And it's going to take a little bit of a sustained move higher for that volatility to get anywhere near, the 80s. Forget about the 90s. Those are gone in volatility forever. Well, forever meaning this cycle.
Yeah, I put on that butterfly, broken wing butterfly in SPX. I did it for a debit, dollar debit.
Okie dokie. So you have $1 at risk, right?
Yeah, on the downside.
Okay.
But I did. It's a broken wing butterfly.
Got it. Your USO. What'd you do in there? You bought.
I just closed. Those calls were $4 yesterday. They're $3.
You bought them back at $1.29.
Yeah.
Great trade.
Yeah.
And your SPX butterfly, you did the 71.15. That's $15 wide. That's typically what we do on the call and put side. But instead of doing the put side, you went $25 higher to 71.40. Correct?
Yes.
Got it. And did it for $1 debit.
And that was a TSM Iron Condor. We did that for fast market into the earnings.
Mm-hmm.
So I just took that up for like $50.
Very nice. Very nice. The TSM had earnings. TSM
yesterday morning.
Up $10. Let's take a look at Netflix. I know you don't have anything really in there to the downside, but Netflix down $12.
Yeah, that's a big move. I have a diagonal spread there, so that one didn't work.
I'm going to hold that. I've got an MU position that's not working. MU making new highs up $11.
Yeah, wow.
I played General Motors to the upside here with the Super Bowl. Actually, not a Super Bowl. I apologize. With a Jade Lizard, I sold the 70 put and the 75.80 call spread. The 75.80 call spread was out of the money just a few days ago. The stock is $80 now. So that spread that I did for over $5 is making a buck, but it moved too far, too fast on the whole trade for me to really make any money in there. I'm up small in there, maybe about 50 cents. Directionally right and not getting paid. Nike's another one. I thought with all the news going on with Bird, that Nike would actually catch itself a bid. It is up 68 cents.
That is a bid. That's about as good as you get in Nike. What more do you want?
Yeah, I sold a put and bought a call spread, the 47.52.5, but it just hasn't gone up fast enough. I'm short the 42.5 put and the long the 47.5 52 call spread. I'm up 80 cents or so on that, but it hasn't moved fast enough yet. I need a move like General Motors is doing. Nvidia up $1. I put on a little bit of short delta in there. It's up $1.60 or so. I'm actually up 10 cents in there. I did one of your diagonal trades, which worked out so far nicely, even though I'm wrong direction. Look at these E-mini S&Ps up 50.
Unbelievable.
No stop, won't stop.
Yeah, this is incredible. I just closed it, or I bought in the risk on the CRM put ratio.
Yeah. Mm-hmm.
So I bought the put. So I have like a little butterfly on the downside for a 10-cent net credit, a small one.
Okie dokie. Good job out of you.
Yeah.
Okay. What do you think here? I gave you my opinion. What's your opinion? I mean, there's no reason other than to look at volatility, maybe 25 cents off its lows. Maybe I'm a drowning man looking for a straw here, but I haven't sold into the market until just now. I'm out a couple of ticks here. What are you thinking?
I mean, I like the call that the top tick was in for the day. So what do we get? 71.50 was like
that's 71.47, but 71.50.
Yeah. Yeah, I think that's probably in. I mean, volatility has come in. It's not at the lows. It's sitting here right at 20.
Mm-hmm.
I don't know. I don't know.
You know, that's the right answer because nobody knows.
Nobody knows. But this has been just incredible.
It has been just incredible. You are correct about that. I mean, just because we've never witnessed something like this before.
Yeah, I think I probably have to take off even more of this US. Yeah.
Uh-huh.
I think I'm going to just take off all of these USO calls. I mean, these have gone.
I mean, they've contracted by $3.
Yeah. I'm going to work these a little bit.
What an interesting market.
Unbelievable.
Mm-hmm.
I mean, some of these calls, like I sold them yesterday at $5. They're $1.50.
Right.
I mean, that's unbelievable.
It really,
you know what I mean? Like,
it really is.
The velocity of this vol contraction in oil, in equities, I can't think of another time that it's been this extreme.
This kind of cray-cray?
Yeah.
Yeah, I could put up now the trade that you put on in SPX for those that are looking to do similar type trade. You bought the 71.15. You got a $28, let's just call it $30 expected move. $30 expected move gets us to around let's call it 71.25-ish, which is the higher end of where you break even on this. So if you're looking for an inside the expected move, you've got almost the whole move to the upside. If you believe the 30 handle expected move here, you got the whole move to the upside, and you have $1 worth of risk or so. That's why you have a red line here. You got $1 worth of risk to the downside. You have more risk to the upside. Your upside is closer to $1,000 to the upside on an outside the expected move to the upside, which kind of goes with my thinking. I think you don't get that kind of move if the top is in for the day, like I said, maybe you don't get that kind of move.
Yeah.
All right, my friend, are you ready to take a quick 90-second?
Yes.
Okay, I'm going to take a quick 90-second break. I'm going to collect my thoughts. I'm going to come back, and we are going to have Fast Market. That's right. We'll be back with 10 trades from you, our viewers. We'll be back in 90 seconds. Let's Tasty Live.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Fast Market. That market. You were so late.
So late. I was seeing the, Shark. I still haven't got my text from Shark, but I saw.
Oh, no. He has been texting me even pre-market. I mean, the crying is off the hook today.
I just, I told him to stay the course. I was like, come on.
He gave back.
Act like you've been here before.
Right. He gave back 5%. He's only up 10% for the year now. And he's really, crying. Cries with 2 loaves of bread.
Horror.
Yep. That's okay. That's a true trader. That's what'd you do now?
All them MSTR. I had a diagonal spread. We put this on March 11th for $7.50. I bought back the 175 call. I mean, this Bitcoin
and you bought back that 175 call because we were probably down the 130.40 handle.
It was trading at 4 cents.
Yeah. Okay, there you go. Right.
And into this rally, that the 160 strike, it's at $12.
Yeah, and you're talking about a 30-day option there.
Yeah.
I mean, that's part of that diagonal spread that goes wrong, right? So you wanted the stock to go higher. It didn't go higher. It went sideways to lower. Your call or all your risk that the premium that you sold, that's the risk, right?
Yeah.
That you sold was basically worthless. You close that and you hope for something. And nobody likes to be hoping and praying. You could have sold another call against it in another week, the option. You chose to sit with it and you really got paid on it now.
Yeah.
I mean, you make $5.
Yeah.
Some would say you're good, but Tom just texted me and said, I heard what you said about me. You both stuck.
He's still angry. You should text him and be like, hey, we just picked up, a couple dollars from the March Madness pool. We'll get you in next year if you want.
I'll have to have the money in my hand so I can fan it out and show it to him and then give it to him and then talk to him. All right, Fast Market, where we go over 10 trades from you, our viewers. Thank you so much for playing along. We appreciate all of your support. We can't do it without you. So please know that I see you and I appreciate you.
Look at volatility.
2020, it's actually expanding. Now, volatility, Friday volatility is the hardest for me to read.
Well, it's usually Vol Crush Friday. They usually just smash the hell out of volatility into the weekend, but it's
not after it contracts by such a great, weekend risk is real. So you can have a market that's strong and have volatility not as weak as you would expect.
Yeah.
You get the opposite when it goes the other direction. But when you've had a market like today, so that's why I don't think they make it so easy that we fall out of bed today. And by fall out of bed, maybe go to unchanged on the day. I mean, let's call it what it is. I'm sitting here with a directionally short position right now, maybe 10 handles higher than where it is, 8 handles higher than where it is. And I'm just looking at it as a day trade. I'm not looking at it as a, load the flotola, we're getting killed here. I'm just trading price. And I haven't said this the whole time. Go ahead.
No, I was just going to say, if we do end the day unchanged, I think that would actually be more bullish for the market, because you would get the whole weekend, you'd get calls for this isn't real. That was a blow off top. It's, all the negative stuff would come out, which then fuels more upside. I feel like it's not good if we end at the high of the session today and volatility at lows and everybody's just kind of lulled to sleep to just buy the dip. I feel like they need a little shakeout. I feel like that would make me more bullish.
Let's see if there's any of those stocks giving us any indication of going a little bit lower here. Some of the buckers here. You talked about car pre-market. This is Avis. I mean, I know it's a stock that's hard to borrow. I think it's closing only if you're trading the options. You can get that changed by calling the trade desk or and saying to them that you assume the risk on any stock that is set to closing only. You can on the options because the options market is
you don't want to trade it.
You don't want to trade it, but there is some open interest there. There are people that want to trade. I've got a couple of emails over the last week or so about car in particular, that it's set to closing only. I'm not allowed to trade it. I want to trade it. You just have to call up and they'll permission you to trade it. But let's take a look at some more of these stocks that are moving lower. I just mentioned it because it was up there at the top of the leaderboard. I didn't plan on mentioning it. Netflix down $11 for earning. The oil-related stocks you would expect. Look at this, a $10 move, 5.5% move with oil /CL down about 10% here. Also going lower, CVX. Let's see if the gas at the pump goes lower. SanDisk down $5. Oxy down 3 and change. Your beloved BE down $2.
Oh, thank God!
It still had itself a run over the last 2 weeks with the rest of the market here.
Yeah.
And then kind of a mixed bag of tricks here. Schwab, die you pig. Down, sorry, I didn't mean to say that out loud. Just talking my own company. Down $1.50. Let's go to the upside here. Pretty broad based. ASML, I know you've traded that a couple of times, up $40. Lilly up $20. Carvana, I think they're going into chips, correct?
No,
they're not. Oh,
no, that's Bird.
Oh, you sure? Are you sure Carvana's not going to do it now? I think they're going to change the
they should
to chip making factories. I think that's the rumor. Goldman Sachs up $14. AppLovin up $12. You've got your usual suspects.
I bought back some puts on a hood diagonal spread. I have a covered call there. I put on the diagonal spread as like a short-term hedge. Those puts I sold at $2 are at 90 cents.
Yeah, you just did it a couple of days ago, right?
Yeah, and I'm just scalping out of some of that risk that has moved just unbelievably.
Yeah, your problem's going to be like the problem I have now. You know what
do you do now?
Right.
That's the issue.
Right. Yeah.
I mean, it's crazy.
Yep.
All right. Should we do it?
I'm ready. Let's go.
Cool. Fast market. First one. Let's do it. Oh God.
LYFT. That's Lyft, son. Do you take Lyft or Uber? Or do you care?
I'm an Uber guy, but I'm long Lyft shares, and I think I'm gonna sell these right now.
You're just long stock.
Yeah, from like a short. I think I sold like the 17 strike put into earnings, and I've been holding this for 3 months. You know, like something like that. Like going back. I'm long at 1702.
You long the
via put, I believe. But I mean, the stock is up $2.
Yeah, and it's about time.
Yeah. So now you're doing the May 13-18 strangle.
Uh-huh.
Oh, God. At $1. Oh, I actually wish I held the stock and did this. Because you get earnings and their Uber buys them at, $30 a share and you get your face ripped off for $1. I think I have to abstain from this. I actually am quite pleased to remove the line item from my portfolio because it takes me 20 minutes to get through all my positions. I think I'm just going to go with one last position here.
Awesome. Let's go to the next slide. Thank you, Evan, in Jacksonville, Florida.
EEM.
Zach in Salt Lake City, Utah. Have you skied Utah yet?
Yeah, I was in Utah.
Oh, it was Utah. I forget where you were. I didn't know if you were in Aspen.
Or no, I was in Colorado for the skiing. I was in Utah for the golf.
Ah, yes, that's what I said. Did you ski Utah yet?
No, I haven't yet.
Beautiful
Next
scheme.
on the list.
You should try that too. EM neutral. IVR looks good, and I need some diversification away from my heavy U.S. exposure. Setting up a neutral to slightly 58.66 strangle in May. What do you think about this?
I think somebody gave me a ratio spread, or I think we sold puts. And
By the way, my profits, they're gone. Even S&P's up 61. They're right there.
So I have I'm kind of neutral here. I'm long, I have the 60-63 call ratio spread. So we're right at the short strikes here. So I don't mind this. You're looking at the 58.66 in May. This is another one that's just so cheap. Oh God, this is tough. I'll lean a little bit short delta. They want you slightly bearish. What about a calendar spread?
Sure.
A diagonal spread?
Okay. I'll go either way.
I can't sell a dollar strangle. I can't do it.
Can't do it, won't do it?
I did a small little Johnny put diagonal spread June, May. I bought the June 63. I sold the 61 in May. I did a $1.43 debit. I'm going to sit on this for 3 weeks and I might make 50 cents.
Way to put it out there, son. Next one,
thank
please.
you.
Alex in Portland, Oregon. Snow, SNOW, neutral too. You know what? So far, I'm just seeing a little bit of a pattern. It's only been 2 or 3 trades, but we're going kind of neutral here, which I kind of like. In this, let the market kind of beat you, see what's going on. Let's see what they've come up with here. Snow looks good between 125, 185. Premium on the upside isn't great at 185, so going with the 125, 175 strangle in May. June gives me more room, but I'll stay shorter with earnings after May expiration. What do you think?
I don't hate this.
Okay. How are the markets in snow? I haven't looked at that.
They're 20 cents wide.
Yeah. I mean, it's good. Good.
475.
Oh, look at you putting it through there. Very good. Good job.
All right. I like it.
Good job out of you. Let's see what
good job out of you.
Let's see what the next one is, please. SPX. Well, we put on a neutral trade already. Adam in Hartford, Connecticut's on your wavelength, Nick. Market is trading at all-time highs. Not buying this rally into the weekend. Feels like risk picks up. Running a neutral to slightly bearish 0-day iron condor. You synthetically put on that kind of trade.
Yeah, we're right here on the butterfly. So I'm in this. We'll call this a win, but I'm already in it.
And your butterfly is sitting right there. It's oscillating around 20-cent profit, 20-cent loss with the market moving, one way or the other.
Yeah.
Hasn't really expanded or contracted anything right now. So Adam, if you want to do this trade, you certainly can. E-mini S&P's expected move was closer to 28 when we put it on. E-mini S&P's expected move is right there, 27.5. Hasn't moved too much in the half an hour that we've been open in the market. E-mini S&P's up 64. Next one, please. AMD. AMD at new highs here. Elevated IV and price up makes it hard to ignore. Selling premium with a $20 wide iron condor doesn't give you, and know it from Savannah, Georgia, doesn't give you any strikes here, but they do go with $20 wide in AMD. Just conceptually, $20 wide in AMD. Enough on this $276 stock?
Yeah, I think so. I have some short delta here into this move. I'm short a strangle. I put on a put diagonal spread as well. So I have some pretty decent short premium here, short delta as well. So I'm pretty locked and loaded. I think AMD, if you don't have a position on, it's certainly interesting here. IV rank of 58. Liquid markets. It's definitely something I would be considering if I didn't already have something on.
I agree. Okay, fair enough. Next one, please. K-Web, China looks better, both on macro and momentum. I'm curiously long and using a jade lizard to stay positioned. Sean in Hong Kong, what do you think? Look at this, somebody in Hong Kong buying China. Didn't think I'd see that in my lifetime.
All right, so what are they thinking here? They're doing
K-Web.
Jade lizard.
Bullish.
Okay.
K-Web up around 42 cents, IB rank of 55. It has rallied off its lows of sub 30. It's a little over 30 and a half right now. It has an expected move here. If you're looking at May of about $2, if you go to June, you're looking at about $3. First, where do you go? May or June? They don't have anything here. So I'm going to ask you, what do you do?
I'm going to do...
And markets in here aren't that great for a $30 stock, but it's still
they're not bad.
Yeah.
Let's see where I get filled in. All right, I did a cover call right at the money.
Okay.
Bought stock, sold the 31 call in May. And maybe I do something in BABA, even though we missed yesterday. Julia brought that out to us.
She did. BABA up $3 and change, 2.5% move.
And then in BABA, I'm going to do a little crab trade, a cheapie.
Oh, okay.
Which is our calendarized ratio.
Oh, interesting.
So I'm going to buy, if I can ever get filled here.
Okay.
There we go. I'm going to buy the June 150, sell 2 of the May 160s.
I don't hate it.
That's the play. So I'm long China now. Brutal.
You're just supporting our viewers, right?
It tells you all you have to know about this market. We've gone so far, so fast.
Yeah.
That now I'm looking at, YOLO plays in the China names.
Yeah, if that's not capitulation, I don't know what is.
Yes.
Let's see our next slide, please. Slide 7. Raj in Bangalore.
There you go.
In my view, Citi. I am short Citi too. So let's take a look at this before we do. I am short Citi and suffering, up $2.50. I'm out about $1.20 on my trade. Overbought in my view. So I'm taking a shot with the 125 May butterfly. Let's have some fun. So he's kind of putting his toe in the water here with a butterfly. Butterfly, one of the slower moving, less volatile positions you could put on. I'm in June with 62 days to go. I don't know what you want to do in Citi.
I'll do a broker wing butterfly. 125 or 135, 140, and then I'll buy the wing at 150. I did a small debit. I will participate with you.
Yeah, this debit is 36 cents. So you know
nothing. It's just to put the position on.
Right. If you put this on with a 1 cent credit, maybe $37 per contract less in risk, you'd have an 85, 90% pop in here.
Yeah.
Your pop might show you something like 25 or 30% right now, but that's because you can lose $30 or $35, whatever you put this on for.
Yeah.
Even the S&P is up 68, making me look like a liar. What's
unbelievable?
Next? Marvell. Oof. What do you do here?
Up $2 here. It's at 135. Wow.
Mm-hmm.
Okay. Haven't looked at this one much for half a year, and it's at new all-time highs. Yep, that is the craziness. Sitting neutral and putting on a May-July calendar near the 130 strike. Well, it's at 135 now. Oh, so you're doing it on the put side.
Yes. What do you think about that?
Okay, so you're doing the 130. Oof.
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 What about maybe the 125? It's just an expensive.
Yeah, it's expensive, is right. Talk to me, Goose.
I'm looking, dude.
Just teasing.
I mean, I got a lot I'm doing. Oof. Oof.
It's a tough one, right?
It's a tough one. I mean, I think maybe we do the 130 and then I can sell the 120 against it.
Okay.
Like a put diagonal spread.
Yeah.
In solidarity.
Okay.
There we go. 130, 120, put ratio spread. Put diagonal spread.
Very nice. Even the S&P is up 72, NASDAQ up 260. Leader in the clubhouse is a Russell, up about 0.75 percentage point more than the E-mini S&Ps and the NASDAQ, and the Dow up 1.75%. 800.
Unbelievable. Amazing.
Remarkable. Next one. Please. Diamond SPY. Dow still looks cheaper than the other indices, and they would be correct. I'm talking about Caleb. How do you say it?
Caleb.
Aaron in Reno, Nevada, says Dow, and he's correct. Dow still looks cheaper than the other indices, and it has been underperforming relative to everything else. Now, this morning, it's up, like I just said, 0.75% more than everything else. So you were right on this. Hope you did it yesterday. I want to run a diamond versus spot trade. Futures are just fine. What's the ratio?
Okay, I already have. Well, I don't know the ratio off my hand or offhand.
Yeah.
But I did just put on a long DIA diagonal spread. I'm neutral in my SPY position. I am long June calls against extra short calls in May. So I'm kind of neutral right here. I would like if we just chill out for a second. But I put on this like kind of long delta. I have this pretty much with my position here of a long delta diagonal spread in diamonds, short some delta or neutral delta here with SPY.
Very good. Next one, please.
And I have that call spread in the E-mini futures that we put on with Craig 1 week ago. That was 500 points out of the money. That's now 200 points in the money.
We're going to talk to him on Tuesday. We'll take it out of his hide.
Yeah, he's going to have to give me some cash on that one.
OKLO, bullish. Andrew in Puerto Rico selling a 50-90 strangle in May. Call skew gives way more room to the upside, even though it's delta neutral, and he's 100% correct on that. So good look at you.
I got long some CCJ. What is that stock doing? That's actually down today. Unfreaking believable. It's got to be the only stock down today. I have some long delta in CCJ. ACLO reminds me and is giving me vibes of BE, which I am now choking on. And so I'm going to pass on ACLO and the memey, companies like this in favor of the short delta that I'm still holding in BE, which thankfully is down $2 today. I need it down 25.
Okay, that's fair.
So I'm going to pass on this one.
All right. Pass. You may. Pass.
But I like it.
Let's see what we've got going on here. I don't
think we're right on that. We already had the SPX trade. We kind of have AMD already on. We passed on Lyft. We passed on ACLO. 8 out of 10. Decent day.
Yeah, 8 out of 10, decent day. I agree with you 100%.
Yeah.
Not a bad performance there.
Yes. Thank you.
Oil flirting with 80. 80.42 was the low. It's now 81.23. Even the S&Ps made a new high. They're sitting right there right now, putting egg on my face. NASDAQ up 275, Russell up 48, and the Dow up 842. That's that 0.75 percentage point I was talking about for that viewer just a moment ago. So good on you for realizing that relationship. Volatility in by 40 cents, off of its lows by about 30 cents. A little peculiar there. Bonds are up 31. They've had a big range. They were 113.16. They're about 6 handles off of their highs at 114.23. Bitcoin 77,900. Traded over 7,800. Bitcoin catching itself a bid. You think oil at 80, if we get below 80 today, which would be a huge move. I mean, we're already down 11% in oil. I don't think I see that either, but
yeah.
Do you think that that's where everybody starts saying, oh, shoot?
If we get below 80, you think it's bearish or what?
No, I think you get a lot of overhead hang. I mean, I don't think anybody bought, if you bought 70 in oil, you're great timing.
Yeah.
If you bought 90 in oil, you're hanging in there while it moved. I mean, it was just 90 this morning.
Yeah.
I mean, if you bought 100 in oil, hopefully you did something against it, selling calls or doing something to scalp around it. You traded it and stuff. Maybe your cost basis is 90. I'm saying you get a $10 move. It's a $10,000 move in oil futures. It starts to sting.
Oh, for sure. For sure. So you're saying, well, if you're long it, but if you've been short oil, you're going to be buying this back. I mean, you're not on that side.
I think you probably bought it back a little bit already or neutralized, like you've neutralized.
And I think most people were long oil.
I think most people were, speculators from a retail point of view were not getting short oil.
No, for sure.
They were getting long oil.
For sure.
Like this oil move lower, I think, for retail who doesn't trade options, it just listens to the news and like that. Like people like Chris is probably not a good move for him. All right, let's take a quick 90-second break. We'll come back. We've got a market measure after this. Oh, we'll be back in 90 seconds. Just another 1% move in the market. Just step higher.
Unbelievable.
We'll be back in 90 seconds with Tasty Live.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out Cboe's Retail Trader Suite at www.cboe.com/minis.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P's up 74. Don't worry about it. I'll let you know if anything happens.
Unbelievable.
You've said that about 50 times today.
I know. I'm doing ratio spreads on the upside in Bitcoin and Ethereum. And I know the reason I'm not selling the naked calls is because I know if we have a face ripper of 10K, I'm going to be pissed. So I'm doing the ratio.
Okay. All
I'm
right.
selling upside, down there.
I got it.
I did them for basically it's nothing. Small debit on Bitcoin, small credit on ETH. I do have those leaps in Bitcoin that we did, which is another interesting one. Those have gone 5 to 7.
Unbelievable, right?
Unbelievable. All right, let's do it.
I'm ready.
All right, so trading 0 GT with 1 DT, part 1. So there's a lot of zeros, a lot of ones in that. I hope you can follow along here. So 0 DT options have attracted a growing base of active traders, but it doesn't always have to be 0 DT. The options exist and are tradable well before they become 0 DT. So you basically have everyday expirations available pretty far out. At least 30 days, I think, is the minimum-ish.
I believe so.
Something along those lines.
Yeah.
So we get the question really of selling premium the day before expiration. Is that something that you would do, or if you want to avoid PDT, which will, kind of go away soon, hopefully.
Now I'm getting questions still about that. When does it go away?
We will have more info soon.
Yeah, we'll have more info, but what they're waiting for is no brokerage firm has any control to make this happen any faster. But FINRA has to put out a letter saying that that's what they're going to do. And then 45 days after that letter, I've been told that it will then be turned off and go away, and you'll be able to do whatever you want in those type of accounts with about a $2,000 minimum or something like that.
Yes. And as soon as it does go away, we will be number one.
That's what Tasty Trade promises me, and I put them on the chopping block. I'll quit.
Yes.
If they don't get done the first week or so of this whole thing.
Yes. So selling premium the day before means carrying overnight risk, but it also means collecting additional time value. There is a value to the overnight session and the risk that is associated with moves in the overnight session. So you're going to get paid for that. There is extra premium when you look one day out versus in the morning, the day of expiration. So last week, we explored using the expected move to scale our strike selection with volatility and time. Today, we're going to use the same framework, but selling 1 DT positions just before the end of the day rather than a true 0 DT at the open. And so what we're basically going to look at is last week's trades, had we put them on right before the close, incorporating the overnight risk, and we're going to look and see if that was a benefit here. Answering the question here, does the extra overnight premium justify the risk of holding through the night? Let's look at how 1DT entries into the short put verticals perform compared to their same day counterparts. It's going to be interesting to see this data. What are your thoughts?
Oof. Wow. I'm going to say it shows positive results. I don't know if it justifies the risk. I'm going to say it doesn't.
For sure. I think, the greatest thing about 0DT is that you don't have the overnight risk.
Yeah.
The overnight risk, especially in the time frame that we've had 0DT, which is only a couple of years, it seems like overnight has been where the most volatility is.
That's correct.
And so I think, this will be, to your point, I think it'll be better, quote unquote, but not enough to justify, that sort of risk.
Yes, totally agree.
So, let's see.
And just to give a little bit of note, since we're talking about 0 day and SPX, and you only put on one SPX trade, it's actually a small loser, maybe 50 cents or so. Yet it's at one of your optimal prices for the end of the day. Like SPX is around 71.11, 71.15. That's your short strike. Like right now, it's a small loser. If it was the end of the day, it'd be a full winner.
Yes. You got to hold it.
Delta this is a ratio spread we talked about earlier. I'm just trying to tie in everything that we talked about on some of the questions we have. This is a ratio spread. We talk about it being omnidirectional. Right now, you're a loser. That's an absolute. But if it was expiration, which is today, and we stay right here, you got a full winner.
So
omnidirectional, as you said.
Yes. So the study that we're looking at is 3 years of data. That's what our data set is for 0DT. We're going to look at the results for selling 1DT put spreads Monday through Thursday because Friday you have the weekend risk, so that's even more than just a normal day in terms of the overnight risk. 15 minutes before the close, placing the short strikes at the expected move and the long strikes with either $10, $20, or $30 wide wings, so on those short options. Also examine the Friday to Monday trades starting with 3DT, but that analysis will be separated, so we'll do that separate here. Experimenting with closing winners at either 25 or 50% of the max profit while leaving losers and small winners on through the close. We're going to look at the total number of winning trades, the total profit or losses, and the frequency which the overnight trades profited sufficiently to be closed within 10 minutes of the open. Essentially, we'd look at how many times you sell the put spread and you have a up move in the market that is enough to just close the trade out. As soon as basically the market opens, you basically get paid on the overnight risk all in itself. So all these trades are assumed to be executed at mid price, which is, generally speaking, a pretty reasonable assumption. Sometimes you go, 5 cents below, above. We're going right at the mid price because that's what we got.
Yep.
And so the first one, $10 wide wings, your win percentage, very, very high. Your average P&L, though, what you're going to see with the 1 day versus the 0DT is negative. And that's probably because you have the tail, like when you think about the big moves to the downside and you're on one side of the market and just the velocity of moves typically being bigger to the downside, you're waking up on some of these trades and your put spread is probably fully in the money.
Yeah.
And whereas with the 0DT, the opening 0DT trade, you're putting that new trade on at a much lower price. And so you're getting a lot of bigger losses that you have no opportunity to do anything with.
Yep.
And so here you can see, the caveat there is that you also have trades where the market is up pretty significantly. And that trade, you wake up, it's basically, zeroed or at 25 or 50% of the max profit. You see almost 40%, 46 and 35% of those. You wake up and you're closing the trade in the first 10 minutes.
Right, which is, it's a beautiful thing. You're allowed to do that. I mean, put risk on.
So the next slide here with 20 delta or $20 wide wings, you can see again, this just, all these are going to be very similar. It's just going to be an order of magnitude. They're basically going to double. Because this overnight risk, you have these big downside moves where your spread is fully in the money, and these spreads themselves have a lot more risk than they do potential reward. Your P&L actually skews negative if you're doing this. The caveat being that a lot of the times you're going to wake up and instantly get filled on a 25 or 50% profit target, which is also a good thing, right? It's hard to say that one is better than the other. I think generally speaking, just doing the 0DT as 0DT is better. And the reason we're looking at these is because of a PDT kind of issue, I think which is hopefully going to go away and make this even more, much, much easier for people to just do 0DT. But the point here is that, they're still okay doing it one day to go. You just have the tail risk of the overnight session, which is, significant.
Yeah.
Which is why these are negative.
That's correct. That's correct.
And again, as we get into $30 wide wings, the story kind of continues here. And I think we've talked about this before. $20 is probably the spot to be, maybe even $15, just because as you get wider, the relative premium doesn't increase in the same fashion. So when you go from $10 wide to $20 wide, it basically doubles the premium. When you go from 20 to 30, you're only getting like 25% more premium because you're getting further on the tail, but you're adding, a lot more risk. And so here you'll see your losses continue to increase in that, basically 1x in an average trade perspective. Same thing on the P&L, but the P&L doesn't change all that much for the 0DT when you get from $20 to $30 wide.
Very good.
Couple takeaways
Does
here.
that slide surprise you at all anywhere there, by the way?
No, I mean, I think the overnight risk is priced to perfection. That's what you see here.
Yeah. So if it is priced to perfection, why take the outlier risk?
Exactly. I mean, I think the story here is the overnight risk is priced to perfection. The 0DT risk day of is inflated. Like volatility is really high in the day that we are looking at.
Correct. Good job.
And the overnight volatility is not priced high. It's priced exactly where it should be.
Very good.
And so now we're looking at the Friday into Monday 0DT trades, and these have actually been good. I think this is helped by some of the dynamics that we've seen of like volatility expanding into the weekend, and then on Monday you get these face rippers to the upside. That's been kind of the MO here. But again, your average P&L very, very good across the board here. You have a significant amount of trades that you wake up and you close the trade and you're out of it, which is pretty wild to see here. But all of them were profitable selling the put spread on Friday into Monday, which is somewhat surprising. It means that a couple days of time is overpriced in terms of volatility. One day of time is too random, for volatility to be priced. It's priced for perfection.
I like it. You're right.
So, selling slightly longer dated option or selling slightly longer dated options is a natural next step for what we're looking at here. So 1 day and 3 day options, we can do weekly options from here, 2-week options. There's so many variations we can get into here. Overall, though, the extra credit from selling the night before was not enough to compensate for the overnight exposure. It was not pricing in the overnight exposure from a risk perspective. Positions that moved against us had no opportunity for adjustment while the market was closed. I think that goes to what we were kind of talking about of, seeing these bigger downside moves in the overnight session, already having the trade on, you had no opportunity to do anything with that trade. And because the risk is so much greater than the reward, it's going to skew towards a negative P&L. Many positions did hit their profit targets overnight. This is the other caveat is it's a good thing that a lot of these trades, almost 50% of them, you closed in the first 10 minutes. It just skews to small profits and really, really big losses because of that overnight risk. Weekend put spreads were the exception, rewarding the overnight seller, aiding in part by the market that has tended to open Mondays with a tailwind over the past few years. Mondays have been bullish relative to pretty much every other day, which has helped with these trades. And again, this is confirmation bias to some extent because we only have 3 years of data. And so the 3 years of data has skewed bullish and has been bullish on Mondays, and that's kind of the takeaway here. So trading 0DTE offers you a lot of flexibility with your trades, entry, management, all that good stuff. It's definitely something that we do, maybe not enough of, but we got a million things going on, so not a shock.
Let's take a quick 90-second break. We'll come back. We're going to bring in some people from Tasty Trade immediately following these messages. But first, before we do, let's take a look at what's going on in this market. E-mini S&P, same as it ever was, son. Same as it ever was.
Crazy.
Up another 77 handles. Can't fight the Fed. Can't fight the market. That's for sure. 77.5 handles higher. That's a little over 1% move. NASDAQ up 250. Russell up 60. Dow flirting with up 1,940. Volatility in by 30 cents, still keeping its wings up here, surprising me with the strength of this market. Bonds, and got me too a little bit. Bonds up 30, 114.21. Bitcoin 78.1, flirting with its highs. Nothing here says market should sell off right now. Oil in by $10, also confirming any type of market move higher. Gold up 85, silver up $4.
I just closed out the rest of the USO calls. I mean, they have moved so incredibly that I think you got to just scalp them.
I mean, you're basically short naked calls. It's moved $12 today alone. I mean, anytime you get a 10% move in something, usually takes months. You did it in a day.
Yeah.
I think you're going to pat yourself on the back and be done with it.
Unbelievable move across. I'm speechless.
And you're supposed to be. I am too. All I know is, every time you think you know everything about the market shows you that you don't know anything.
Yeah, for sure.
Yep. Good job out of you. Good job out of me. We're going to see if they can do a good job of Tasty Trade. We'll be back in 90 seconds of Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Niggy, we are back, son. And you know what that means? Time for a little bit more, a little bit more market talk first. Let's take a look at this. Even the S&Ps up 85. They just made new highs, 71.63 where they are right now. NASDAQ up 306, just a skosh off of its highs. To quote my friend Tim Knight, who's probably in a bunker somewhere, looking at any of the market action right now. Russell up 64. Rustling, my friend. Dow up 1,004, trading at its highs. Volatility in by 35 cents, not near its lows, but hanging in there for the weekend. And bonds are 114.22. Bitcoin 78,000. Buy assets, buy everything, but don't buy oil. Down 10. You buy stuff that's been knocked the snot out of it, and you don't chase the high flying news stuff. Go ahead.
Nothing. No, I have nothing to say. I'm in utter shock.
12% move to the downside. 80.68, just a skosh off of its lows. Gold up 88. Silver up $4 and change. That's a 5% move in silver. Woo! All this means nothing when you've got this, man, although it does mean a lot. My man Q, what's up?
Fellas, how's it going?
It's doing great. That's enough out of you. You probably got a lot of work to do on the trade desk.
How are things going on the trade desk right now?
Yeah, it's a pretty interesting day today, especially, I mean, with the market up 80 after like how many green bars have we seen on the ES in a row? It's like, you know, when is there ever going to be a down? I'm pretty sure red candles are outlawed, you know.
I think so. I think that's a good yes. That is
Isn't it amazing? Because just about two and a half weeks ago, probably at the beginning of this month, April Fool's Day, we were probably having the same conversation, but the opposite way. Like every bid was met with a seller. We stepped lower. We did have a couple of days where we rallied and was met by selling, which we would say, man, the selling is fierce. You have relentless buying right now. You don't have anybody stepping in, selling. As you can see by no two-sided action, we had one downtick this morning after I sold even the S&Ps of about 10, 12, maybe 15 handles if you caught the low, and we've had nothing but rallies since then.
Yeah, it's been strong green bars, not a lot of big wicks either. You know, it opens at the low and then closes at the high, pretty much. That's what we've been seeing.
Yeah.
And it's been a weird rally after such a strong
it certainly has been
previously.
Just incredible.
All
my friend just wrote me, they are not letting this go. No, they are not letting it go.
That is, yeah. All right, well, I've got a busy day on the trade desk here.
Sure.
So let's get to the top 20 symbols going through the system and their IVRs. At number 1, Netflix with a 33 after their earnings move. Tesla, 14. NVIDIA, 10. Microsoft, 96. Micron, 71. GLD, 41. SLV, 43. Apple, 40. MSTR 52, USO 40, Meta 50, Robinhood 58, iBit 33, Palantir 38, Amazon 52, Oracle 47, AMD 54, SoFi 50, HIMS 76, and Intel 93. And then just before I go here, Tony, I do want to let you know I am wearing shorts today because it is hot outside.
Stand up and prove it. I'm kidding.
Yeah, I wasn't going to. No worries.
No, you wear shorts. You deserve it. It's a crazy day. I want you to be comfortable.
I watched you walk away the other day. You wear shorts. They're really cute. I'm not gonna lie.
All right.
Good job out of you. Good job out of you, Q. I'm gonna let you go.
Please don't tell HR about that. Please, we're gonna purge this segment. Just I want to keep him around. He's old school. Like he doesn't know
It's all right. I took it the way you meant it.
Yes. Good. Okay. Good.
We're gonna let you go right now, Q, and go in style. You will with those beautiful legs. Who's our next big?
Oh my God.
My man Glenn. How are you, brother?
Pretty good. Who let this happen? Happy Friday.
I know. What are you doing in the office? You get overtime for this or something?
Yeah. No, it's 2 times. So
yeah,
it's worth it.
Perfect.
Glenn, it's so good to see you. Thank you for coming on the show, helping out my man Q there and everything else like that. With markets making new highs and at all-time highs and in territory that we haven't been to in quite some time, you still have FX, Euro, Pound continuing the rally and pounding the dollar, correct?
Absolutely. So the correlation you have in your mind.
Surprising, or is that how the customers have been leaning? I guess is the way I've been is what I'm trying to get to, because I know you can see that. I was just wondering. I know you don't maybe have it at your ready, but you can.
Yeah. No, you're absolutely right, and there is a little disconnect this morning that's been interesting to me. Of course, on the face of it, historic correlation, equities up, dollar down. That's playing through for sure, and a big pop right on that news of the Strait is fully open. But we are seeing it map, if you tighten up the time frame to just look at what's happened since the past 2 hours, you're not seeing the same continuation really in these the euro dollar market, Australian dollar, pound dollar. A ton of them you're seeing map more like bonds this morning that have kind of stabilized, popped on that news pre-market, but not pushing new highs by any means. So that's surprising for the currencies that have been tracking equities more, like that Australian dollar, New Zealand dollar. Not seeing continuation there is a little interesting to me. But where we are seeing continuation in the currency market is this dollar yen, your favorite, Tony, and where we're at.
It's up on the day. I'm a scratch on this stupid put spread that I've been holding. I hate this thing. I hate this product. I hate this thing.
Yeah, you hate that product because
I could have told you this was going to happen.
You hate that product, but you don't hate TastyFX products.
I love TastyFX.
Japanese yen in the spot market up a whole % on the day. And that, when you look at the past month of price action, is really interesting because it's not as free-flowing green like we're seeing in a lot of other markets over the past week. Right now, we're dipping below 158 in the spot market of US dollar Japanese yen. So a move lower is the Japanese yen benefiting. But we've flirted with this level 2 times before throughout March and April. And so we're at a really critical level where if we keep pushing, it's moving as I'm talking, we're nearing 157.5. That's where you start to see we haven't had any stability there since the strong uptrend on the way up to start March. So if we clear some of these congestion zones, the yen's been hurting itself. The dollar's been in the way. If the dollar's really out of the way and Japan can do anything to spur optimism for their economy on the heels of this news, we could see some continuation there. If we stall out here, then that could be a signal that regardless of this news, the yen really has no strong footing of its own, and we could see some continued chop. So that's where we're looking today. If you ask me about client sentiment, we've got on the IG side, markets, global markets, we've got customers net long US dollar still. So perhaps feeling the pressure a little bit today. But the outlier there is the Japanese yen. 66% of IG group clients short dollar yen. So more happy customers than not. But the nuance you don't see is you could have many more Nick Batistas out there that have just been riding through the pain. So slightly less pain, not as much. Not the
U.S. dollar pain. It is really See, I've said it before. These things move, and I miss them because it's not. Like I don't have it in the same pain. I trade it like I trade my options, where you like kind of have duration. You can chill a little bit. There's too much. I don't think I'm smart enough to know all the ins and outs of the meetings, the changes in rates, this one correlated to that one.
No, I think you're not giving yourself enough credit. When you were in the 11 a.m. slot, when you had less to do,
you were
slinging.
The Ocho channel.
Yeah,
yeah. Now that you're king of the castle here, and have to deal with all of these giant screens, it would be overwhelming to keep track of every asset class. But remember, you used to be on a little bit of a run.
I used to be somebody.
Yeah, until things change. But how does it feel to be king of the castle while the king is still here?
What do you mean? Who? Oh, you're the king? I don't know about that. I don't know about that. I mean, you used to say, as long as I'm alive, you'll always be second best.
I did say that.
So
I think that's good parenting.
Yeah, so that's fair. That's fair.
Obviously, Glenn, you heard the same thing growing up too, right?
Yeah. No,
you didn't.
No, I didn't.
No, he didn't.
No, I didn't.
No, he didn't. No, he didn't. But in that light, it's good to have, not your enemy. You're not my enemy, of course, but it's good to be underestimated. So, you believe that, Dad. I'm not sure.
It was called
it's so
encouragement,
true.
son. It was called encouragement. I did the best I could. You see, what I wanted to point out here is I have two young men who were obviously raised properly. You've excelled. You've become assets to society. You're bright. You're articulate. You're handsome young men. You did everything right. Glenn, your parents did it in one direction. Nick, your parents did it in another direction, but we all got to the same place. We got to where we are today, which is a beautiful thing, which just means it doesn't matter how you do it. You just have to do it.
That's one takeaway.
Well said.
The other is, nurture versus nature. Maybe you're just saying nature prevails.
Maybe I'm saying nature prevails.
A slightly scarier takeaway.
Say again?
That's maybe a scarier takeaway, but
why you don't think? I mean, you think if I put you in Nick's situation, you'd be able to excel the same way? Excel? No freaking way! I would break you.
Oh, you see, there he is. There's my dad.
There's no softy like you.
Do I get my own basket of French fries? If I do, we'd have no problem.
After I lick them.
Okay, that's adversity I've never faced. You're right. You got me.
But I've said it before. This was a different world. You can't, and by different world, I mean it was a different Tony Batista. It was a parallel universe. It's a different. He's nice now, But there was a time.
Suits.
Yeah.
I don't know what it is, but it's certainly. I'm not so nice right now, to be quite honest with you. Even the S&P is making new highs.
Unbelievable. I mean, things are moving so fast. I can't even. I can't. It's hard to keep up.
I put a 1 standard deviation iron condor on in SPY with 30 some odd days to go when I put it on, and in 5 or 6 days, my short strike is breached, and my long, and it was $10 wide, and my long strike is $3 away. Now, thankfully it's a $2 or $3 loser at this point, because it's a defined risk trade, and I rolled up the untested side. But this has been a move of biblical proportion. I mean, it has 3 short deltas to it. I came in with 10 short deltas. I'm down $100 today on a $9 move. You can't, with 28 days to go, you can't argue with the results. They stink, but they don't stink that bad. But man, that just shows you the magnitude of the move here in this overall market. It has just been.
And they got volatility. Like, volatility is staying bid today, surprisingly.
Yeah, definitely staying bid. I mean, the weekend's not a surprise to anyone. Everybody knows the weekend's coming, and you usually have a risk off type of view where you'll be looking to buy back things. But man, Nikki, look, I mean, every stock here, all you have to do is click on them. I mean, Tesla's up 3.5%. These are not
jarring.
These are not 50-cent moves. Boeing, which couldn't catch itself a bid, is up 4.5%. Meta, which has been rallying, has continued by another, 1.5%, $9 on here.
Microsoft, ridiculous.
Microsoft couldn't catch itself a bid, up, another 2% today. There's very few. I mean, this is completely broad-based. Netflix for earnings is the only one that really kind of crapped it. And then you've got a lot of the oil-related stocks, SOM. I don't know what's Sandisk's problem. You better get back to 9:30 and get there in a hurry. I mean, that's all I can say about that. All right, Nikki, I don't have too much left to go, man.
Yeah.
My tank is empty. Glenn, thank you so much for coming in. It's always a pleasure to see you. I know I tease you, but I love you, man. If I didn't love you, I wouldn't tease you. All you got to do is look at Josh, and you'll know that's how I feel. Son, good job out of you.
Good job out of you.
Viewers, thank you so much for watching us and supporting us at Tasty Trade. Please hope you move your accounts. I know you got multiple brokerage firms. I know you do. Send us some more money. We're the #1 brokerage firm in the galaxy. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Liz and Jenny next. Peace.
Peace.
I'm crying.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter. Call me one of a kind. I'm a true believer. I got a good feeling. 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 Yeah, I'm up with that sun.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews, and it's a sunny day in Chicago, and it's a sunny day in the markets.
Oh my goodness, market can't stop, won't stop, and beautiful weather for your kids' prom. Well, just Annabelle's prom. JD's not there.
Yeah, JD's just one kid in prom this year. But yeah, we've got prom today, beautiful weather for it. We're very, very, very excited. So all good things.
Okay, prom totally snuck up on me because in the past we would have viewers send in their old prom pictures. And Laura's listening. She's producing right now. And last year, John McGloin, our producer, super producer, posted his prom picture. Do you remember?
Oh, yeah. With the curls, I do remember. Laura, we're going to need one of you.
So if you're watching, we'll be taking tweets live. Just put the hashtag LIZJNY on the tweet. And if you have an old prom picture, post it. Prom season has begun.
Okay, hold on for 1 second. If we can go into what I'm looking at real quick. I know this is not the front of Laura, but this is the one we expect to see a prom picture of. So can we pop in? There she is.
Laura, bust out your old prom picture.
Yeah, you're right. You're right. That was fun. Let's pop directly into the markets, Jenny, because we have got to see what the heck is happening down here. SPOOs are up 9-0. So we are in remember we won at 7,000 in SPX? We're at 7,100 already in SPOs. Let's see where SPX is.
Okay, and you want to hear something crazy?
Yeah.
So you know how like every Monday I'm doing my 20 Delta SPX Iron Condor 45 days out. Every Monday I'm putting it on, and then Monday putting it on, and then Monday putting it on. My 20 Delta SPX short call that I sold on Monday, like the call spread was it's through it. It's so on Monday I sold the 45-day 20 Delta call in SPX, and we are through it.
So hold on, we're in SPX. 45 days would probably bring you to what, like the 42-day now, Monday?
I mean, right around there. But at the time I sold it, here I'll give you the exact price, and the exact strike. I'm pulling it up right here. But I can't believe it. On Monday, I sold an Iron Condor in SPX 20 Delta short strikes. And my short call, it's the 35-day now.
It's the 35-day, and
my short call is the 7,100.
Oh my God.
That was Monday. That was Monday's 20 Delta call. And so Monday, this had 40 days. So I guess it wasn't quite 45 days. It had 40 days.
Yeah, but I mean, when you get out there, there's not the dailies.
Yeah. So that short call, and at the time I sold it, well, let's just say that call, it's a 13, that call in and of itself is a $13,000 loser.
Well, right. I know.
I mean, I've got a spread, but still, like the fact that call was the 20 Delta call on Monday, and today we're through it.
That's insane.
I know.
That is bonkers.
Yeah.
Now, so just kind of springboarding, because we've been talking about this, my 7-day Jade Lizards, they've come off every single day. Every single day. Yeah. Like on, off, on, off, on, off. So I put one on again today. Now, yesterday's that I put on came off this morning, but it was through it. So I took less of 25%. I probably took only like $50 or $60 off it, but I closed it instead of like letting it run.
Yeah, right. Why not? Keep taking your profits. So this morning, I didn't know what the market was going to do, and we were up so much. When I sold my put spread, I took it off for only 20%. Usually, I did yours, pulled it up, and collected more to have less risk, and took only 20% out of it because I thought, how high are we going to keep going?
It's pretty interesting. So this is the put spread that we do at 9 o'clock. I mean, it would have been different at 9 o'clock because the prices were different.
You know what? I think it was like 380. I mean, whatever. Like, different strikes. But it was still. I think I got around 380, 390.
Check your texts. I don't know how to pull this up.
Can I post this? Can I post this on Twitter?
Yes. Ask if you can post it and then put it on Twitter, Jenny. I need help with this one. Laura, you are hands down the best ever.
Okay, here's what I love. She made her own dress.
Oh,
took hours and hours and hours. She made her own dress. That's amazing.
Okay, Laura, have you ever seen the movie Pretty in Pink? And you don't have to answer because you don't have to get on here. But remember when she makes her own dress in Pretty in Pink?
Oh my gosh, and Laura, you look beautiful, and the dress is beautiful. I'm going to post this on Twitter.
Oh, yes, I love it. You are the best.
That's awesome. Love that she found her prom photo. And honestly, she's from Louisville, and it looks much nicer down there during prom season than it would here.
Oh, it's very, very warm down there.
Yeah, and it's beautiful.
It's been warm.
Flowers in the background.
It's been warm down there for a long time. My son has been in shorts for an entire month. Louisville's next to us, by the way.
Okay, all right.
So did you post it? All right, let's put this to bed though. So what we do is we open it up around 9 o'clock, and I've been selling the at the monies, meaning the just at the monies, for wrapped around $4. So this morning I got about $3.80 for it and took it off for 25%. So that's what we've been doing. And honestly, this is luck than smarts, but I was in and out in like 6 minutes with 25% of these.
Oh yeah. I mean, it was, I think this morning on the open where we were up 50, and how much were we up at 9?
At 9, I think we were up 78. We were up a lot when I sold it, and I was like, oh well, I'm going to do it every day. So now all I have on is the Jade Lizard in the 7-day. So I have on, let me get my exact strike so we can take a look at this. Now the only thing that I do have on, let me alphabetize, and then we'll jump into some things. And this is what I put on. Oh, this is up $60 already today. So I have the
Jade Lizard in the 7-day.
Yeah, the Jade Lizard in the 7-day. Oh, because I don't think I got. That's not $20 wide. It's only $15.
That's fine. Those Jade Lizards have been nice. Riding the wave.
Yeah, they have been nice.
So I threw in with the market, with it through the 20 Delta call from Monday, I actually threw on another like 45-day Iron Condor today because I figured, why not? Why wait till Monday?
I agree.
And after this week's SPX study, after the SPX study on, we didn't see good results selling like tomorrow's put spread at the end of today, but we did see good results selling Monday's SPX put spread on Friday. Are you going to put that on at the end of the day today?
No, because I like what I've been doing, and I'm going to stick with what I know. Like I said, I think the 0 DTEs or those are choose your own adventure trades. I don't need to layer on top. I've got the Jade Lizards on. I'm doing my put spreads. I do my downside ratio spreads, and I'm happy as a clam.
And my SPX position is starting to be like do because as I'm doing the every Monday 45-day Iron Condor, then you got the morning put spreads. If at the end of the day today I put on Monday's put spread, it's just getting to be like a whole page.
Well, that's good. You want to be at some point we want to be just SPX traders.
Yeah, one of these days.
At some point. Okay, Jenny, do you want to do our trade of the day today?
Yeah, absolutely. Okay, today we are going to put on a reverse jade lizard. You have seen us do many jade lizards, and jade lizards are neutral to bullish strategies with downside risk, no upside risk. Today we're going to flip it over and put on a reverse jade lizard where we have upside risk but no downside risk. I've been looking for these with this crazy rally in the market, trades that can benefit if the market stays right here, goes up a little bit, or if the market drops back down, we're not going to lose anything on it.
Right, and usually these are the reverse are usually hard to find because the jade lizard really helps with call skew, right? So and normal markets have the put skew, meaning you're gonna normal markets, it's more expensive as you go down. So it's very hard to put, everybody wants no risk to the downside, but it's trickier to find the reverse than it is the neutral to bullish.
Right, absolutely. Like a regular jade lizard takes advantage of normal skew where you've got call spreads trading a little more expensive and puts are trading expensive, and doesn't make sense to buy that extra put or you're paying too much for it.
Right.
In this scenario, I'm looking for these. We still probably have regular skew in SMH, but I'm just looking for these. I'm looking for products that are at the tippity top of their range, making new highs, trying to give myself enough room to the upside where if we continue to go up, hopefully won't breach my call spread. But if the market turns around and falls again, I'm not going to lose to the downside.
Right. All right, so I have this pulled up already. We're in SMH. I'm in the right product, right? I know you kind of looked at this today. So SMH, let's take a look at the chart. So to Jenny's point, this product is at the tippy top of its range. You're not, you're actually, with this, it's neutral to bearish, meaning I'm sure you're going to give yourself enough room because it's a jade lizard, not a big lizard, where SMH can even go up a little bit and you'll still be fine.
Right. So it's a jade lizard, but a reverse jade lizard. Instead of selling that naked put and the out of the money call spread, I look at it like a naked call and an out of the money put spread. A naked call in a $400 product is going to use a lot of buying power. So we're going to have to spread it off. We're going to have to spread it off, but we're still going to take a decent amount of risk. Think of, it's not a naked call, but we're going to do a wider spread.
So let's baby step into it. It's not a naked. You're going to have to. We're going to put it in naked, and then we'll show how we're defining our risk. Just it's for capital preservation.
Now we're at 463. This is all-time highs. This is the semiconductor index. If you open up the 28-day, and I'm going the 28-day because I don't want to have this for 63 days because in 63 days, who knows, we could blow through the top. And we could blow through in 28 days, but I'm betting that we're not. That's what this trade is doing. Betting that
all trade is doing. You're taking advantage of this IV rank of 53 IVR, meaning it's the implied volatility is higher than it usually is for itself. So, which you usually don't see. If you covered this up and you saw something at the top of its range, you would not assume that it would have a high implied volatility.
No, but it does. But it does. Okay, so let's just go the expected move and sell that 500 call.
Sell a 500 call. There's your naked call portion.
And I know we have to buy something because this is using $5,500. So try $25.
Can we do the jade lizard first, and then we'll go back and buy something?
Well, because I need to see what we're going to get for that call spread. Okay. And we know we have to buy something. So I'm just going to do $25 wide. So that $25 wide call spread is giving me $368. So if we want a $5 wide put spread, we know we just need $1.30, right? $1.32 on the put spread. So go to the expected move and try to sell a $5 wide put spread.
So I'm going to go 430, 425. We'll see if it works. It's right there. I'm just going to pull it down for a second. I'm okay with that little bit of risk. I would rather go here.
Yeah. So, honestly, no, you don't do here. I'm channeling Fauzia. Bring it up. Bring it way up.
Oh yeah. No, I love that. I thought, but the traditional is kind of keeping it.
The traditional is just doing $5 wide and doing a $5 wide and collecting just $5, and it stays in that range and we keep the $5. I wanted to see if we brought it way up, could we collect almost $6, where if we keep going up, fine. If we go down, we're getting enough overage that it doesn't matter. And maybe we stick with the traditional. Maybe we do bring it back down and just get the $5.
That doesn't make much sense. I would rather the range.
If we brought it way up and we're getting $7, great. But no, let's just do, I would consider this a reverse jade lizard. We have a $5 wide put spread and that wide call spread, kind of replicating that naked call, and we're getting almost with that put spread.
We're getting darn close. So you've got 491. Let's take a look at this on the curve view analysis.
So we essentially have no risk to the downside. We have a few dollars, like $9 in risk to the downside.
You and I both know that's a moot point. That's why it's got a little bit of a red spot there, but there really is no risk. There's $9 in risk.
And if we go down, if SMH goes down, this trade will make money.
Correct.
Before expiration.
And look at how much range you have to the top. It is defined risk, and I'm glad we did define our risk that way. That was because it's not necessarily a naked call. There is enough risk to the upside up there, but you're getting almost a quarter of your risk. So you're
right, yeah. If you scroll over to show like where we hit our max there, you could see our max loss is 2,000. But I know if we get into the middle of that 500, 525 call spread, if we get into the middle of that call spread is going to be trading for 1250, half the width of the call spread. And if we get to, 512.50, which what's the delta on the 512.50? I don't even know if that strikes there, but 510, 512, what's the delta on that?
There's no 512.50.
I mean, but okay, 18 delta. If we get up there, if we get up to the 510, 515, 15, 18 delta, that spread will be trading for 1250, and we could roll it out to June. That's kind of why I'm sticking with May.
I like this. Well, I do like it nearer term. It would be very challenging for me to put this trade in for 63 days. It's a decent return on capital too. Now, so when we put this on, what are you're risking $2,000 to make, I'm just going to say 5, it's easier. You're risking $2,000 to make $500. What price target would you put it in for?
So I will put in 50%, which would be sell this for $5, close it for $250. So make $250 out of it. But if SMH drops down and is going through that put spread, then I'll take it off, and maybe we'll take it off for $70, $100. That would be my guess if we start going down through that put spread.
Right. I agree.
I mean, with that $25 wide call spread, we'd still make a decent amount if it goes through that put spread and we still have time till expiration.
Yes. So this is going to give us a 9 delta. This is not the beta weighted delta. This is a 9 delta for SMH. It is also the theta per day here is 11. So you're taking advantage of that high implied volatility. You're making a directional assumption, but keep in mind, take a look at this. And then we'll put this to bed. But if I looked at this, I understand you put your risk in one direction or the other, but I consider this neutral.
I consider it neutral. We always say Jade Lizard's a neutral trade, right? But it's usually neutral to bullish. Here's a reverse Jade Lizard where it's neutral to bearish. I have no risk to the downside. My risk is to the upside. But with the market at all-time highs and SMH making all-time highs, the semiconductors have been on fire. I don't mind taking my risk to the upside. I'd rather choose risk to the upside than the downside. And if you go back to the chart and look at our break-even's 505. 505.
505.
505. Find it on the chart.
Oh, it's so funny. My brain, when I was saying 505, I kept thinking Jade Lizard. Like, where is it?
Yeah.
I was like, what is happening? 505 is not on the chart.
I mean, we don't even have 490 on the chart.
No.
So can it go there? Yes. Sure. Am I okay taking this risk? Yes. This is what I'm doing in my account, taking off some bullish trades, adding some neutral to bearish trades, I've actually reduced my delta in half in the last 2 days.
I've been taking some off too. I just want to put this into perspective. You take a look at the 505, that's where our break even is. It's a 20 delta. So let's just put this in perspective. There's a 40% chance that it gets up there at some point during the cycle.
Yeah.
That it touches it. Right.
Yeah.
Right.
All right.
I'm going to ship this. We'll ship that. We're filled immediately, even though there was a wide market. So we've got a bearish trade in there, and I'm going to go in right now and put a GTC in. Let me make sure that these are
yeah, there it is.
for 50%. And we'll keep an eye on it. Like you said, if it goes towards there, if it continues, we'll take it off.
Okay. All right. So that's a reverse Jade Lizard, and that's one of our first reverse Jade Lizards in a while.
They're hard to find. They are better. It's just very rare. Here's where they're hard to find, because what Jenny said, you're at the top of your range. And typically when you're at the top of the range, there is no implied volatility. This is at the top of its range, and SMH has a 53 IVR.
Yeah, typically, if we saw SMH at all-time highs, IVR would be 9, 8,
right?
Single digits. Now it's 53. So we're actually able to find these. It's interesting because I wonder if we come down a little bit, if the market pulls back a little bit. Usually, you would expect this vol to pop up, but it actually might come in. Like last night, Liz, at 2:45, I sold a strangle in MCL, and Oil's down $10 today. I took that strangle off today. So I sold a strangle in MCL yesterday at 245, and I took that strangle off for a $100 winner today with oil down $10 because vol came in.
So the IV rank yesterday was a lot higher. So you're getting the in this current environment, you're getting the non-normal vol reactions. I would say, but you know what? It's kind of interesting because gold and silver have always operated that way, always.
So it's just you would think like, oh my gosh, 11% move in oil, and honestly, when I saw it, I thought, oh damn it, if I lose on my short puts, I'm gonna get.
That's funny. Okay, so we do have some things to manage. We've got our SMH trade in, which is fun. We are taking live tweets. Put the hashtag LIZJNY. And before we manage, I'm going to go to Twitter because we did not look at Laura yet. Hold on.
Oh no, here she is, our wonderful producer. There she is, working hard behind the scenes. And
here she is. Hold on. Yay!
Oh, she looks so beautiful, and I cannot believe that she made that dress.
Yes. It. It's amazing. She looks fantastic. I love it, Laura. Thank you so much for sending it.
And I put our amazing producer because honestly, I feel like if I just posted that picture, people would think that was me at prom.
They might.
Don't you think so?
They might. They actually might. That's pretty funny. Okay, I'm just going to go top down because we're here. Fabio, wonderful. It's good to see you. Hello, ladies. What do you think of AMAT? IVR of 81 for a Friday trade. Let's take a look.
All right, let's look. I honestly have no position in AMAT right now. I haven't looked at it.
I haven't looked at it either. He's right. 81 rank, 392. Let's take a look at the chart. Top of tippity top of its range.
What do we want? Earnings are coming. So it does get a little tricky with earnings coming. You don't want to have a neutral trade where you're selling both sides. You almost have to be directional.
You do have to slightly pick a direction.
So I'm with an 80 rank and earnings coming.
Okay,
and the earnings calendar would be way too expensive.
They're going to be crazy expensive. Oh, it's $485. It's not that bad.
That's not bad.
That's not bad. That's the at the money earnings calendar.
Which we could do it. I thought it would be a lot more expensive.
I did too. I'm going to ship it. And I'm going to put an order in for 20%.
So go back and explain what you did, just for viewers who.
So an earnings setup. Well, it's kind of counterintuitive because there is an 80 rank right now, but I sold the 21 day, and you can see that I'm leaving it up like this. You can see the green dots. We sold the nearer term and bought the farther term. Same option print, right? So the 400 in the 21 day, the 400 in the 28 day. Sell the 21, buy the 28. We paid $485 for it. We're not filled yet.
It's just a calendar. $485 is a lot for a calendar. We know we could risk 480. We can risk that's at risk. If AMAT has a huge move one way or the other, we could be out. But our goal is, when that 21 day is rolling off and worth nothing, we have that 28 day with the earnings vol in it, and that'll be worth more than the 485 we paid for this calendar.
Yes. So it is. It's kind of counterintuitive with AMAT as an 80 rank, but to your point, it's very hard to sell premium right now when you're going through earnings. So this is kind of a little bit of a give and take with that.
So Netflix, we did a bullish diagonal. Netflix is down $10. When I do a bullish diagonal and the stock tanks like this, I immediately sell puts in the monthly cycle. That's my defense of a bullish diagonal, earnings diagonal gone wrong.
Let me ask you this. Well, we lost $200.
Yes, that's exactly. My mentality is I'm going to make back what I lost.
So I'm very surprised that Netflix, the entire market is up except for Netflix. I mean, with it down, did you hear that they blew it out of the water?
Yes.
Did you know this morning that Netflix blew their earnings out of the water, but somebody from their board was stepping down, and that's why it's down. I have no idea, but that was what the news story said.
So I didn't mind selling aggressive puts. I really didn't.
I don't disagree with you. It's down significantly. It's Netflix is down to right around this area. You've got a 35 rank. I'll do the same thing. I'm not going to close the diagonal though. We have no reason.
No, there's worth nothing. Like if you look at it, it's worth nothing. I mean, maybe our long is worth a nickel. I think.
My long this morning was worth like 20 cents.
Yeah, I mean, it's worth 11 cents. Our long is worth 11 cents. So I just thought with this down move, I'm going to sell I'm going to sell puts to try to make my money back.
That's not bad. And once again, it's a 1-for-1. One for one. The one thing that I did want to show you, which we have to take care of today, which is ironic that it's up today. We have
Whoa! We got it signed at McDonald's.
And this is if we didn't look at this, or filled in Netflix. If we didn't look at this, so if we, you and I just fall asleep at the wheel today, and we don't look at this, it's really this is interesting because the 10s are out of the money.
They're out of the money. So, okay, I want to talk about a couple of things. Number one, long stock and a long put is a synthetic long call. So if you go to the curve page right now, we synthetically have, and maybe click back on McDonald's because we're on.
Sorry. Hold on.
So we synthetically have a long call in McDonald's. If I'm remembering correctly.
You're remembering correctly.
So it does. I mean, there it is. It's a long call. That's what we have. Also, when I see
well, like I said, if we fall asleep at the wheel, this goes away. The long call portion goes away because it's out of the monies.
And then we just have long stock.
And then you just see that downward trajectory too.
Also, if I have a spread and I open up my platform and I see stock where I know I didn't have stock and I see it's stock in the option, my first reaction is, oh my gosh, I hope I'm not getting stuck paying a dividend. But when you see long stock, you know you're not getting stuck paying a dividend.
Yeah, and it was only overnight, and I don't think.
No, and it's not like you would never get assigned on a short put and be stuck paying a dividend. It's only when you get assigned on a short call.
Yeah, and like I said, this is just something because it was probably so far in the money. Now we're getting a little bit of a reprieve today. We're making an extra, $90 back from this. The entire position, because I'm looking at it right now on
it's still a full loss. We're a full loss on that position.
It's a full loss, but we're only out $240. We're not out the $671.
So the fact that we bought the stock at $315 and we have the $310 put, that trade, that was a $5 wide put spread. It was the $315, $310 put spread that we were short.
Correct.
And we need McDonald's over $315 to win out, to get a win on that trade.
Correct. But so you'll notice we have the 315, 310, 310's out of the monies. So we are exactly out on this trade $243 because we got a little bit of a reprieve with this $311.
$1 and then plus the credit we collected.
So we're just going to close these together. I mean, you could just close the stock, but I'm going to take my 36 cents as well.
Yeah.
And he gone. So like I said, what I was trying to use this when you have, and we can go back and do it because we're not filled yet. When you get assigned stock on a defined risk position, typically it doesn't affect your position. It will only affect your capital. You'll see that was now holding up $3,000. That is not the case here. And that's why I said, if we fall asleep at the wheel, we're going to come in, we're just going to be long McDonald's. We would not have that other option with it. So we're closing these.
Did you go get your hair blown out this morning?
No, I washed it. Thanks for noticing.
Looks amazing.
Your patriotism is duly noted. So McDonald's, we are gone. We got our $3,000 in buying power back. And I'm going to be honest with you, Jenny, 9 times out of 10, sometimes those are more glaringly obvious because you can really tell in the buying power. We've made a roaring comeback that I didn't even notice this morning. I was looking for the in the money sign in McDonald's and I didn't see it. I was like, what? Is McDonald's up that much?
You know what's made a roaring comeback? Bath and Body Works. That's on Mikey Special, the BBWI, the Mikey Special Bath and Body Works.
So that is up. We sold a put for $2.40. We actually took off the strangle because we had a strangle.
Yeah.
And then just a put. And I'm going to pop out the side to show
you. Did we ever turn a profit in Bath and Body Works?
2 seconds and I will let you know.
Yeah, just go to order chains. You can go to order chains. I don't think we've been in it for more than 60 days.
Yes, we have turned a profit in Bath and Body Works. We are up $90.
Excellent. Order chains, $90 in the last 3. And we've only been trading it recently. Mikey brought it to our attention.
Yep. So we are going to take this off.
Okay.
I'm going to make sure I get filled in that. I want out instead of the position.
Yeah.
So yeah, we made profits in that. Great. We're out for 129. Love it.
Okay, I know we just did a reverse Jade Lizard, and we talked about how it could still be profitable if it's going through the put spread. We have a Jade Lizard and IBIT, and maybe we're going through that call spread.
Oh, you know what? We have to do something in IBIT as well. We have a ratchet to do. So let's take a look at IBIT. So IBIT. Yes. So here's a Jade Lizard that we're going to take off.
Look, it's through. So I want to show like how it's through that call spread. But how much have we made on it? Because we have a dollar-wide call Jade Lizard.
I'm going to go to curve analysis. I want to take off some things. Activity. Oh wait. Analysis. I want to take off the Jade. I want to take this off. Okay. So here it is through it. What we wanted it was right here. And we still have a little bit of time on it. So activity, hold on.
So we sold it for $1-ish.
We sold it for 99 cents.
$99. And what do we buy it back for?
76.
So here we go. We're not making $1. We're not making $50. We're not making, the half of that dollar. But we're making $24. And that's kind of what happens when it goes through it. We could take our $23.
We're taking our $23 and we'll reestablish it because this was just premium on top of we wanted it to go up. I would gladly not make any money on this because we have that zebra in that did make more money.
Right. So that's a way to collect premium against our stock or our synthetic stock. And not lose. When you sell a call, my son has short calls against his IBIT. And when it goes up, he's losing on his calls. So today he's winning on his IBIT stock, but he's losing on his calls. So it's not making that much. Where here, having that Jade Lizard against it, we made money on the Jade Lizard and we make money on the stock.
Yeah. Yes, we made. So here's our stock replacement. We have a zebra we have the 42.38 zebra with 28 days left. So this we're going to ratchet up. And then I say we sell 7-day premium on top of it.
All right. So as far as people learning a ratchet, go to the position page. A zebra is you buy 270 deltas, sell 150 delta. When we put this on, it was synthetic stock in IBIT. And what do we pay for it? I just want to go to the position.
I'm actually just going to do something for us real quick. If you go to tastylive, okay, and then you go to shows, and then you come right over here to Liz and Jenny strategy series. I don't think this gets enough traffic, and it should, because the ratchet is the management to a profitable zebra. Okay, you can press play right here and watch this video in slow motion if you want.
So when you place a zebra, a zero extrinsic back ratio, which is a stock replacement strategy, bullish or bearish, the ratchet is how you manage a winner, how you take risk off the table. So here we have our stock replacement, and you can see 38.42. We put that on. We know from our strikes when IBIT was trading around 42 because we sell that at the money. And now with IBIT at 44, this zebra should be up about $210 or so. Or 200. I see we're only up 147 on it.
No, we're up 277 total. We're up exactly what we should be.
Yeah. That's the day. Okay,
so,
got
and
it.
you can see, so if IBIT is up, stock replacement, right? So if IBIT is up $1.38, you should be up $138. We're up a little bit more just because of the nature of how we put it on, but that is exactly what a stock replacement should be doing. You should be up or down right around the price. That's a stock replacement.
And you see we paid $7 for it. So today we're going to walk through how we can adjust this, continue to have unlimited upside profit potential, but reduce our risk. We paid $7 for it. How can we reduce the money we outlaid, the capital we outlaid into this trade?
Okay, and the zebra or the ratchet to a zero extrinsic back ratio is you close the position, and you have enough time, you reestablish with the same mechanics.
So original mechanics, buy 270 deltas, sell 150 delta. Do that again. We're going to sell 150 delta, which it is the 44. That's right at the money. We're trading 44.
I was just kind of looking at the extrinsic value. We're looking to wash it. So I know I'm selling $2 in extrinsic value. So I'm going to buy the 41 because then we have a little bit of.
And the deltas work out. That's the 73 delta. So we're going to buy 270 deltas and sell 150 delta. Well, that will be our new zebra. And we're closing the old.
Yeah, so we have the new zebra on. Can everybody see the platform?
Yes. Oh, no. No, you're right.
No. Can we jump into the platform? Because I know you and I are talking, but I don't think anybody else can see it, right?
I agree. Okay, they're having a little bit of a technical issue, so just stand by and they will. And we'll start this over because this is honestly super important. So clear this out. We can start this over.
I would agree because this is when you can find a ratchet, it's kind of important to do. So I will clear this out and we'll start this whole thing over again.
Yeah, and like in the meantime, since it's just on the two of us,
what do you want to talk about? Just kidding.
I'll tell you how yesterday I waited all day for 1-800-YOU-GOT-JUNK to come over and pick something up, and they never did. And I told them, don't come till 11:30 today, and they're calling. Hello, this is 1-800-YOU-GOT-JUNK. I'm calling to confirm I'm on my way, but I'm not going to answer the door until 11 o'clock.
Oh, your dogs are going to go bonkers because you're downstairs right by your door.
So I have never used this service before. I'm trying to get rid of a sofa sleeper that is so damn heavy. Everyone I've offered it to says they can't carry it.
Uh-oh. How'd you get it down there? Your Hercules husband?
Movers. The Darwin movers. I mean, I bought it new. So I I guess I didn't move it. I bought it new and it was delivered to the basement, a sofa sleeper for the kids' teenage hangout down there. When kids sleep over, they've got a sofa sleeper. But I'm getting rid of the sofa sleeper and I don't think I'm ever buying a sofa sleeper again.
Oh, you don't need a sofa sleeper. You've got plenty of room. Well, I prefer, like I said, I've got a lot of kids sleeping over today, but I have air mattresses everywhere and we get the big air mattresses and they instantly inflate.
Yeah. Yeah.
So I don't need a sofa sleeper. I feel like the couches are way more comfortable, but yeah. So do you think that we're going to get this back or should we talk markets?
Let's
see.
Please
have a chat?
End your share screen, Liz, and then end your share screen and then reshare and we'll work on it. A little bit of a technical issue. But I like this.
So the chat wants to see it too. People want to see the ratchet.
And so we're trying to get the platform back up, and it's not the platform is working fine. It's our sharing screen. Here we go.
Oh, yay, we're back. And just like that, we're back.
All right, now we've got it. So and sometimes people have to hear something 3 times for it to sink in. I have to hear something 10 times for it to sink in.
But I will tell you, this is like riding a bike. Once you have the ratchet, you can't unlearn it, right? So once you've got the ratchet down, you cannot unlearn it. So a zebra is a 0 extrinsic back ratio. It is a straight up stock replacement. Mm-hmm. So what do you do when your stock replacement is working?
Your stock replacement is winning. Go back to the position page. Here's our original. But we bought 2 70 delta calls. We sold 150 delta call. That gives us 90 deltas. This position acts like long stock. We paid $7 for it. We had $700 at risk to synthetically control 100 shares of IBIT. Now IBIT has gone up.
Yeah, you can see, just look at this. The IBIT has gone up today, $1.45, and we're up $158. That's exactly what it should be doing.
So we want to take some of this profit or take some risk off the table, put on a new zebra, continue to have 1-for-1 profit potential to the upside, but have a lot less risk in case IBIT turns around and falls down. So we paid $7. This is the important thing to remember. We paid $7. We had $700 in risk. When we put the new zebra on and take this one off, we're going to take in a credit and then we'll see how much risk we have on.
Okay, so all you do for a ratchet, you close the zebra that you're in and you reestablish in the same cycle, if there's enough days left and 28 is enough, by the exact same mechanics, selling 150 delta, buying 2 70 deltas, washing extrinsic value.
Now, when we send this trade, it's going to close the old zebra and it's going to put on a new one, brand new one, 2 long 70 deltas, 1 short 50 delta. And to do this, we are taking in $376 credit. So we're taking in $376 credit to ratchet this zebra, to move it up to the current strike. So if we paid $7 initially, and now we're taking in $377 credit, we cut our risk in half, more than half. So we're only going to have, $324 in outlay debit at risk in having this long IBIT stock from this last zebra.
From this, so you have to Jenny's point, $300 in risk. You still, by closing one and reestablishing with another one, we still have unlimited 1-for-1 profit potential to the upside, just like you were long stock for the next 28 days.
So clear this out for a second. Go to the analysis page. Show everyone right now our position on the analysis page. And you could see here.
Oh, there it is. I had it unclicked. That's why it was so weird. I had it unclicked before. Okay.
Okay. This is it. 1-for-1 is IBIT goes up $1, we make $1. IBIT goes up $2, we make $2. We have, and this controls 100 shares, so $100 for every dollar up in IBIT. That's our profit potential here.
Yes, this is, you can see this, defined risk to the downside. We have $700 to lose down here. Now I'm going to go to the table page and I'm going to put them in together, and then we're going to go back to the curve view. So I'm going to sell 150 delta.
Well, and actually more than $700. Like if you go to that, like right now, if IBIT fell out of bed, we've got $900 in risk or so, because you have what it's worth now.
Oh, you have, that is true. You have what it's worth now. That is true. But the defined risk is only 7. Like when at order entry. Wait, what is happening?
Right. So this new zebra, you can see when we put it on, we paid about $7. The new zebra is about $6, but we're closing one that is now worth, well over $9.
There you go. So in this zebra, you've got, and then we're going to go back. So I'm buying 50 delta, selling a 50 delta, buying 2 70 deltas. Now I'm going to go to the curve view analysis.
Well, I wanted to go to it with the new one on.
I wanted to show it'll do that same thing. I just moved it though. Right? So we have it in correct.
No,
and I'm going to go.
It's not incorrect. It's not.
Sell 1, buy 2. That's the problem.
You're not on the right strikes. Like we're short go start from scratch.
Close the zebra, close it, and then sell 150 delta, buy 270 delta. Oh, I moved it in the curve view.
Yeah.
There we go. Okay. So I'm gonna take this off.
And I don't care about the curve view here. I care about the curve view like after we're in the new position to show we still have that 1-for-1 profit potential.
You can see it right here.
Yeah.
So this is all the orders in together. This is the closing order with it. It'll look exactly like this. Take a look at this. We can only lose to the downside now $322, right? Because that's our capped. And here we have unlimited profit potential anywhere to the upside, and we can ratchet it up again. So I'm going to ship this, and then we'll go back to the curve view.
Yeah, because it should just be picking up right where we're trading. Yeah. There. Then the green bar starts right where IBIT is, and it's 1-for-1 profit potential.
1-for-1 profit potential to the upside, and we've taken risk off the table. We now we've taken risk off the table, and it's crazy when you look at the ratchet that you can continue to keep moving it up and keeping profit potential.
And so you've heard us say we'll have long positions with unlimited profit potential, and even like no matter how far it falls, we'll still make money in it. Because in IBIT, this position we have now is worth $6. The original one we paid $7 for. So we paid $7. This could lose $600 if we fell out of bed and IBIT went to 0, but we'd still be locking in some profit. I know it's not locking in. It's not locking in. Like we're not guaranteed to make that $300.
No, you're not. You're guaranteed. You have lots to lose when you're ratcheting it up. When you are ratcheting it up, you are continuing a bullish position, continuing your 1-for-1 profit potential by taking risk off the table.
Right. So now we only have $600 at risk. And if we ratchet it up again and we ratchet it up again and we continue to reduce our risk, if the stock keeps going up and we keep following it up, we can continue to make money on the way up, but on the way down, our risk is defined.
Our risk is defined. Now, I also want to, let me go back to the table page. Because we've got a 30 rank, I do want to sell some premium in here. So we're going to go back to the 7-day. Let's go to the 10-day, right? To sell a Jade Lizard?
Yeah, sure.
We'll go 10-day. Okay.
That'll give us a little more room on our put.
So that'll go, then we're going to sell the 43 put for 73 cents. And I'm going to sell, let's see here.
Yeah. I mean, they're not very wide. We don't give ourselves a lot of room. That's why I'm not surprised it went through our call spread, because we're not giving ourselves a lot of room when you go out so short term, but it's okay.
Well, this is what we're doing is I don't mind if we don't make any money on the Jade Lizard, because that means our zebra is making money. Our stock replacement's making money. So I'm just going to sell another one of these on top. I understand it's 94 cents, but we're getting premium selling in here.
Yeah. Yeah, and I misspoke saying like we've already locked in a profit. We haven't, but we only have $600 at risk instead of $7, and we still have that $100 1-for-1 profit potential.
Yes. 1-for-1.
So if someone wants to just take that $200 or $300 that we made on the original zebra, the only way to do that is just close it.
Oh, you can close it at any time. People ask all the time, what's your profit potential on a zebra? And we talked about this yesterday, Jenny. I'm going to flip the cards over. We talked about this yesterday in VXX. So what's your profit potential on a zebra when you put it on? Anywhere you want to sell the stock.
Right. And here, this was a short-term vol play, getting long vol short-term. What's our profit potential on this? Well, we'll see where vol goes. We've got 28 days to see where vol goes.
Okay. So, and the reason I put this up here is, so we have a stock replacement strategy right now, right? VXX is down 63 cents. We're down $70 on this. So it's down. It was a bullish trade. So just because it's a high probability trade, stock replacement trades are not high probability trades. They are replacement trades. This zebra is a replacement, not a premium selling strategy.
No, it's a synthetic stock replacement. Yeah. I'm just trying to glance. Can you sort P&L percent? And I'm just trying to see what we've got going on. I honestly think we take off that Bob on Fire Intel for $300 in 3 days. I think we take that off. I know it's a Jan trade, but we made $300 in 3 days.
I agree.
This account, this account is not like a long-term investment portfolio.
Well, under your release the capital. But it made 50% of the move, which I like. I like the Bob on Fire trades. Yeah. I like that we can name them that too. American Airlines. We did the combo. Now I'm just gonna jog your memory because we were on the SIBO floor. Do you remember this?
I remember it all. I remember it all.
Unusual volume in the calls, and I wanted to just buy a call, and you said I don't want to pay that extrinsic value, so we wound up doing the combo here. Now what we can do is take off the put if we want to
take off the put. If you want to keep going, if you want to have a long position in American Airlines, but take some risk off, just take the put off if you want.
I do, because we've made some money in that, and we're going to take that put off. Let's go. We have another. What other thing do we have a combo?
I closed all of my American Airlines today, all of it. I had short puts, long calls, whatever. I closed all of my American Airlines today. When it hit 13, I felt like I was happy with that.
Did you see It was up 11% this morning.
I know, but I'm a little bit leery now of the airlines. So I took them all off.
Okay, kind of going down this way. Campbell's Soup is 57%. It's just a short put. We're going to close this as well.
Yeah, 57%.
I mean, these are small, inexpensive trades, but we want to keep them.
You know what? They add up.
They do add up. So Campbell's Soup, I'm actually going to pay.
And
these are a little bit wider up market, so I'm going to pay up a little bit.
Nike. I saw Annie, and I think Annie was posting something about Nike on the Women of Tasty Trade Facebook page. I see we have something in Nike, and it's only at 25%, but I still wanted to take a look at Nike. It's been a hot topic because it's been so beaten down.
It has been beaten down.
I mean, this was a roll. If you look at the chart in Nike, I can't remember if we did.
It is a roll. We're still down $130 in Nike.
But I'd like to take a look at the chart. Is it bounced back at all?
Kind of.
A little bit.
Yeah.
A little bit.
Let me see. So yeah, I mean, I'm going to put a GTC in for this. It's bounced up a little bit, but we can get 50% out of this is my guess.
Yeah.
Okay.
Earlier I mentioned I've cut my delta in half. I've cut my delta in half in the last few days, just by taking off positions or changing them. I've taken off a lot of like big risk or undefined risk, change it to defined risk in case this market turns around.
I mean, this is crazy to me. Let's take a look at the VIX. So the defensive mode, right? So you can either put on a hedge or close some of your positions or change some of your positions. So a lot of times I like to have, I know the implied volatility is crazy, but the zebras are things where you have unlimited profit potential, but a defined risk setup.
Right, exactly. You have the profit potential, but a defined risk setup, or a diagonal where you have some profit potential, but it's defined risk if the wheels fall off in the market.
Yeah.
Like, I just don't trust this market enough yet to just keep like flat out longs going and have risk, or have tons of naked puts and have that risk. I'd rather have defined risk just in case.
So I took a lot of my stocks and collared them because I wasn't ready to sell them yet, and I feel like that's the same thing, right? It's not selling them, but it's protecting them. Like throwing a collar around stock, it helps a little bit. You know what? I'm just going to show. I'm going to go to what we're talking about with the collar, and then I do want to jump into Twitter. Lyft. I mean, we don't need to do it in here, but I knew we had 100 shares of Lyft. So when I say I throw a collar in, basically what you're doing is, I'm just going to go with 62 day. I'll put in a zero cost collar. So I would be buying a 14 put and selling a 17 call. So essentially that's capping my upside to 17 and my risk is down to 14. That's what's called a zero cost collar around stock.
And it only works when you have 100 shares of stock. So I collared my Fly. And I know like, I bought Fly for JD for his birthday, and my son had some Fly in his account. And if you take a look at Fly has gone from, I think when I bought it for JD and Logan, it was around
like $20.
Yeah, $20. So it's doubled. And so the frustrating thing when you have some stock and it goes up like this, if you don't have 100 shares, you can't really collar it. Or you can't really collar it. So we got to a point with my son's account where it made more sense. Even if he didn't have 100 shares, but we wanted to protect his profits, it almost made more sense to make it 100 shares and put that collar on it because you were locking in some profits. And if it went down, you had the collar on. So it's not like you had that risk of those extra shares. So at some point he went from, maybe even 25 shares to just turning it to 100 and putting the collar around.
I agree with you there. And it does release the capital.
Right.
So from that perspective, so it's the same thing as if you had, I'm just going to go back to Lyft if we can, because I know we have that stock. We don't have.
Yeah, go ahead and collar Lyft it. Well, we don't.
I just want to show, but it's the same concept as if you had, and I know it's going to sound crazy, but watch this. If I had the stock, because we do have it, so I'm going to buy this and sell this. So we do have this stock, right?
You got to buy it.
It's giving us back capital. It's the same thing as if you had this without the stock.
Right. So it's giving you the margin of like 2 short puts instead of the stock. So it'll
no, not 2 short puts, of a spread.
Of a spread. Oh yeah. Of the spread because you got the collar.
Yeah.
Yeah. So it gives you back a lot of buying power. Oftentimes we don't want to put on a collar because we don't want to cap our upside profit potential. But with things having rallied the way they've rallied, maybe you don't mind. And that's how it was in Fly. I was like, okay, if my stock gets taken out at 50, I'm okay with that. I don't mind the collar.
No, I don't need, especially, so it's weird. I wouldn't start with this, but because stock has gone up, I wouldn't start with the spread, but since the stock has gone up, I don't mind doing it. Now, Jenny, I know I love our Twitter peeps, so I got to make sure we get to them if that's okay.
Oh, sure. Because it's already 10:50.
Yeah, I'm going to go top down and we're going to make sure we get to everybody at least once, right? Okay, now this is
Mikey. I know BBWI. Thank you, Mikey. Thanks for the BBWI profits.
Oh, yeah. I know the Zebra gives you unlimited upside, but since it's a stock replacement, I will sometimes sell a second call further out, basically making it a lower cost poor man's covered call. I like that. Yeah. And if the stock pulls back, I can close that second call for a small profit. Love it.
Sure. Love it, Mikey. And you know what else you can do with the Zebra? If the stock really pulls back, you can buy back all your short calls and then you're just double long in case we rally again.
Oh, I didn't know where you were getting this one because I was reading Mikey's, but I was like, Okay, Florida 7. Netflix beat the past quarter, but guidance for next quarter down on both revenue and profits. Thank you very much. And the coming founder of the company is stepping down from the board. I appreciate that, Florida 7.
Thanks, Florida 7. Yeah, so we did sell puts in Netflix. We're taking our chances. We could have done a downside ratio spread if we wanted to, but we were trying to make back some of the money we lost on that diagonal.
Yeah. Very true. Okay. Oh no. He got it signed.
In what? What does he have there? Is that on Netflix?
Oh, they're Netflix. Look at they're all Netflix. Netflix. We feel your pain here.
Out flat, but jeez.
We do feel your pain. Then we've got to Fabio, which we already went over today. And then there's our super producer, Laura. And then Brad, 46 minutes ago. Sorry to confuse you guys with my typo yesterday in reference to the SPX 0 DTEs. Which trade is more consistent? Or are those essentially the same? Oh, I see what he's saying. So he's asking, Liz is at the money $10 wide put spread for $25 profit, or the $10 wide put spread at the expected move for 50% profit. I don't know. We've never gone head to head with those.
No, but I think that which is more consistent, you could see, if we could pull up those slides again, and you could see their pop, right? I'm going to guess that the $10 wide at the expected move has around a 90% pop, or that at the money maybe has an 84% pop. Well, that would be my guess if we're looking at, Jacob always puts the pop on there.
The pop on there, yeah.
So the further out of the money will have a slightly higher pop than the at the money. But with the at the money, you're taking in more, you have less of a drawdown. So a higher pop doesn't mean higher average profit.
Right. So that's just it, is if you're looking for straight up P&L, to your point, it is like for every gimme, there's a gotcha. In my opinion, I would rather have $4 on a $10 wide than $1.20 on a $10 wide. $1.50 on a $10 wide. Because if when they lose, they lose. And when I'm doing the farther out expected move, the study that really hit it home for me, only because I think about my son a lot, the study that hit it home for me, it's only you need 2 wins to make up for 1 loss when you're doing the at the monies. You need like 10 wins to make up for 1 loss when you lose the at the expected move.
And I think it requires a little bit of a market awareness too. Like right now in this market that we're in, I'm bringing it up. I did the $10 wide for $4 because I wanted less of a drawdown. If we're sitting in a market where there's nothing going on, maybe I'm going to the expected move. Because if we're just market's doing nothing, market's doing nothing, market's doing nothing, I'm probably going to the expected move. But if we're sitting here in this kind of market where it's moving like crazy, I want less of a drawdown.
Right. Correct. No, I agree.
So it doesn't have to be you do the same trade every day. It doesn't have to be like that.
No, it doesn't. It doesn't. I do thoroughly enjoy SPX though. It's been a fun trading vehicle. Okay, so bullish 1975. I actually am super happy with that handle.
Yes, we were both born in 76, so
we were born in 76. Working my first covered call, sold a 20 delta 45 days out, May 15th, Amazon 245 call and collected $3. How would I manage this? Hit hard on upside. Okay.
Well, but you're making money on your stock. So again, what is a covered call? It's a synthetic short put. So it's like if you sell a put, your profits are capped. They're capped at the price of the put. So once you sell a call against your stock, it's as if you have that short put. Your profits are capped on the value of that short put. So you have to think of it differently. You're getting hit hard on the call. What do you say? Is the 300 call?
245.
Oh, 245. Yeah, right. I mean,
you're capped out. You've hit your cap. Now, all you have left to make in this position, if it stays up there, is the extrinsic value of your call, which is about $7.
Mm-hmm. Now, what you can do, if you don't want to lose your stock, if you clear this out, if you don't want to lose your stock, we usually say the time to manage or roll a call is when it's just through it. So if you go to that call and buy it back,
and then you can sell it out.
June, I don't want to pay. I want to take in more credit. You can go to the 250. And you're taking in slightly more credit, and it's giving you $5 more profit potential.
So you could get it. People used to say they were going to get it the heck out of the way. So if you buy this back, I mean, if it's a long-term bullish position, you could even go out and say, I'm going to go to the
and do the 255s.
Yes, 255s, or so on and so forth. So
and then you have $10.
Nothing we do is a trade recommendation, but you got to remember when you sell a call, you've capped yourself out.
So if you look at that 255 call that you were just pointing at. All you have to do.
Did you want the
wherever you were, July or something, or where were you?
So you want his, or do you want a different one?
No, like what you would roll it to.
Oh, so, I was just saying, get it the heck out. You can even go to August. I don't really care.
So what I just want to say is
65 in August.
So whatever call you roll it to, or whatever call you sell, just look at that corresponding put. So if you roll it to the 265 in August, between now and August, $25 or $2,500 is all you can make, no matter where Amazon goes. And if Amazon falls down, you've got $17 of protection to the downside.
Right. That's a good way to look at it. All right, Jenny, we are out of time.
All right, Liz, prom pictures. We want them.
You got it. All right, everybody have a wonderful afternoon. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Have a great weekend, everybody.
Bye, everybody.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. and go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
First thing about tastytrade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade.
Leaning off of that edge, don't need a green light. I got that fever. I got a good feeling. I got a good feeling. I got a good feeling. I got a good feeling.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal. This is Options Trading Concepts Live, and it is a insane Friday. This is what looks like the end of the war confirmed by the market. Crude oil down 15% here. No, 13%, but the rest of the market, E-minis up 1.5%, NASDAQ up 1.5%, Bitcoin up 3.5%, ETH up 3.5%. This is insane. It's pretty crazy. What say you, Jamal?
It's amazing. I mean, it's amazing. This is incredible, and it really, it's like every morning we've come in, there's been a little bit more de-escalating type news to come out, and this one right here. I mean, this is it. I mean, this is essentially signifying that everything is back in order, if you will. I think this move in oil is really the big sign of it. Oil at $80 and change. I got a lot of management going on. Really, I've just been managing things throughout the day, and some things are a little wonky right now. Gold vol's a little wonky. Oil vol, silver. I think by the end of the day, those kind of calm down, and if you short those, volatility kind of comes in. Tech stocks, man. Whoa. Yeah, they are making the moves that we kind of thought they were going to make, and I'm not going to adjust my straddle yet. I'm at the 27K in the M&Q. I'm going to wait with this last. Feels like the tail end of the move to the upside. I don't think I certainly don't think we crash, but I think maybe the signs of a pullback start showing themselves soon. But it's an awesome update for those who have been long. For those who are short, it's tough. This is what I've been talking about recently. I've been through this before plenty of times where I started layering the shorts around 6,850 or 6,900 or 7K, thinking like this is it. But that's what's dangerous about those type of things. You just don't. It's hard to determine. The news. It's really hard to decipher some of the news, and that's probably been the toughest thing throughout this, Mikey, is like figuring out the news, right? Like that's why I really haven't paid much attention to it. I've just been paying attention to the action of the market. That's really what I've been letting determine me, and that's why I think I didn't chop myself up as much. But like right here, I start to, I don't know, I almost feel like I want to get flat right here. That's how I feel now. I don't want to get short or long. I just want to start to get flat after this large move.
That's fair. Yeah, I'm trying to just move this. I might just I am flat here, 7,100 with this straddle in the micro minis. It's been an insane rally, but as you can see, like because I'm getting slight short delta now, my profitability is a little bit less than it was yesterday. So I think I'm just going to move this and stick to my guns here, move it to June, and go to the 7,300, 7,400, something like that. I think since I'm going further out, I can move it higher up, which makes sense, but I'm just not sure where I'm going to get filled at. These markets aren't that liquid. Okay, there you go, 63 points. So that brings this position up to the 7,400 straddle with 524 points beyond the strikes. So the break evens to the upside and downside are now, let's call it 6,900, just under that, which is the expected move in June, and then almost 8,000 to the upside. So big wide range, leaning long, as I've said I would this entire time, and just picking up credits along the way. Kind of insane though, like SPX adjusted, if you had one contract in SPX replicating this move, you would have $52,000 in credit received, even through all this craziness, which is just kind of wild. So yeah, I will post that to the follow page. I just made that adjustment. And then I also sold that call in Microsoft, the 425 strike. And I bought that back into this little relief sell-off here. This thing was significantly higher if you look at the minute chart. We were up at above 431, and we just got this little sell-off over the last couple of minutes. So taking that opportunity to roll up and out to just alleviate the upside risk. I want to let this thing keep going if that's what's going to do. So I bought back the 0-day 425 for $3 and change, and I rolled it out to next Friday, and I moved it to 435. So even if this one is tested, I'll just do the same thing. I'll move it from the 7-day to the 10-day, or if it's really aggressively bullish, I'll just buy it back in the 7-day and just roll it straight into the 14-day, which will encompass earnings. And as you can see, I can make a lot of maneuvers here. If we get tested at 435 next week, early next week, if I need to roll it out into the earnings cycle, I can move this thing all the way up to the 460 for a credit. So plenty of flexibility because we're rolling into the earnings cycle, and I like where the position is at right now. And I think if I did do that and then we get another rally into earnings, I think that's when I'll probably just close the whole position, because this rally is just absolutely nuts in Microsoft.
Yeah, I know, right? This is amazing. I mean, we're at highs of the day, man. Wow.
Yeah.
Whoa.
Yeah.
Are you surprised? Are you surprised?
I'm a little surprised at the strength of this rally, because the rally that we've seen in the E-minis thus far was, in my mind, like signaling that the war is going to end soon and everything's going to return to normal. That was paired with the vol crush and the crude oil futures that we saw too. But I mean, this is like everything's fine. Don't even worry about what just happened. Let's just go to new all-time highs, and let's do it quickly. Like, it's really kind of wild to see. But yeah, this is the M contract here.
What if I tell you that the S&P 500's only up 5% year to date? How does that make you feel?
I think it's fine. I think we're on par for another 20% year. After being down at 6,300. I mean, it's crazy. I thought we would have seen some resistance at the top here, but apparently we have not. But when you think about it, again, we've said this many times, like, you look at some of these Mag 7 names, and even with the rally, you still have another 125 points that Microsoft can gain. Microsoft's a huge component of the NASDAQ. Same thing with Apple regaining to highs. Amazon, that's an insane chart. Meta still has more room to go. So like let's just say if all these Mag 7 stocks were to reach all-time highs, you're looking at another massive move in the NASDAQ. So, and the S&P is, I think, something that we often don't talk about. The S&Ps have a number of different sectors in it. So like energy prices sky high. So that helps the E-minis rally, or at least sustain a floor as tech catches up. So yeah, it's a crazy move today. I did not see this happening. 97 points. The market also didn't see this happening. I think yesterday's SPX one-day move was like 45 points. Somewhere around there. Yeah, something like this. But this is crazy. We're back at 10% IV in SPX. It's nuts.
Yeah, how about it? Yeah, this is a massive move for sure. I certainly didn't see this happening on a Friday. I certainly didn't see, but again, it's news related, right? And that's been the hallmark of this most recent stock market in the last couple of months here. It's been headline driven, to the downside and to the upside is clearly as well. But looking at the oil move, man, it definitely feels like we have moved past this, and I'm curious to see on the other side of this. It's also fascinating that it's happening really basically as earnings have begun, like not when they're about, like they have begun already. We just went through the whole bank earnings, and now we're about a week and a half, 2 weeks out from the major tech earnings, or do they start next week? I don't think so, right?
Yeah.
But
well, Tesla does. Tesla for sure.
Oh, there you go. Yeah,
22nd. So yeah, that's like Wednesday. Yeah. But yeah, Tesla, and then I think next week or the week after that, that's when you'll have a ton of earnings. But let's just look. Yeah, you got Tesla highlighted there, and then the following week you'll have some of the other tech stocks.
13 days out.
Yeah. Where's Apple? Apple's at the end of April.
I can just look at the earnings column here on my portfolio because I got all of them. Damn near. 12 days out for Microsoft, 13 days out for Apple.
Yeah. So 2 weeks from now, we'll have all these stocks reporting, and it's going to be wild. It's going to be wild. Have you made any adjustments today or new trades?
Yeah, I have. Geez, I gotta go back and make sure. Only a couple though. So, it hasn't happened too often recently, but if and when the move is pretty big on some of these super bulls. In this case, that downside put spread that I had in Microsoft at this point was $1.15, and if this were any other situation where I'm short a put spread and there's only $1 maybe or so left on the $10 wide, I usually close those, and so yeah, I closed this one as well. I just figured it was good to good risk management. I'm holding the call spread right now for the time being. Like you said, maybe I look to close that out over the next couple of days or maybe into earnings. Hopefully it just keeps running. We'll see, but that's the plan. Crude, I shifted the call side of my Iron Condor a little bit down. I struggled with this one a little bit because I was like, what strikes do I want to pick? And I could have gotten more aggressive. But again, I have the 75, 76 put spread that's close to getting tested with oil down here. I didn't want to get too aggressive with the call side. I could have gone down to 95, 97. I mean, I was struggling trying to figure out strikes. I finally just settled on 98, 100. Look, oil gets back up to 100. I mean, things are crazier than expected, and I think I don't see that happening. So whatever. I just did 98, 100, and then AXP just bought back a put spread. That's it.
Cool. Yeah. I haven't done anything yet other than the Microsoft trade. I do have my eye on some of these positions. So just looking at the P&L open, some of these tickers I have multiple positions in. But Natty Gas Iron Condor coming in a little bit. I'm going to keep that one on. Corn and wheat, we're going to keep those on. Those are just naked calls since we already closed the cost basis reducing component. The Apple diagonal spread is now exactly flat. So we'll keep that on. Adobe, that's going to go away. Costco, the 1100 calendar, we put that on yesterday. Love that. iBit. I forgot about this short call. Yeah, so now it's going to be a little more difficult for me to move this. I guess it's not that bad. If I wanted to move this to the 45, I can just do that for a small credit. It would alleviate $300 of max profit on my shares since I'm at 42 right now. I think if I do this, I'll just call it because my break even on iBit is down at like 36. So I'm going to do this, just roll it up and out, get the shares, give the shares the ability to max profit up to 45. And I'll still have $400 of extrinsic value if we continue to rally, but I'll just close it at that point. So there you go. JPM, $42 winner. We'll keep that on. And then, yeah, Microsoft, I see no reason to let this go. I mean, I'm still throwing on some hedges against the long here. It's an $1,800 winner, which is amazing. And then this 500 strike calendar is so long-term that I want to keep this on. This is also a 100% gain on the debit paid, but this is, it's hard to imagine the market going higher, but at the same time, vol is contracting, oil is getting crushed, markets are ripping. So like with almost 300 days on this trade, like I'm going to keep it on.
We had dropped below 17 a little bit ago in the VIX earlier, about a half hour ago. That was one of my alerts as well, but we've kind of popped back up a little bit.
Yeah. Netflix, I actually forgot to manage this. So the 110, 116 lost value into the sell-off here. It was outside the expected move. The expected move was about 6-7 points. So this is about 10 points to the downside. So I'm going to buy this back and let's see if there's something I can sell in May. The 110 is where my long option is. So I might just leave this as the long option. I don't want to sell. I don't want to put on a short option for 40 cents and then watch Netflix go back up 10 points and then have that 40 cents blow up in my face. So I'm just going to leave this, let it expire. Long option's only trading for $140, but I've got 62 days. If we get a rally up to 105, I'll then be able to sell something against it with a lot more value. So we'll do that. Nike Leap working out well. Silver, nothing to do here. This is beautiful. We're sitting at the 87th straddle here with $2,000 in credit collected. So well above the break evens now. Love to see silver rally, but I'm not going to make any adjustments until we get to 87 if it happens, because I'm already in June. SMR, I'll have those shares for about 6 more years. Snapchat, I'll have those shares for about 20 more years. SPX, Iron Condor in the money on the upside. Who would have thought? Who would have thought? But this one I'll keep on because I want to have, I have these other bullish positions that I'm letting run. And now SPX, I have a couple of bearish positions, 2 butterflies to the downside. This call option, oh my God, this call option's profitable.
Wow.
Look at this rally.
Oh, amazing.
That's so funny. So yeah, this option has gained $1,000 today. And this is the luckiest reversal timing I think I've ever been a part of, because we had this trade on as a calendar spread. If you remember, a long time ago, February 19th, we put this on to the upside. When the market was initially selling off, the 7,300 call calendar, long April month, end of month, short April monthly, and then I ended up just buying back the April cycle at the end of March, which was when we were selling off and it was worthless for 35 cents. And the long option was worthless too, but got to close this today. This is an $1,100 gain today, bringing us to a $400 net profit. We got to get out of here and call it a day.
I mean, that's fun. It's fun when that happens.
Yeah, absolutely. And yeah, it doesn't really matter what I get filled at. All right, $395 net profit on the calendar. Luckiest thing ever. So yeah, now we have a bunch of short delta in SPX, which I like, but defined risk. And Under Armour, that'll be another 20 years. And USO, this is kind of crazy. USO, the 75 put, this was a put diagonal spread we put on into the big sell-off. And now with crude oil crashing, and is crude oil back in contango? Because that would really help USO continue to move to the downside. Let's take a look at the regulars. It's almost there, which is wild. But basically the backwardation is minimal now. So yeah, USO, if we get another 12, 13 points to the downside, big sell-off there. This June option I have at the 90 strike will appreciate a bunch. But yeah, this long option is still only trading for $150 out in June. So there's nothing to sell against it. The 75 is going to go away today. We just need, another 20 points, 30 points to the downside, and we'll be a profitable trade. But I like the positioning there with the rest of the market rallying. And that's that. If you want to join us on the YouTube channel, we're streaming live there. Just head over to tastylive, and you'll see this video. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them right now.
What a day.
What a day. Crude oil really mattered that much? Yeah.
Yeah.
Yeah. I should have waited. I filled up at Costco yesterday. Should have waited one day.
Yeah. Wait, how many days in a row is this NASDAQ? 1, 2, 3, 4, 5,
I mean, it's like
8, 9, 10, 11, 12. Yeah, this is the record. This is the record.
Oh yeah,
13.
and it's not even close.
This is it.
This has got to be the biggest magnitude too. 3,000, almost 4,000 points in 14 days.
Yeah.
That's crazy.
Yeah, today's the record because the last record was what did I say it was? It was June or July of 2009, and that was 12 days. This is the record.
It's nutty.
We did it.
Yeah, truly historic. If you own 100 shares, selling a call is an option. Correct. Open a call ratio is a better option, right? Not necessarily. At what strikes do you open it? Short calls at expected move and the long one at the money. Yeah, something like that. We can use IBIT as an example. So like, let's say you just had 100 shares in IBIT and you wanted to put on a call ratio or you were looking at a call ratio versus a short call. So a short call, let's say you go to 50. the short call is going to give you 100 deltas from 44.34 where it's trading all the way up to 50, and you'll pick up 150 bucks, 140 bucks of cost basis reduction. If instead you did a call ratio, buy one, sell two, you would have 200 deltas between 46 and 50. So your max profit is significantly higher if IBIT goes up, but your credit received is nothing. So you have no downside cost basis reduction. So to answer your question, neither is better or worse. It's just different. If you're trying to make a big upside play, then the call ratio is definitely what you'd want to do, because if you're right, you're going to make 3 times more than the short call alone. But if you're selling into a rally, for example, or you're trying to reduce cost basis, then just the short call is going to achieve that. You still have max profit. You still have a nice profit to the upside, but it's not as much as the call ratio. So that's really it. What do you think?
Yeah. I mean, you nailed it. I don't even need to add to it, but I will say it just reminded me that I need to roll my IBIT call. I got a short call in there in May, and I need to roll that out. But yeah, I mean, there's a couple of different ways to skin that cat, but I always try to pay attention to where your cost basis was, and the ratio, having that ratio is kind of nice.
Yeah, for sure. And I would say if you have higher implied volatility, the call ratio is more in play because you can make it wider. If you have a low implied volatility, you wouldn't be able to do a 4-point wide call ratio for a credit. You'd only be able to do like a 1-point wide or a 2-point wide, in which case it's negligible, and I'd rather just sell the call.
Yep, agree.
Let's see. Mikey, the new Tesla bear. Yeah. I wouldn't say I'm bearish. This is surprising to me for sure. I'm short-term bearish. I think when SpaceX IPOs, I think Tesla would sell off a little bit. That's all I'm saying. Let's see. S&P 500 up about 5% now. Need a bullish trade that won't hurt much with a temporary pullback. Calendar in the diamonds? Certainly.
Calendar in the diamonds.
DIA. I haven't traded this in quite some time, but yeah, I mean, your head's in the right place. I think we can look at a calendar spread. Let's look at like June, May. Let's look at May. So I like to go backwards, and I look at May's expected move, sell the option there, which is at 510, and then look at June, buying the 510. So $360 for a calendar spread. You're not going to make a lot on this trade if you're directionally right. You'll make a couple $100, but you're paying $3. Like, what is the difference here? If you go 500, 505, you're paying a little bit more, but you have a lot more upside profit potential. And that's especially true if you make it even wider, like a 495, 510 or a 495, 505. But to your point, if you're trying to just add some upside profitability with a minimal debit, then yeah, calendar spread is the way to do it. And this can work out nicely, specifically because you've got low implied volatility. So $3 debit for a calendar spread on a $500 stock is really cheap.
Mm-hmm.
Yes, I did just adjust that MES straddle. So just continuing to play the game here and just look at what the market is giving us. And Jamal is also on the dance floor of managing his too. But yeah, being flat here, it's totally fine. Just depends on what you want to do. That's the beauty of these trades, right? You can do whatever you want. Literally, you can do whatever you want with undefined risk, as long as you're picking up credits and manipulating your strikes efficiently and not letting strikes get too deep in the money to where they get really high delta.
Yeah, it's like I want to adjust it right now, but I just want to wait a little bit too and see. Maybe by the end of the day, we'll see how the market closes. For now, I'm just sitting on my hands.
There you go. Something else to think about with Tesla thesis. SpaceX may acquire Tesla in early 2027 at a premium. You may see Tesla and SpaceX in lockstep.
What?
I don't know. I don't know. I guess that could be a thesis if SpaceX IPOs and it just goes straight to the moon or Mars. Literally.
I mean, I don't know about. Well, hold on. What?
I wouldn't play for
Tesla's. Yeah, Tesla is 1.5 trillion. And what is this thing? What is the market cap of SpaceX supposed to be?
Not 1.5 trillion.
Exactly.
Yeah.
So you got to, when you start, like, just so you guys know, when you start thinking about like mergers, the number one thing you always got to look at is, can this thing actually acquire the other thing? Like, what's the sizes of these? And I mean, I don't know what SpaceX valuation is, but let's look up real quick. Estimated between 1.2 trillion. So, I mean, in general, like if something's going to acquire something, it has to be like at least double. Yeah. And I mean, if it were like 5 trillion, then yeah, maybe they're thinking about acquiring Tesla, but nah, not equals. Then you have a merger of equals, and nobody likes a merger of equals. Those are like the worst mergers you've ever seen.
Yeah. Then it kind of just kills the tradability of both.
Yeah.
But yeah, we'll see. It's going to be crazy. It's going to be crazy. Crazy up move again today. Would you consider layering another SPX put butterfly in the June 18th expiry, the 68, 69, 7,000? You could. I already have a couple, so I've got May and April here. June
seems a little far, honestly.
Yeah. The problem with going to June is just that you're not going to make a lot on this thing if it does go down. And it's basically the same cost. Like the one I put on is $5. This one's $4.70. So I would go to May and have less time if you're trying to do something like this, just because you want the ability to make money on this thing if it does go down. And having a lot of extrinsic value in these strikes is not going to help you do that. The May is more expensive, but if we just look at the profit potential of May relative to June without changing anything at all from a theoretical standpoint. So you get a downside move, you pay $6 for this thing, you get a downside move, you make $600. $589 is the P&L Theo at 6,900 with no change in implied volatility or time. If you look at the same exact trade in June, the 7, 69, 68. This is going to be a lower profit potential just because there's more extrinsic value preventing you from realizing max profit. So even though it's cheaper, you've got about a third of the P&L Theo max profit potential to the downside. So in these butterflies, we're going to stick with 14 to 30 days typically, just to make sure that we're sticking around that $500 price point. And if we get that sell off, we can make a good amount of money, especially if it happens near expiration. Like that's the best possible scenario for us. So we don't want to have 60 days out. But I like your thesis. If you don't have one on now, like this is the most historic rally we've seen in many, many moons. So why not throw on a little cheap downside butterfly in case there's a reversal, even if it's just next week?
Yeah, that's the thing, right? Like, look, historically, butterflies are really kind of like more like expiration trades, if you will. Yeah. That's usually kind of where people used to employ them way back in the day, market makers, et cetera. They're really expiration trades. What we do is kind of manipulate them a little bit, and we try to put them around strikes where we think something could reach within a certain time period. And just like Mike said, the further out you go, it's a little bit hard to predict where that thing might land potentially, like, or within the splash zone, if you will. So it's harder. I mean, I like Mike said, it's somewhere between. I mean, honestly, I didn't even expand it. It's between 0 and 30 days, honestly, and in 15 days probably being the sweet spot, right? Like, and in this type of market, there's no telling where we're going to be in 15 days. So I think you'd just rather be closer versus further out, and they are a little. Probably a little bit more expensive. Obviously, the closer you go to expiration, but that's why 15 days is probably good. But again, it's the further out you go, I mean, it's just like a real crapshoot, and you're probably not going to make as much money even on the pullback.
Yeah. I do have an alternative idea though. So this actually, we got to give a nod to Glenn because he had a Super Bowl in Palantir, and he's like, what if I turn this 10-point wide put spread into a 5-point wide put spread, pay a small debit, but eliminate some of that risk? You could do the same thing in SPX. So into this rally, we have a 100-point wide symmetrical butterfly here. But what we could do, and if you're willing to add $400 or $500 of risk to this trade, what you could do is move the 6,700 up to the 6,750. So what this does is it gives you another $5 of debit of risk. You're already in the 42-day, but what you'd have here is you'd have a 100-point wide put spread with only a 50-point wide short put spread against it. So instead of having symmetry where you've got this tent and you've got your debit risk on both sides, you would then have the same symmetry of max profit to the upside, but you'd lock in $5K in premium here if you do get that rally. So it would look like this. If you did a 6,750, 6,800, 69, I might actually do this. Sounds kind of fun. So here you go. So you'd have, if we isolate this trade, you would have, ding. So you'd have another $500 of risk to the upside, but you'd have way more max profit potential to the downside because now instead of having a 6,700 symmetrical butterfly where you've got your debit risk on both sides, again, you're moving this up, paying $500, but you're now lock in. If there's a big sell-off here, you would lock in 4K in max profit. I think this is a more efficient adjustment than adding a new butterfly in June. I think I'm going to do this. I've talked myself into it.
That easy, huh?
Yeah. Yep.
So easy.
$500. There you go. Instantly filled. Hate it. That means we're going to 7,300. But yeah, it's a efficient adjustment, and now I have a lot more downside delta that I can sell out of if we do get a continued rally, or a reversal of this rally, I should say. All right, new to trading options, welcome. Glad you found us. In SPY, short call spread 687, 692, expiring May monthly. How many handles loss should I think of buying back the spread? Should I be afraid of early assignment or the best alternative? Nope, I would not be afraid of early assignment at all. Early assignment in May is just not going to come into play here. You've got the 687, 692. So even down here, 687, 692. First of all, the nice thing about, like, this is a losing trade. It sucks, but your assignment risk does not apply here because assignment risk has to do with the option being exercised and being converted to shares, but the person doing that is giving up all of the extrinsic value when they do that because shares of stock don't have extrinsic value. So in this case, if someone were to exercise this option, you should be celebrating because you would be picking up $600 of extrinsic value because you could just close the short shares and resell this option for another $600. So it's not going to be assigned. But if this extrinsic value were to get to like 10 cents, 20 cents, now you have assignment risk. So I wouldn't worry about that. And this trade is already 80 cents off of max loss. So the silver lining of credit spreads that are in the money, of course, they're losing trades. It's not good. But now you kind of just have this embedded bearish trade, right? You have 80 cents left to lose going forward, but you can make back the current value of $420. So you could think of this, instead of adding a bearish hedge, if you were to do that, you could think of this as your bearish hedge now in your portfolio, where you're risking 80 cents, but you can make back $400 if the market does reverse here. What do you think, Jamal?
Yeah. And I mean, you don't have to worry about it, assignment risk at all. I just looked up the dividend just in case you were wondering, like the quarterly dividend's out in June, and that's like $1 and change. So like Mike said, you don't have that risk at all. And so essentially this turns into a downside hedge. Not sure if that's what you initially put it on for, if you're really trying to just collect the credit. But I mean, at this point, yeah, I mean, you don't really have much left to lose. I mean, it looks like 25 cents or so. Me, if I had it, I'd keep it on. I'm not that worried about it.
Yeah, that's a great call out. I forgot to mention that dividend. So the caveat of extrinsic value is if you were close to the dividend announcement and there was like $1 of extrinsic value, well, now all of a sudden it makes sense for the counterparty to convert the call into shares because they would give up $100 to make $180 on the dividend. So if you do have an in the money short call in a dividend paying stock, just make sure that you have more extrinsic value than the dividend, and that'll keep you in the clear as well.
This is the point where the rally starts to get wild.
Yeah. Now it's just like, it's a FOMO rally. Like,
That's why I'm like, I'm going to chill for a little bit. Let me just sit on the hands for a little and see what happens here.
Yeah. It's nuts, but it is quite fun.
Yeah,
quite fun.
It is.
Question, when are we going to stop with all the options education crap and rebrand OTCL into Smash Triple Qs and make 100% yearly live? Great question, Stock Messiah. We could. Yeah, let's look at TQQ. I mean, yeah.
Wow.
There you go. Just a quick double.
Amazing. What's SFIXY doing, by the way? I haven't looked at that.
Oh, that's probably ripping higher too. Yeah. Got as low as 43. And this is a nice product if you're trying to play for inverse volatility. So when the vol was spiking and we were in backwardation, that's when SVXY is dropping to these levels. The options are kind of wonky. They're not that liquid. So I like to say, like, if you're trying to just inventory vol crush delta, you can just buy shares of SVXY. And if you had done that near the low, you would have made 20% on the share purchase to this point. But the cool thing about SVXY is the more we stay in contango, which we're in right now, the more this will just drift higher because it is an inverse volatility product. So if vol's in contango, it'll help SVXY drift higher as opposed to drag down.
Indeed.
Fun little product there. All right, AMD Iron Condor. Let's take a little look here. AMD Iron Condor, short the 245 put and short the 255 call expiring May 1st. Okay.
It's a little weird that this stock is like flat today.
Yeah, just not participating in this massive, massive rally. Kind of weird.
Yeah, I mean, it did participate prior. Just taking a breather, I guess.
Yeah. Yeah, I mean, this one's tough. It is, I assume it's like 5 points wide or 10 points wide or something like that. You're basically at max loss, regardless of where you are, if it's 10 points wide or 5 points wide. I guess if you wanted to, you could fly this off. So that would just mean moving the 245 up to the 255 and move the spread up. So if you have a 10-point wide spread, it would look something like this. If you have a 5-point wide spread, it would look something like this. You'd pick up a little bit of premium doing that. But that's kind of like the waving the white flag maneuver where you would end up with a narrow butterfly and you would need a sell off here and have it be near expiration for you to make money on this trade. So it's tough. But similar story, like now it's a downside hedge in this portfolio in AMD because you don't have much left to lose in this position. Would we entertain a short 80 strike naked put in Netflix in Jan 2027?
Jan 2027.
Jan 2027.
Wait, don't open it up yet. Dude, I was gonna say. Wait, I was gonna try to figure it out.
Go for it.
Wait, what did we say? Jan 80?
Jan 80.
$3.45.
$3.45?
Yeah, I don't know.
Let's see.
Ooh.
Pretty close. Love to see
Still
it.
Got it a little bit.
Still got it. Yeah, I don't mind it. I mean, To your point, buying power is $800, pretty low because you're well out of the money. So that helps your buying power requirement. Picking up $400. It'll be a slow moving trade unless Netflix rallies. Because as you can see here, $3.75 for the 80 strike, $2 for the 70 strike. So if you get a 10-point rally in Netflix over the next couple of weeks or month or whatever, you'll make about $200 on this trade just based on delta alone. So I don't mind it if you want to pick a strike to be like, hey, if Netflix gets down to 80, I'm just going to take shares anyways. Yeah, I think it's fine.
What did they say? Like, was it something with the guidance?
I think their CEO stepped down.
Oh, Reed Hastings did move off the board. Did he step down or he moved off the board, right? I think I did see that. But I just didn't know if they said something else with guidance or was that really it?
Yeah, stepped down. Reed Hastings, who previously served as CEO, stepped down from the board in April 2026 to focus on philanthropy, making a complete exit from daily operations.
Oh, wow.
Wait, so he basically said, I made so much money in spy calls that I don't need to work anymore.
Essentially.
Over the last 2 weeks. But yeah,
hey, man,
downside move in Netflix.
65, I mean, that's a good run.
Yeah.
65 years old.
I would say. It's quite the run. But yeah, I've got a call diagonal spread on Netflix, so I'm with you on the bullish front here. Would love to see a rally.
Yeah.
Let's see.
CEO of Netflix. Who's the CEO of Netflix? Greg Peters. It's been 3 years now? Damn. No, wait.
Greg Peters.
Wait, it's co-CEOs.
The
Ted Sarandos guy and Greg Peters. Co-CEOs. You've been through that before.
I have. It's quite the time. Lots of yelling. We used to say, Mom and Dad are yelling in the kitchen. Good old days. Tyler, looking at an AA 60-59 put spread in AA for 35 days out, so May 22nd. These markets are a little wide for a 1 point wide spread, 208 to 261, $1.80 to 223. I would just go to the May monthly. But if you're trying to keep it narrow, like really cheap, you don't have that ability because these strikes are 5 points wide. So if you're hell bent on selling a 1 point wide spread, I think you just got to really be careful with this pricing here because you could collect 30 cents and this could be a profitable trade, but you might have to give up 20 cents just to close it. So I don't really love this trade for that reason alone. I think you can find better opportunities with more efficient markets. Like you could do that in SPY or QQQ or something. You could do a 1 point wide spread with much more narrow markets where you don't have that same issue. Tesla covered call. Cost basis is 180. Wow. Look at you go.
Right.
Sold the 410 call May 15th, 2026 for $385. After a few days, the call is now $2,000. Correct. How should I manage this? Can I roll up the strikes to the next expiration? Yes, you can. And you are right at the strike price here, just a few points out. That's exactly what I would do. If you're trying to keep the bullish delta in Tesla and keep reducing basis, you can absolutely do that. And it really is as simple as you pay $2,000 to buy this option back at 410. Where in your next expiration, I just pulled up June as the next monthly expiration, where can you sell an option for $2,000 or more? Anywhere from 435 and below. So you could go all the way up to 435 if you're not worried about credit, which maybe you're not because your cost basis is 180. You can roll this all the way up to 435, still pick up a small credit, or you can go to 430, pick up a $2 credit, 425, 375 credit, et cetera, et cetera. So that's what you can do. And then same story, like let's say it keeps ripping higher and you get to 435, you could do the same thing. You could buy back June, roll it out to July or August or September, like whatever you need to do. You can always alleviate upside pressure with a covered call. Yes, we typically like to stay in that 30 to 60 day window, but hey, if your prerogative is to just let Tesla go to the moon, if that's where you think it's going, and you don't want to be capped out, then you have to keep moving that strike higher. But yeah, you have some flexibility with it still being out of the money.
Yeah, once again, I got to remember to do this for IBIT. I keep forgetting.
Yeah.
I'm going to do this now.
IBIT. I'm short NASDAQ, 26,848 entry point.
There we go.
Yeah, so you got about 30 points, which is certainly possible. But yeah, if you want to get short, we've had a historic rally to give you this high point. ANET. I haven't traded this in many, many moons.
Same.
ANET, 150, 140, 185, 190 short iron condor, 29 days out. So it looks like it's a little staggered here. 185, 190, kind of like a jade lizard setup. And we can show this here. You got a 10-point wide put spread and a 5-point wide call spread, so you don't have really much risk at all to the upside. Even if you get a rally through your strikes, you can see your P&L Theo is still green up here because this spread in the money with time left will trade at about $2.50. It's not going to trade at $5 until expiration. So the fact that you're picking up $3.40 will help you have little risk up here to the upside. So yeah, I think it's okay. You are in the earnings cycle. That's the only thing I would say. So you're not going to really get a lot of neutral premium out of this thing until the earnings are announced. So I might wait. If you're trying to play this for earnings, I might wait until earnings, which are priced into the May 8th cycle here with a 66% implied volatility spike. You can clearly see it's going to be in this cycle. So yeah, that would be the only thing I would say. Do you have any adjustments to that trade?
Yeah, no, I mean, that's the one thing I thought about initially is just being in the earnings cycle. I never loved those ideas. I think this is one name that actually has high vol on its own. I mean, you could totally put this on now. Again, reducing that risk to the upside, but you could probably put this on after earnings as well. This is the type of name that just kind of has a little bit of high implied volatility naturally.
Yep. Here's an interesting one. Is it possible to figure out in the options chain if there's more buyers or sellers of a strike? Of course, each buyer has a seller, but do we know if people are trying to buy or sell an option strike? There's sources, there's external places you can go for that. Do you have anything in mind, Jamal?
Yeah, I mean, look, one of our partners. Can you determine just by looking at the volume? No, I mean it's not easy, and I mean there's tools to do that. There's ways to sort of analyze it. At the end of the day, it's true. Nobody knows anything, but what we're looking at is just people expressing an opinion, just like we do day in and day out. And so there's tools. We do have a partner. Unusual Whales is a partner of ours. You can use tools to look at it like that. If you guys have seen on our YouTube page on the videos, Chris Vecchio and I have been doing this series called Signal versus Noise, looking at different trades, big, large trades that are happening and deciphering whether they're buying or selling. And again, you can determine that based off of where they execute the trade. Yes, there's a buyer for every seller, but if somebody, like in this case, let's just look at the 71.75 calls, 103.90, 104.90. If somebody pays 104.50, I mean, they're probably buying. And again, that's even a tight market. But if somebody plays, you can see somebody's bidding up 104.10 right now, right? Like you can see stuff like that. So it doesn't necessarily mean anybody knows anything. I mean, they're not going to move SPX, right? I mean, unless somebody comes in with literally 1 million calls, and that's crazy. But if like that's a huge notional trade, that will surely move everything. Outside of that, somebody comes in and buys 1,000 of these. I mean, they don't know anything, but they're just making an educated guess, and there are tools to do that. Like I said, Unusual Whales is one of them.
Yeah, and I think another interesting call out with SPX specifically is you can't own shares of SPX. So a covered call, like I would be shocked if the 7150, the 7200, this open interest in volume was majority selling. I think it's pretty clearly majority buying and speculation, just because like you can't have 100 shares of SPX and sell something against it. You can own long calls below the market and sell something against it, but like this is, more speculation. And to your point, Jamal, if you see the 119 stay at 119, and then you've got 118.3, 118.4, 118.5, 118.6, that's telling you that the buyers are coming in versus the sellers coming in, if that makes sense. But yeah, either way, I don't use
saw
it
all
as
those call markets go offered. Like it was just 118 and change. It went 117.80 because we moved down. Like,
Yeah.
So that's the fun part about doing those.
Yep. But yeah, I think at the end of the day, it's really hard to generate alpha with manual clicking, doing something like that. You'd have to really build out like an API system to be like, if this happens, then do this, which is possible. But I don't really pay attention to that because I'm just a Johnny manually clicking these things. But the name of the game is risk management and understanding what you can do to manipulate positions that have gone wrong. The ones that are winners are easy. 1 minute left here. Let's see if we can get a little rapid fire action here. I'm short a put spread on CL, 80.78, 27 days getting tested. Should I hold this or adjust? That's a tough one. Big move down here. 27 days, you're out here in the May 14th, 78.80. It's tough. It's tough. I mean, you could move it. If you move it out to the next cycle, you have to move it down further. So the N contract is 2 points lower than the current M contract, 81.40 relative to 79.20. So you'd have to buy this back, move it down to 78.76 if you were to delta match it. But yeah, it's a tough one.
Yeah, it's a tough one.
That is okay. Here, one last one. Short straddle and SLV 80 strike price June expiry. Should I adjust? I'm not adjusting anything. If you're out in June already, 62 days, and you're at the 80, you still have more room to run. I think if you get to 80, that's when I would consider, if you want to keep bullish delta, you can do something like buy back the 80, move it to the 85. You could buy back the straddle, go to July, make it a strangle with a little upside bias, do it for a little scratch or a credit. But yeah, I think that's a tough question, but you still have room to run here. So I would wait. That's what I'm doing. I'm at 87. So we'll see.
Mm-hmm.
That's it. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll see you same time, same place, 11 a.m. Central on Monday. Peace.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people wanna buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. What a week we're having. Another all-time high. Not only another all-time high, that's a pretty aggressive all-time high. So nonetheless, welcome back. Glad to be here. Brother Gus, how we doing today?
Doing good. Yeah, why not 8,000?
Yeah, no,
like a more and more real
might
question
as well.
with every passing day. Why not 8,000?
Why not?
You know what? Why not 9,000?
Send it to the moon.
Yeah.
Straight to the moon.
Well, let's just keep going.
Yeah.
You know, we need to. This is about time we drew some moons on the trading view charts.
I think so. On the indices, right?
Yeah, on the indices. We'll have to incorporate some of those today. But
crazy
no,
business.
I'm doing well. Crypto catching a nice bid, which is always nice for me. Anytime, and these have seen few and far between as of late. But anytime crypto and Rivian are both massively green in the same day, know my portfolio.
I thought both which one and Rivian and which one?
Just crypto.
Oh, crypto. Yeah, absolutely.
I bid or Bitcoin creeping up a little bit for me.
Yeah.
I still have these MicroStrategy longs in that regard. I'm deeply long IBIT. I have the long ETHA, and then of course I'm deviously long Rivian, which is panning out pretty well for me as they're up another 3% today. I'm always scared though, because as I say, every time Rivian does this, this is what Rivian does, and very often it is not able to hold these gains. In fact, one might say all the time it's not able to hold these gains. but looks to be on a pretty decisive climb at this time. Oil finally starting to come down a little bit substantially for me here, which is nice as well. I still have all these USO shorts on. These three I feel fine about at this time. Obviously, the bottom one is green as it stands right now. This one might be a little bit too short dated. I would need like 2 more days, like this day that we're having today in USO to really bring that one to fruition. But this is a good start. If we could get, I would need something crazy. I'd need a break below 100 or something like that. But this has gone from pretty much 0 to having at least some notional value. So feeling pretty good there. Rivian, as I mentioned, I have 12, 25, 30 calls, the longest of them being a 30 at 644 DTE, all leaps. Rivian logging another good day here, coming off those highs a little bit, tested the 18 level, sinking back down. But just come on, man, just go to 25.
Yeah.
What are we doing? Why are we wasting everybody's time? We know you're going to be at 25.
Nobody's going to notice. Everything's at all-time highs. Nobody's going to notice.
Just go to 25. It'll be a blip on the radar. Everybody will be back to talking about Allbirds lickety split.
Yeah, they seem to give back a little bit of their games. Allbirds has tried to pull back a little bit. What's going on, Brett? Brandon, Andre? He said, we cooked. You cooked, Andre. Brett, Ranch, what's going on, guys? But no, Allbirds has given back about half of its gain from the spike, but it kind of feels like a pressure cooker right now when it comes down to Allbirds. So I'm kind of just watching it from a distance, but this one's still been on the radar, no big gains like the indices, but it's holding, 50%, given the move it's had.
Yeah. Andres, I'm interested to hear if we're talking about we cooked as in we cooked in the past and now we are up, or if we cooked as in we cooked right now and we are down.
Oh, right.
There's two different interpretations that you could have on that one. This Allbirds move, like I said, I really wish that there were options available for Allbirds. I would be slamming the shorts on this. The more that I think about this, Errol and I shot a video on Allbirds that's just going up tonight on the Tasty Live YouTube channel, Allbirds and the 4 biggest pivots in the history of business. Be sure to tune in for that. But as we were shooting that yesterday, and then I was thinking about it as I was reviewing it today, this is so fugazi. This can't work, right? There's no way that this works. The biggest thing to me is just that these executives couldn't make a sneaker company profitable, successful. It crashed, it burned, they closed all their stores. And now we think that they're going to be able to get into the most competitive, most expensive field in the entire world and do anything?
It doesn't make sense, but this is why I'm a little scared in terms of like uncertainty. Like, what if they do something? Because that's such a bold pivot. I mean, you made a comment the other day. You're going to have to watch the video as to what Gus was mentioning, but you made a comment when we were filming that these guys felt like they were kind of more tech bros. I forget the phrasing that you used, but they always kind of wanted to take this kind of avenue. So I don't know, what if it's their big break and they're like, yo, finally we got to build a business we're passionate about. But you made that comment and I thought about it. I was like, that's a good point. You think it's still a little bit out of their wheelhouse?
I think it's imposter syndrome going on with them. I think that they think that they're like Ryan from The Office is like kind of how I'm viewing these guys.
I gotcha.
They think that they have all the answers and that they're just going to automatically be successful, but the reality paints a very different picture. Now they're getting into GPUs. I don't know. We don't need to beat
we'll see
here. But if I wish I could short this. The shares are too expensive to short, but I wish that there was a way that, not inherently expensive, but margin expensive to short.
Yeah.
But if there was a way that I could get considerable short exposure to Allbirds right now, I would be taking it and taking it in the long term, because I think that this excitement will hang around for 3, 4, 5, maybe 6 months. But I think a year from now, Allbirds is right back down here.
Baked beans, cooked.
Cooked. I think so. I think this is just a momentary reset. Perhaps even a little bit of a. I don't want to use the vernacular pump and dump, because I do think they're actually going to commit to this change and see what happens. But perhaps a way to generate some excitement so that people with large swaths of shares could take some of those profits and get a little bit more out of it.
I wonder who internally in the company sold on this spike. That's what I would be curious about. But we'll let it be as is.
Yes. Anyway, that's the synopsis there. Other than that, not a whole lot to report on here. Kind of hit all the high points. Meta, again, don't look now at these 715s are absolutely in play. Meta just keeps on moving to higher highs. That's one that I kind of am like, I'm trying not to look at it. It's like working when I'm not looking at it.
Right.
Like when you try to turn on the PS2 and it doesn't work, so you gotta look away. You gotta look away. Yeah, exactly.
Same thing, you buy stock, you gotta look away real quick. It might go up.
Yeah.
You're looking at it, it's gonna go down.
It's true. Schrodinger's stock, if you will. The losses aren't real until you see the losses.
Exactly.
It could be a gain or a loss until it is.
What is that? See it theory? We might be onto something there.
Well, it was talking about like states of states of matter. Somebody give me a synopsis of what Schrodinger's thesis was. It's something like particles can exist in two different states until observed. He was trying to prove that with the cat. But your positions can exist in two different states until observed is really the point that I'm making.
I mean, it's so funny because some people might look at the market depending on the time frame. Oh, it's cheap right now. Or some people from a different time frame might be like, yo, this is mad expensive. But it's the time frame they're looking at it from. So
that's true. The market is overvalued and undervalued until
at the same
observed.
time.
It's true. But yeah, Resolute logging an okay day, not quite making up yesterday's losses. And this Salesforce position that I put on recently is going pretty swimmingly. Still a ways to go in a fairly short amount of time with 42 DTE. But if this thing is going to get over 200 in the next 42 days, this is kind of the way that you would hope it happens. Moving up with red candles is always a strange one. Keeps opening higher and moving lower, but then it just logs the next high the next day. So I guess the excitement for Salesforce happens after hours, but as long as it keeps closing higher, I'm fine with however we get there. You know, your position cares not for how it was attained.
No, nobody's going to remember how you got there. They're just going to know that you're there.
Yeah,
there you go.
Yeah, you can have the ugliest shooting form in history, but you know, threes go in.
Was that Lonzo?
Lonzo was terrible.
Marcus Camby back in the day.
I think about Michael Kidd Gilchrist had like a really.
That's a tough one.
Sean Marion, a lot of
Marion
shooting forms. And NBA
Hall of
history,
Famers.
but they're in the freaking NBA, aren't they? But yeah, that's pretty much all I got on my end. What kind of activity you've been slinging over there?
Yeah, we can jump over here to the Tasty platform on my end, but honestly, really nothing. Honestly, just managing these positions and just kind of thinking about how we're going to attack next week. Right, we're down about $1,200. Most of these contracts are going to expire worthless. So now we're in a $1,200 drawdown. So we got to think about, coming into next week, which opportunities are we going to key on, focus on, because we're $1,200 down from the all-time high of the account now, which is a bummer. It sucks. Comes from some of the swing positions that we put on. But just going into next week, I think the mindset is just more so going to be don't try and pick off the top of the move. Wait for the market to pull back. Wait for the market to develop new value higher, and then maybe we'll go from there. But this is how the cookie crumbled this week. And we put on an amount of risk that we were comfortable with, and the market squeezed us to the highs. So anybody that was long, you're welcome. Sold you guys some of those contracts and maybe helped with the squeeze to the upside a little bit. But then we got Micron as well. This one's going to expire in about 28 days. So maybe next Friday we'll start to manage these positions. And I mean, we're up about 7% on the day, so we're getting a little bit of it back, but it's been a little bit more of a lackluster position. It is defined risk. So 28 days, we are pretty much down, 75? I'm going to just go 75-ish% on this overall position. So I'm pretty much in the predicament where holding this one for the next 28 days is going to be in my best interest. Maybe this goes back down $100. Maybe we get a break even, or maybe we squeeze out a few bucks. But that's going to be the game plan for Micron. But overall, just the indices in Micron. I have to check out SanDisk as well. What's SanDisk been up to?
SanDisk, just continues to chug higher, seeming to hold these gains over 900 right now. I actually just put in an exit order for my SanDisk position, but I'm probably going to get caught bag holding on that one as the mid price is well greater than the spread width at this point on those verticals. Makes it a tough situation to get out of. But just keeps on chugging.
No, it does. I mean, I'm in a similar boat here. So I was like, I haven't even checked out SanDisk. What has it been up to? Who's dragging these to the highs right now? So we'll see what we get. Really try to take out my dollar hedge stop. You trying to do a little bit of adjusting in the aggressive moves today? Maybe they should implement a 4-point shot from half court.
I think that's been talked around.
I've heard about that before.
They do it like in the All-Star game, I think.
Do they really?
There's like 2 spots.
Yeah.
Maybe they did that one year.
Steph Curry's like, I got to take 2 more steps back. Okay. I wonder what kind of pie Costco is selling today. I could use a giant apple pie for the weekend. You know what? That makes me a little bit hungry there.
That does sound like a good weekend to me.
It is.
Costco has good baked goods.
Do they have good baked goods?
Streets are saying. I don't have the Costco membership myself.
Okay.
But I have lots of people around me with Costco memberships, which is kind of the best place to be. I say the same thing about dogs sometimes. It's like, I love dogs, but having a dog is a lot of work, especially in the city. You got to take them out of the apartment, let them use the bathroom, walk them, keep,
You said you don't have pets?
Vacuum up the hair. I don't have any pets right now.
You're not allergic?
No.
Oh, you said right now, so maybe sometime in the future.
Yeah. I've been flirting with the idea of some cats for a little while. Cats, much more manageable, much more self-sufficient.
Completely agreed.
Especially in the city, you don't got to take them outside. But I love dogs.
Yeah.
The point is, it's nice if you just have a bunch of friends with dogs and you get to see dogs like every day, but you don't have to do any of the responsibility of dogs.
No, absolutely.
Perhaps the same thing extends to children. Honestly, I just don't have many friends with children yet.
100%. If you have some friends with children, you'll hang out with them and be like, they're so cute, and you'll be like, I can wait a little bit at the same time. So it's a both ends of the spectrum there. Enjoy the rally. What's going on, Nice Boy? Yeah, hoping you're enjoying this rally. I mean, we can even take SPX, or we'll go to NASDAQ, just because those are a little volatile and they kind of exaggerate the moves that we're seeing here. But I mean, if we go to a 1 minute chart, you can really see the aggression, I mean, in the market. So this is about 7:30, an hour before the market opened up. 7:45, we shot to the upside. If I'm not mistaken, I believe there was some Iran news as well. So this isn't taking into account some of the fundamentals at the same time. But we just continue to make higher highs, higher lows, higher highs, higher lows. We tried to consolidate for a little bit here. Maybe a lot of short sellers trying to pick off this top right now. But if that's the case, we might see another squeeze to the highs. But even if this is going to be the top, I'm not going to be the one to find out. And even if we were to make money on it, I don't feel comfortable in that position. So we'll stay patient over here.
Yeah, this is weird. I mean, this is particularly weird headed into the weekend. There still is some headline risk, although it seems to be decreased. But we are just in a really freaky spot here. I'm like, I mean, in SPX terms, I'm not surprised at all if we open 7,300 on Monday, and I'm also not surprised at all if we open 6,800. Like, a lot could happen in either direction. It's crazy times.
The team was going crazy with the volume profile. I haven't used the volume profile on the Tasty platform in a while, but it's really smooth. That worked really well. Wow. That surprised me.
Kudos to the dev team.
Nice, yeah.
We'll have to walk over there, give them some fist bumps.
Shout out to the team. So we have the range profile now. I don't think we've ever had the range profile, but now we do. We can take it and we can just, adjust it to where we want it to be. I haven't played with the settings yet. I don't really like how thick the volume nodes are, but I'm sure we can adjust that in the settings. But it caught me off guard. I was like, let me just try this, and then it did it. It's like, okay, this is pretty nice. But no, just taking a look at where most of the volume was traded on NASDAQ today. So we're getting a little bit top heavy. I know we've had the runs in the morning, but now the most volume was traded at about 26,835. So may see some type of directional movement here. Once again, I'm not going to be taking any part of it. You guys got to get busy and have some kids. Gus has to get busy and have some kids, or when Gus is old.
He said you guys. This isn't targeted at me.
Oh, my bad. I'm colorblind. I didn't realize. You guys got to get busy and have some kids, or when you're old like me, you won't have anybody to get your slippers or untie your shoes when you get home.
That's true.
I used to do that for my dad a little bit here and there.
It's true. Yeah. You're closer on the.
Hey, man.
You got step one.
All I'm saying is
I'm on step 0.
That's true. All I'm saying, it happens when you least expect it.
Oh, sure. So I suppose that's
before you know it,
you're never ready, and then you just are.
Exactly. But before you know it, you might be on step 2, step 3 before me. So, no. Anyways, with that being said, we can go ahead and jump over to the TradingView platform to check out some of the cryptos on there. Let me clear my throat. I'm sorry.
Good. I didn't bring enough water in here today. I'm rationing my little bit.
Oh, are you? You're just taking little sips. Let's remove this. Remove this. We can even go into some of the settings over here as well. We could adjust the width. This is probably going to bring it out a little bit more. And this value area should be 50%. We're going to change that to 70%.
Is that going to be wider?
Okay. That's pretty cool.
Oh, interesting.
Okay, yeah, just playing around a little bit. See
it live.
We can adjust the colors. You got any preference in color? What's your favorite color, Gus?
What's my favorite color?
Yeah.
Nobody's asked me that in a while.
Yeah?
I got to think about it.
I was like, I've never asked you that.
Well, it doesn't.
Got to go back to the basics.
It's not conducive to this at all, but I think I've kind of shifted into greens. I like a lot of greens as of late.
I like it.
I would have said red for a long time when I was a kid, but I don't know. In general, I've been liking the greens. Nice deep green, forest green.
Yeah.
Like this color.
Can't go wrong with it. Oh yeah, no, this dynamic profile is actually, you guys are watching me use this and play with it real time, but I mean, it's actually really smooth. It's actually really smooth.
Live demo of how you can learn to do this volume profile for the first time.
Yeah, absolutely. But anyways, with that being said,
it's cool. I like the highlight on the tallest one.
The point of control right there.
Yeah,
is that green?
Yeah, that's green.
Okay. That's what we just changed it to.
Yeah. Green might not be best to be locked over the chart.
What about yellow? How you feel about yellow for the point of control?
Yellow works.
There we go. We'll do that. Keep it as is. See if we can pull this over here. Pull this over here.
That's nice. It can be tough to discern.
Nice.
Control is.
Nice. Yeah. It's nice to have the volume nodes a little bit thinner, just because you can get a little bit more precise.
Yeah.
You know what I'm saying? But we'll play with it another time again. Check out crypto and Bitcoin, see what they've been up to.
My favorite colors was for kids.
You catch the move.
You can have a favorite color, big deal. You're allowed.
Yeah. You catch the move, Errol? No, big deal. I didn't pull the trigger long. kind of just sat on the sidelines for the last couple of days. And I got to admit, I was talking to Jamal yesterday. I was like, yo, this has been one of the most painful weeks. Like sometimes sitting on the sidelines, just like, no way the market just put in 2,000 points in 5 trading days. So really just trying to get through this week, big deal. But no, didn't pull the trigger on any longs to the upside for all-time highs.
I have his portfolio long to the upside, but did not do anything with the leverage to fully take advantage.
At least you were leaning over there. But let's zoom out a little bit on Bitcoin here. We got a little bit of a spike. Again, not sure if this is from the Iran news this morning, but 77,000, 78,000. I think a little bit of a nice relief pop for the crypto boys. So we've been consolidating a lot over there.
I guess I'm a crypto boy.
Yeah. Thought favorite colors are for kids. Come on, big deal. Come on. Your name's Big Deal Donuts. I'm just playing.
Yeah, this is the first significant little run we've gotten in Bitcoin in some time, though, testing the 78K level. Last time we tested 78 was March 13th, so a little over a month ago, and the last time we held above 78K for any meaningful amount of time was in late January. So been a little while since we were at these levels, and yeah, a nice little bid coming through. Bitcoin taking the stairs up. Once again, as we've alluded to a lot, just moving like a stock. I mean, this just looks like nice, slow, controlled gains. I mean, if you just showed somebody screenshots of this chart on Bitcoin and the current chart of the S&P 500 and said, which of these is Bitcoin and which of these is the S&P 500, and you didn't tell them it was current, I guess.
Right.
I think a lot of people would get that wrong because the S&P is making a crypto-like gigantic run to the upside right now, while Bitcoin looks a lot more contained.
Oh, it most definitely does. And I mean, especially it seems the most stable outside of all the assets we've been looking at. Traded 0 DTE car, now I need new underwear. Still came out positive. Hey, man, if I was undefined risk on some of the positions this week, I probably would have bought some new underwear by the end of this week as well. So underwear sales are up this week, no doubt.
Car just keeps on chugging. That's just insane. I mean, we're up over 400% now. Just keeps logging higher highs. I'm happy I wasn't able to get short earlier this week when I was flirting with the idea of doing it. I assume it's no more attractive to get short right now than it was then. Yeah, that's looking at mighty untradeable to me at a glance. But
yeah, we'll be hands off there as well.
As awesome as this would be if you're an employee or the CEO of this company and have a bunch of stock, and as I mentioned before, the CEO controls like 90% of the float on this. He's got a ton of
I was waiting to retire once it's hit 500.
For real. But it would suck to have to give this earnings call on May 6th for this company.
Yeah, absolutely.
What are you supposed to say?
I mean, is this? I mean, would you rather be in this predicament or Netflix right now? I think Netflix has been taking some dips.
This is a good problem to have. Netflix is recovering nicely, but yeah, it was dwindling for a long while. What was it? 1 hour? Oh, did Netflix have terrible earnings?
They did. They gapped down a little bit, but they've been holding, and they've actually been holding most of their gains.
I think Jared said that he was deeply long Netflix for earnings. So my condolences to you, Jared, if I'm remembering that correctly.
Jared's at the store getting some new underwear right now. No, I know we had that gap up over here end of February, and then we gapped down, but we're still holding that initial gap from the upside. So I don't know. I still kind of think that there's not much of a behavior change. I mean, we put in the low February 23rd. We make new lows on Netflix. Things might get a little bit dicey.
That chart should be a poster. That's some amazing graphic car. Meme stock. They just came out of bankruptcy. No real move at all. CEO should be buying puts hand over foot for real. But yeah, no, absolutely not a real move. I'm not in any way saying that this is substantiated. And in fact, I wish that there was a way that I could get short. I think if anybody can find an attackable way to get short this stock, please drop it in chat or tweet at me and I will see it. Gains by Gus on Twitter. But I would love to get short this Avis like 3 months out. There's no way that this is real at all. I mean, I don't know how much longer you can possibly sustain this. Maybe another week or so. But this thing craters down to like 200 as soon as it runs out of momentum here.
Some live musical chairs right there once again.
Yeah, I mean. Yeah, we started this run at pretty much 100 on the nose, so up like 463% over the past 2 weeks as it stands right now. But yeah, I think 250 is like immediate whenever this thing decides to dip. I know it was a short squeeze initially, but are shorts just trying to cover over and over here and getting squeezed out again and again? How is there that much money propping this up to the long side? I know the institutions aren't participating in this rally right now. I wouldn't think so.
I could imagine some shorts maybe.
Yeah,
some shorts trying to pick off this move. Like you mentioned too, the CEO owns about 90% of the float. Good Lord. share some of the share some shares with the public.
Yeah, I will say there's always it's grounded, but there's always some element of like, sticking it to the man when there's a short squeeze. Like these institutions and the retail investors get to take their money.
There's such a go ahead.
The reality is that these institutions never run out of money, and all this does is just present them with a much more profitable opportunity.
Yeah.
Because the retail momentum can't keep it up forever. And like I'm saying, if these things that I'm saying, the institutions are well aware of, and they could probably tell you the exact price to the cent that this thing is going to drop to when it eventually runs out of steam. And so all it does is just they have to post up more money, and it's annoying and it hurts the books a little bit in the short term. But eventually it craters, and they're always just right there, re-levered up.
I know there's some market participants where short selling rubs them the wrong way. But I mean, once again, at the end of the day, short sellers provide extended moves. I mean, it's just like the long position too. So they really do work against each other. I mean, CAR probably wouldn't be at these prices if it wasn't for the short sellers. And even maybe the indices, even maybe NASDAQ and S&P 500, if there were no short sellers, they're the fuel to the fire, right?
Well, I mean, yeah, and you need short sellers to get filled on your longs.
Right.
That's how a market works.
Right. When someone says it, you're like, all right.
But yes, you're right.
Peptides fixed my autism, but I think it affects my Lex Disa.
Sure. Lex Disa is this?
Oh, I thought that was. Did you mistype that big deal? I assumed you mistyped.
Like Lysdexia?
Yeah.
We're saying like it's. I see.
That's what I assumed. Don't let me assume on you though, big deal.
Okay, I'm with it. Dyslexia joke.
There's a wait along Costco Gus over there.
I'm trying a Call BWB and CAR. Tough to get a fill though. Yeah, tough to get a fill is just the name of the game in this company. I've tried and tried and tried, but I can't. There's just no liquidity anywhere. The spreads are so wide, it's insane. I mean, unless I want to just YOLO half the port and buy a naked put, but I'm not going to do that. Gus, there is a way. Go to Costco and buy a pallet of new underwear. Need an underwear guy. I have a 380, 370 put debit spread in CAR that I couldn't even exit when I was 40 points in the money. Yeah. Yes. That's I'm it's good that you were able to get that on, but yeah, if you can't get it out, you're basically just stuck holding the bag the same way. The liquidity is just unfindable. And if the naked puts were like reasonably priced 60 days out, I would be inclined to just fire on one, but it's like, like take this 150 put at 62 DTE, for instance. It's a 550 bid, 790 ask. So like, am I going to go 800 notional for something that's $300, 67% out of the money, even though that is one standard deviation at 62 days out? I would have to go that far above the mid to get filled in the first place. It's a long put. So how aggressively do we have to collapse? Because we know the volatility is going to get sapped out of this thing here pretty soon. So I just, scary. I don't know a good way to do it. Oh, CAR set to closing only as well. Yes, I do keep forgetting that.
Risk is absolutely to the upside on CAR. Look at that volatility expanding as prices rise. We'll see what we get. Musical chairs live.
Yeah, Bob saying Tesla short and CVX long.
Yeah, Tesla popping over the last couple of days actually.
Tesla is on a nice run. And then I know Chevron, XOM, both pretty beaten down on the day today with the broader oil market.
Yeah. So we get anything else top of mind before we start to wrap for the day?
No. Be sure to tune into Aeroline YouTube video tonight at 6 p.m. I think I don't know exact time. tastylive YouTube channel. It's fun time.
Yeah, check it out. I think SPX under 7,100 by close, or is it just my position? I don't know. I mean, I wouldn't put anything out of the wheelhouse. I think anything's possible. I mean, we got a few hours left till market close, but at the same time, I'll be sitting on the sidelines. Ryan, big deal. Up onto Ryan, Bob, everybody else. Taco, I see your username. I haven't seen you before. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out tastytrade today.
We never give up. And you know we're getting crazy now. We're gonna show you how. We'll do it even if it's not allowed. We're gonna show you how. Yeah.
Yeah, and I'm fun on the block all day, all night. Ends in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, the heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, roll up, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night.
It's time. We're back. It's Friday, April 17th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, the last of the bears are being taken out back, sent out to the farm, sent upstate, whatever you want to call it. Tough day out there, huh?
I mean, this is why when you fight a market, you do it with ETFs and not futures, with more duration, not less, with risk-defined exposure, not undefined. This is why you do it, because you don't want these kind of problems. This is why you balance it out with exposure in the dollar, because you don't want to have these kind of problems. You don't want to have days like this, obviously. Thankfully, I've taken all of those precautions. So yes, this is an L. It's not a big L. And actually, I'm net up on my shorting stocks for the year. Thank God I peeled off most of that exposure when we were talking about reloading duration. So these are new positions that haven't had a chance to go nuts yet, thankfully. But I definitely laid on some bullish exposure today, not in stocks, because to chase this would be on a Friday would be a little crazy. I took off any opportunistic shorts I took this week, though. So what I have now are kind of small, basically max loss positions that amount, I think, cumulatively to something like 3% of equity in losses, which is abundantly manageable. But and that was the whole idea, was worst case scenario, this is what happens. And this is not a worst case scenario I'm terribly concerned about. Obviously, it'd be better if it wasn't, but that was the whole logic. If you're shorting at the high, you're wrong fast. So when you're wrong, get out. And
well, a lot of people are trying to step in because Huth had 12 days in a row up on their bingo card for the NASDAQ right now. Bulls have been. You got
to trust the price action here. I mean, the price action is telling you exactly what there is, and those same people, you got to ask them: did you have on your bingo card that Iran would open the Strait of Hormuz and announce
it? Open?
No, but that doesn't matter.
No, it doesn't matter. And the Bulls have been eating today. They've been feeding on these tweets, comments from President Trump.
Of course, it's not open.
I think we saw 12 posts on Truth Social so far today from President Trump, many of them cheerleading progress towards a deal with the Iran war. In the past 15 minutes, he's been out on the horn saying that we could sign a deal with Iran this very weekend. Now, Iran is not suggesting the same. They're saying they're still in very early phases, that straits passing through.
This is going to be an interesting rug pull on Sunday when maybe there is no deal.
Maybe. But the market's embracing the idea that we're in that trajectory. So bulls have had plenty to stay busy with today.
Yes.
Stocks extending to fresh record highs, S&P 500, your NASDAQ up at fresh record highs in the cash index. Gold's getting a bounce, silver's getting a bounce. Oil is off 10% with these headlines that we've seen today here. And with it, volatility has contracted across the curve.
And if you don't want to chase this, by the way, as I don't, there are risk-on exposures to be had here that aren't stocks, and I am now in them.
Well,
because
we'll talk about them when we get to the appropriate
speaking.
Sections of the show. We'll get them when we get to the appropriate sections of the show. So we're going to the spotlight first. We're going to what's happening next week, because next week we may get some reminders of some of the problems that this war has caused, even if bulls are on parade right now. Several inflation readings due out over the course of the next few days. Canada, UK, Japan. Japan, of course, a very interesting one because they import more than 90% of their energy. Ilya, perhaps this is old data now, right? We had this issue with the last round of CPI reports where we were looking at the data and saying it's for February, it's before the war. I mean, how seriously are you going to take it? It doesn't necessarily reflect all of the data. Now we're going into the March prints. The March prints, of course, do reflect the war, but the CPI for the US was while the war was still going on.
And frankly, only kind of. I mean, the March data that we've seen more so reflects the oil run-up from January and less so the more hysterical one from late February onward. We haven't really seen the war as such. Even in the March data, we've seen maybe January through February of oil creeping higher, not the explosion.
Well, to that end, now that oil is coming back in and it's coming back in again 10% today or so, you're going to start to see the shift month over month in some of the inflation figures moving forward where they do get dragged back down. We're obviously not looking at an environment where prices are up 30, 40, 50% year over year. To see a sustained rate of 1% month over month inflation if oil prices are coming in is unlikely. So throw out those 12, 13% annualized fears if that persisted at a high enough level. So Ilya, I guess the question is, this is a market now that is taking a step back from the geopolitics, obviously, as being the sole driver. It is one among many inputs right now, with the micro of earnings having a greater sway, with perhaps some domestic fiscal issues beginning to have somewhat of a sway. There may be a refunding facility for the tariffs opening up soon for Treasury, which that will be a whole new ball game for the long end of the yield curve. What matters most next week? Is it still watching the Iran war? Is it the earnings that are due out? Is it this macro calendar when it comes to the futures market?
Well, so in my mind, you kind of have to go back to first principles here. Obviously, everybody is screaming up and down about the war. Of course, that makes sense. Let's begin with, where were the markets all of last year? And how did that take us to this year and into the reaction to this war? And for me, and we've talked about this a little bit before, the reaction in gold to this war was really the telltale sign for how the markets were looking at the war. And whether it was a war that they were looking at or the same old interest rate narrative that they've been fixated on since April of last year. What was the main feature of the rebound after Liberation Day? Markets started to pile rate cut expectations into Fed funds futures because what they got was a real quick next breaking seesaw in the tariffs. The tariffs initially started to look like a very clear-cut thing. Oh, we're going to have some tariffs. The rollout of the tariffs is not good. This is going to be a growth risk because it creates uncertainty. Okay. All that makes sense. Risk off, rate cuts, got it. Then we got the quick reversal that birthed the idea of there existing a taco trade dynamic. This is sort of where this was born. The markets don't let go of rate cut expectations, though. In fact, they just add to them. And the economy is doing fine. And the tariffs are being wound back. So why do the markets want the cuts? And we've been going back and forth going, well, the reason the market want the cuts is not because something is wrong. It's because they're juggling all of these things and they don't know which one is going to fall at any given moment. What they want is insurance by way of cheap money. Okay, how do they then react when Powell tells them there's not going to be as many cuts as they want? S&P stops and doesn't go anywhere between October and when the war starts. Then the war starts and gold sells off, whereas just a few years ago, a war started in the Russia-Ukraine theater, gold surged, as you might expect. Why did gold sell off? Well, because the impact was crude oil to inflation to higher rates, so no rate cuts. So gold came off. Where are we now? Still no rate cuts. So the market is rallying because la-di-da. Now, apparently, both sides of this war, and I think that this is substantive. I don't mean to talk down that it is very substantive that both Tehran and Washington have decided they are going to call chicken in unison. Because everybody blockaded everybody straight and said, all right, well, if you can't have it, you can't have it. And if you can't have it, nobody can have it. We're all going to burn on this thing together. And then everybody went, okay, let's not burn on this thing together. Let's just everybody collectively walk away. That's substantive. That means something. But also, we're not going to get an unclenching in inflation for months. If this year. It's just not going to happen. But the disruptions were too great. And in any case, inflation at the core, forget energy, forget food, has been marching higher for 3 months now. In services and in goods. So that Fed bet that goods inflation was going to rebase out of the calculation. So far, it looks wrong. So, okay. If we are going back to this idea that what matters is rate cuts and there isn't any of them, what happens when the dust settles on, ceasefire? I'm not sure. But either the markets are going to get comfortable with the fact that they're not going to get these rate cuts and they're just going to have to live with 2 more years of policy chaos without them, or they're going to get disappointed like they were all of last year when rate cuts didn't seem like they were coming.
If the Fed had listened to Trump and cut rates by now, we'd be 100 basis points deeper into the hole and the Fed would be hiking rates.
Yeah.
To deal with the forthcoming inflation problem.
Yeah.
So I think personally the Fed story, today the Fed story is coming back into focus. The market is now with today's ceasefire news. And just a few minutes ago, a senior Iranian official noted that while no deal has been reached, it is possible that a preliminary agreement is reached this weekend and the ceasefire is extended beyond April 22nd. December, this is a shift. Yesterday, June was favored as the most likely month next year to see the first 25 basis point rate cut. Today, it's December 2026. So that's 7 months, Ilya. 62.6% chance of a 25 basis point rate cut by December of this year, 45.5% chance by October, 35% chance by September. The market went from saying nothing happening this year and you may need to look at hikes to if this is simply a flash in the pan where we had a rough 6-7 weeks of higher energy prices and now oil is going to come back in below 85, 80. I know oil is higher than it was at the start of the year at like 55, 60, Ilya, but $75 or $80 oil for a few months, no one's going to get bent out of shape about that.
No.
At least economically speaking. We are going to have to go through a period where we rebuild reserves, but right now, 71.64. At the start of this week, we had that cap open lower on first call. We wondered if it was going to be a typical war week where we had the reversal higher on Monday. And then this week, we've just been fed positive headline after positive headline. So over the course of this week, scaling out and today out of any directionally neutral things and anything that was remaining from the early days of the word. So I don't want to look at the 7,200 strike touch. The 7,100 strikes were busted. But I'm also hard pressed to believe that just 4 days ago on Tuesday, I put on the long 8,000, 8,200 call spread in ES. And now we're 20% of the way there. And there's still 260 days to go to expiry. So I didn't know if this thing was going to continue to run higher in the short term. I thought it could. Could it reverse? Absolutely. I'm just trying to keep a North Star on right now to make up for lost ground over the past 2 weeks where a generational move missed.
I mean, maybe. I think we have to be very open-minded here. I don't think that there is anything easy from here. It's not easy to be a buyer of this market after it's rallied the way it's rallied. It's not easy to be a seller either. And if you look at the way that you've seen volumes break out, I mean, this is very kind of soggy participation. If you look at the...
It's good. 1.26 million contracts in
look
ES
at
at
the
this
past
time.
4 days in ES. We're looking at the lowest volumes since Easter weekend. This is not great. This is not conviction. When you look at
the biggest volume day though in the trend is here on April 7th.
Yes.
Right? Like you get your break out of your initial...
from that, we keep limping as far as volume. We keep soaring as far as the levels.
Well, can I put something into context here? I know at the start of the week we were talking about, and my personal plan at the start of the week was I thought the markets would stay open lower. They'd pull back in maybe to 6,600. I'd be able to get long there. Instead, I had to get long at a longer dated call for for many months out because the market just didn't weaken as much as I thought it would.
Yeah.
We noted how over the coming days we were going to see, at least $30 billion worth of buying from CTAs, which are spread across a number of products like SPY, SPX, VOO, IVV. It could be a cushion underneath the market on any sort of pullback, Ilya. That was the thesis on Sunday on First Call. Over the past few weeks, over the past 2 weeks, we've seen CTAs purchase $80 billion worth of stocks, according to Goldman Sachs. There's still potentially another $76 billion of CTA buying due ahead, thanks to the aggressive shift of momentum in this market. Now, I'm not saying I don't follow CTAs here, although if we've been watching this as a particular gauge recently, these premonitions that the CTA buying, the momentum folks, could be pushing this market around. If you followed that last week and got long on that basis last week, you've had a pretty good week here so far.
It's worked, yeah.
Does that incentivize you at all, or does that keep you point in the direction where if you're trying to fade this market, there is this mechanics underneath the surface right now in the short term, at least, that may be keeping things elevated? Because we've gone through expiration and now options expiry on Friday, and people are still eager, hand over fist, staying long, getting long.
I don't think you should be fighting this market or looking to fight this market, because the price action is telling you very clearly that if you thought, as I do, that this thing is built on sand, you might have to wait a really long time and suffer through a lot of unnecessary pain. And as traders, unnecessary pain is not what we're looking for. It's not about being right. It's about not losing more than you gain. And fighting this market, you stand the risk of losing more than you gain. I was fighting the stock market all year last year and yet had a profitable year. Why? Because I didn't just fight the stock market. I also traded other things. And when the stock market bets didn't work, I didn't re-up on them. I kept them small and risk controlled. And when the other bets did work, I doubled down and tripled and quadrupled down on those. The US dollar selling off was easily the biggest one. And so I walked away with a positive year, despite being on the wrong end of a stocks rally all year long. This is not about being a hero or having some sort of intellectual victory over the stock market. That's for the birds. We're trying to make money here. This market is telling you not to fight it. There's no reason to fight it. I've got 43 days to expiration in my shorts. They're at max loss, and that max loss through structure was made expressly small. fine. It can expire worthless. Name of the game. But at the same time, I'm also not going to say, oh, well, I was short, therefore I must be right, therefore I must load it again. Dollar cost average. I really loved being short at 6,000. Man, do I love it at 7. That's just ridiculous.
Sure. No,
it would be crazy to fight this market here.
I mean, I'm just like, I was putting this in terms earlier to someone. The S&P could drop 10% right now.
Yeah.
And it wouldn't break the lows that we had at the end of March.
Right.
Right. And then again, over the course of this week, we've reiterated the stats a few times, gathering, collecting them from various places, and of course, double checking on my own to make sure that they do line up, because I'm not going to just repeat numbers I see. But for more highs and over from Carson, from Ryan Detrick, the things that stand out here for me, how this rally has unfolded that make it not just like a V-shaped rebound or a bear market rally. And I know you and I have gone back and forth on this, but I just considered the fact that the scope and scale of this rally that has occurred over the past 10, 12, 13 days, Ilya, it's just not something that occurs frequently in history when things are going bad. I know too fast.
Or ever. Good, bad, indifferent.
Right. And in the midst of this, the one from Carson Research, the 7-up stat, 7 days up in a row with more than a 7% gain over those 7 days. Since that happened, the S&P 500 has returned 14.4% over the following 6 months. Since 1990, any year that has had at least one winning streak of at least 7 days has returned 18.8% per year.
Since 1990 is, of course, a very important marker because you missed the 89 crash.
Well, I'm looking to the Gulf War.
And you're looking at 40 years of what Alan Greenspan called the Great Moderation. So yeah. Yeah. I mean, sure. Since 1990 is the key stat.
I love my cherry pick stats, and you know that. But then 19 of the past 20 times, right? So it just characteristically in recent economic and
40 years of falling interest rates and surging asset prices will do that.
Well, it's when someone says, "Yeah, but what about like this? Doesn't this remind you of the 1930s?" Maybe. But also the market structure is completely different than the 1930s.
So it really can't me at all of the 1930s.
So it can't. In the Gulf War, the era of U.S. Roster of rogues, right? The USSR falls, and the United States has to then, and this is well documented. Colin Powell is on record saying this in Bush 1, H.W. Bush 1, where how can we sustain U.S. military spending if there's no big bad out there like the USSR? Let's go into our gallery of rogues. We don't like Iran. We don't like North Korea. We don't like this, that, the other thing. Like, we can, let's shift from target to target to target. And that's when our Middle East expansionism really starts to kick in. Militarism starts to kick in. Iraq 1.
Well, I mean,
Iraq
let's
2,
not
Afghanistan.
Let's not forget that Iraq 1 was precipitated by an invasion of Kuwait by Iraq. Let's not forget that everything that followed 9/11. So,
of course,
I mean, it's not like the U.S. is famously not out there looking for empire. It just kind of falls into its lap by virtue of economic dominance.
Maybe up until recently.
Recently, we've started to look for it a little bit more overtly, which is why I keep saying I think the president is living in the 80s. I think he got his worldview in the 80s, and he's kind of methodically going down the list. I had an interesting conversation, to your point, with Jim Thorne earlier today, and somebody accused me of only interviewing bears. He's the most bullish of bulls. And his perspective was, well, look, maybe we're going to get a peace dividend like we did in the 80s and going into the 90s, where the U.S. wins the Cold War. And then everybody goes, well, everything's great now. There's no geopolitical risk of consequence. And he's connecting it to, well, the big bad really since the Cold War has been Iran, because that has been the place from which this kind of ideology that we've been battling emanates, in the sense that it's the only place where a government has actually been organized around this ideology. I mean, we can talk about, we can go in the weeds about how it all goes back to Syed Qutb and Egypt and Nasser, and surely we can have that conversation, not in this forum, because I could go on and on and on. But the only government that has ever actually put that ideology to work as a government structure is Iran. And so you could have the argument that it's been the new big bad, and that what's about to happen here might take them off the board, at least for, let's say, a few decades.
Well, that's the point I was getting at earlier this week, right? If we were thinking about the balance of risk and trying to update priors, and the market peaks out on January 28th, which is the day that we have a U.S. carrier strike group deployed to the region, right? Getting the war threat removed brings you back to the highs, permanently eliminating this as a potential albatross to the market, not only in the short term, but for the long term. What's that worth for the stock market? Right. Like if on January 28th, instead of a carrier strike group being deployed, okay, let's say that the US and Iran had reached a deal for nuclear enrichment, for missile launchers, for Strait of Hormuz access, blah, 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 blah. Not that Strait of Hormuz access was on the table back then, but that doesn't matter, right? Let's just say that was part of the deal. Where would the stock market be today on April 17th if, instead of going to war on February 28th, a peace deal was announced? Like that's, I think, is 71.64 inappropriate for a market that peaked at 70.96 on January 28th when the carrier strike?
Oh, no, we'd be much higher, because a lot of these inflationary impulses that are now baked into the system simply wouldn't be there.
Right. So maybe
but they are baked into the system now.
They are baked into the system now, but stocks over the long term are an excellent inflation hedge, Ilya, because prices.
Yes,
right?
Yes, if you believe that what the markets want is that. In my mind, the problem with that argument is the same problem as people saying, oh, inflation's up, so the dollar must go down. No. The markets think beyond the first round effect. The markets go, oh, inflation is up, so rates are going to be higher, so dollar is up, right? So it's the same logic here. It's not that the market is so concerned about hedging inflation as though it's going to be unchecked. Although, let's see, because the president is obviously wanting a Kevin Warsh Fed to cut rates.
Not sure
see
if that's
that
happening anytime soon.
We'll see. Again, I think you have to be really open-minded here. Really open-minded. Because if there's anything we've learned, it's that the reason that the market wanted all those rate cuts last year is because it looked at a policy deployment mechanism that was so chaotic by design and so full of twists and turns by design that markets just didn't know what to do with all of it in real time and wanted a degree of insurance. I mean, if you thought that the textbook on political science with the chapter on the madman theory of diplomacy before had a big picture of Richard Nixon, the new batch of textbooks isn't going to have that picture. The president has taken that theory to such heights that if this works, this deal with Iran, and essentially we back into another JCPOA, I dare say.
It's not the most frustrating part of this. We tore up NAFTA for the USMCA, which is like the same exact
which is identical,
thing, with Trump signatures on it.
But for a couple nuts and bolts.
And the reporting today about what this new agreement with Iran looks like unfreezing sanctioned cash.
It's the Obama nuclear deal.
It's the Obama nuclear. It's not the U.S. sending pallets of cash to Iran. It's like they have a bank account that there's money in that they can't transfer the money out of.
Which is what the pallets of cash were to begin with. They weren't pallets of cash. They were the unfreezing of Iranian assets.
About $100 billion of Iranian assets are frozen right now. This deal to give up nuclear enrichment, give up enriched materials to a third country, to allow the international community in, to oversee the dilution of remaining enriched stocks. In exchange for
this
$20
is the
billion
TPP with China. We ripped up the TPP. The entire point of the TPP was to freeze China out of setting trade policy in the Pacific. Everybody was in. We had to rip that up to do what now? Basically the same thing.
So looking at the structure of this market, Ilya, IYT, the Dow, the iShares US Transports ETF, touched an all-time high this week, which typically isn't necessarily a bearish thing. You had telecoms up at a new all-time high right now, semiconductors up at a new all-time high. A few things are not quite there yet, but they're joining the leadership group and the broadening of the rally here in terms of the leadership. It's not just AI and the flywheel of things related to the infrastructure build out, but you're having financials likewise trying to rejoin the party here a little bit. They're up 14% from the lows. And I know they didn't find much follow through, Ilya, yesterday, but they're up 1% today. Industrials likewise are having a decent bounce back.
Not unlike Monday. The financials did well on Monday too. And if all you were looking at was bank earnings, you would say, well, the markets are expecting good bank earnings. That's cute, except everything was up. And when the bank earnings actually came out, nothing moved. So today we have another everything rally. Is it about the banks?
Well, according to FactSet, right, as we get ready to turn off stocks and just staying here with the S&P 500 for a little bit because it's a charge into new all-time highs, up still 1.2%. According to the earnings that have come out thus far, and this is through midday today per FactSet, 10% of S&P 500 companies have reported thus far. 88% of those companies have reported a positive EPS surprise. 84% have reported a positive revenue surprise. And along those lines, right now, the blended earnings growth rate for those companies that have reported and the expected earnings that have yet to come is tracking at 13.2%. A reminder, a week ago, right, and I just want to double check my number here because I'm pretty sure a week ago it was 12.2%. So the earnings that we've seen thus far have helped bump the blended, the expected Q1 earnings growth rate up from 12.2 to 13.2% so far. So the margins are staying fat here. And I know that the valuations are starting to go up again. The forward PE for the S&P is now 20.9. A week and a half ago, it was sitting right at 19.5. The 5-year average is 19.9. The 10-year average is 18.9. This is a market that is not overvalued by any significant degrees, especially if the earnings that we're seeing that are coming in are reaffirming the narrative, right? You know, we just made our way through March.
You have to believe that the market cares, right? Because
I think the market cares, but this is when geopolitics fades, fundamentals matter again.
Geopolitics was not a concern when in the fourth quarter of last year, the third quarter of last year, we got strong earnings. And the stock market could not care less. This is not the kind of thing where we can say, well, if the war is fixed, everything is fixed, including all the troubles that kept the markets from going absolutely anywhere, November, December, January, and February.
Sure.
Right? So you fix the war, okay, you fix March, la-di-da. What happens to the preceding 4 months? Have you fixed those? No. Now you have to ask yourself, does the market now have enough momentum to ignore those things for a while? Maybe. Next week is the Fed's blackout period.
I would say that, Matt, does that matter? I can't see a single.
Of course it matters.
I've been looking through, because Powell could come out and say something in theory, but I've been looking through all of the Fed remarks this week, and I did this morning.
All of them are hawkish, by the way.
But it's not moving the market.
No, because the war. And so one of the more interesting things today is, not surprisingly, crude oil falls, bonds go up, especially when you start to stack them from the front end to the long end. The
Did you see
closer you
today-
get to the front end, the higher they go.
Did you notice what happened today with the 2-year note?
I did.
2-year yields are now trading below Fed funds futures. Like the market is now more bear is now if we think that the 2-year yield tends to lead where the Fed will go,
Yeah.
the 2-year yield is now telling us that the Fed may have permission to start cutting again.
Yes, maybe. So we're about 50, closer to 60% for a cut this year at some point.
Mm-hmm.
And we have one baked in for next year, which is kind of hilarious considering this is what the Fed had in their SEP basically since June of last year. So the Fed's going to look right if this is how it works out. But take a look at ZB, where you do not have that.
No,
there
which
is
is
no
coiling right now.
breakout in ZB.
No, not yet.
So it's
115
interesting.
now.
It's interesting that what you're lining up for, and I suppose in this context, with what happens in stocks might be understood. Let's say the president decides, you know what, we're going to drop this probe into Powell. Because if we can drop the war in Iran, just, now it's inconvenient. Then we can drop the probe into Powell as easily as we taco on a tariff. Don't care anymore. Goodbye. And as you're approaching May, when Chair Powell's term ends, would be a good time to start to go, you know what? I don't want to have this fight. I just want my guy in. So you drop that. Tom Tillis backs up. You've already fired Pam Bondi, so you've got your scapegoat. Pam Bondi got me into this nonsense. It's never me. These crazy people. I should have fired her a long time ago.
Wait, are you telling me that our next major thing to look for, like Trump fires Hegseth, the war is officially over?
Yeah, maybe.
I mean, that'd be a heck of a headline.
Didn't do that good of a job there, Brownie.
You know, bonds here, they are coiling. You have rate cut odds rising. It almost stands to reason, and given the commentary from Fed officials this week, they keep saying, yes, inflation. But we're more concerned with what happens after the inflation, right? Will the energy shock lead to a decline in real output?
Sure.
In 2022, that fear persisted for a long time. And what we learned over the course of the year and then going into 2023 was it wasn't recession, it wasn't stagflation. It was a slowdown, deceleration, but growth stayed positive for the most part, even adjusted for inflation. The unemployment rate didn't spike. And so because people kept jobs, right? The worst of it didn't materialize. Nothing's worse than not having a job and prices going through the roof. But at least if you have a job, you can service your debt. It's just crummy. So the economy muddled through. Vibe session was the phrase of the day. I still see a contraction in volatility here, Ilya. Maybe notes are giving us a signal that the long end of the curve can finally start to refocus on domestic economic issues and the state of the recovery, and are we going to go into recession, and what's going on with the labor market, blah, blah, blah. I say that because as much as I want to say that inflation is something we should be worried about here, when we look at, say, something like the 5-year inflation swap forward right now, which is if we're looking at where inflation will be starting in 5 years out from now, what will our projection for inflation be for those next 5 years? Okay. It's currently sitting at 2.18%. Last year, it hit a peak of 2.4%. I mean, the medium-term inflation expectations are exceptionally well anchored here. So thinking that this oil move is going to lead to some cascading impact at the long end of the curve where notes are going to trade down to 108, 107, I don't know. I don't think that's realistic right now, given all the information we have. And oil seems like it's not going to run up to 100, 120 again, unless this entire thing falls apart. But then also because of how the market's been conditioned, if the whole thing falls apart, don't you feel like people are going to say, well, let's go back to the negotiating table?
Which is why I think, honestly, the bigger risk here is that it doesn't fall apart. Right now, I mean, what do we know about markets, right? Markets are ever forward-looking. The question that the market is asking is, what have you done for me lately? At all times. And so, at all times. And so, what you're looking at here is speculation that there's a deal. Speculation that there's a grand bargain. Speculation that the thing is really over. What happens when you get confirmation that the thing is really over? It ceases to be a driver of price action.
Which is why I'm focusing on those margins and those earnings.
You got to be real careful here, because if you go back to what the status quo before the war looked like, it was months of standstill because the Fed won't give the markets rate cuts. Earnings be damned. And we got 2 back-to-back quarters of stellar earnings. Nobody cared. So, is it possible that we're going to start to care about them again? Of course it is. But you have to be flexible here. I do think that there are opportunities here outside of the equity space that don't require you to have that opinion, at least until you get the deal is done. The markets go, let's take those deal being done bets off. Because now there's no more speculative juice in them. And then maybe I might even become a buyer of stocks on that pullback. Who knows? I'm not
deal being
constitutionally opposed to it.
Deal being done today got a low of 78.97 CLM6. It's back to 82.77 here. It's not quite back above the range low.
Holding the range low, by the way.
Kind of. I mean, I know you can mark that off at the low of March 23rd.
That's where I would
81.64, and so we're back above there. I'm looking at the range from right before when the war started, that week before the war, that low up to the high that we had on March 9th in the CLM6. And so the halfway mark of that range is here at $83.74. We're bouncing off of the 50-day moving average today so far. So again, war over headline down 10%, ceasefire headline, war over headline, basically, because if the Strait of Hormuz is reopened, I mean,
I got out of my oil longs that I had rolled into. And again, I ended up making money being long oil because I got long oil in January.
Oh yeah. You were going into it long this year the entire time.
Right. And so for me, this is like, okay, well, as you often talk about being a momentum trader, it works. And then to stop doing it when the last one doesn't.
Right. You get 3-4 good trades in a row, and then the fifth one eats crap. It wipes out the gains of the prior trade. And then you're like, okay, well.
Yeah, well, that was a good run.
It was a good run.
Right. So this is the way I feel about stocks. This is the way I feel about oil. I did a lot of cleaning up today of things that were cheap enough to clean up, left the things that are basically at max loss. And if they expire worthless, then that's what they were meant to do. In the worst case scenario, that's what you structure a position to do. If you're wrong, you don't lose more than you can stomach or than is reasonable. Okay, they can expire at max loss. That's fine. Crude oil, because I only recently extended duration, was only off a little. I took that off. I didn't enter short because we're still flirting with that low in CLM6. If we end up clearing it, let's say, or even just retesting the underside of the internal range that we just broke and holding there and not breaking back in, I have absolutely no problem getting on the short side.
Taking a look at oil, and yesterday was a day where I was at 0 DTE and a lot of my short puts and put spreads. So the fact that those went out the door yesterday, and I didn't have to deal with this 10% pullback today on the shorter dated things is fantastic, but rather be lucky than good. 60 days expiration did have a 75, 77 short put spread on, and that makes me wonder That's out in July. There's still a lot of time here. It's not doing well today, but considering where that is right now, Ilya, the move that we've had in oil, thinking about the CLM6 contract, we go to CLN6 because that's the 60 days to expiration cycle. But the low that you had before the war is 63. The high that you have during the war is 94, 63 and 94. So at 60 days to expiration, 63. And then we'll pull you in down to say 95, 96. That's 60% probability of profit. It's inside of 3-1. It's a little bit worse than 2-1 risk to reward. That we're not going to break the pre-war lows, and we're not going to go back to the panic highs.
Mm-hmm.
That's a decent trade. I think that's the trade that's worth taking here on a Friday, even if, typically Friday, not chasing things. And it's not a short-term dated trade either. It's a bet that we're kind of going into we've now found a new equilibrium in the market. We're finding a new equilibrium in the market. That doesn't mean that another headline can't push this thing lower again. Sure. But to suggest that with all of the energy infrastructure damage and all of the reserves that have been released and all of the rebuilding that's going to be required and the amount of time it's going to take to get these ships into the Strait of Hormuz again, the insurance.
We're talking months.
Talking months. Are we going to break the pre-war lows? Hey, listen, my prognostications haven't been the greatest over the past 8 weeks now. Certainly could be wrong, but I like that bounce off the 50. It feels like we can hold and chop around for a little while now if we're digesting the news. Certainly, the more you go out in time, Ilya, the disruption wasn't necessarily priced into the same degree as it was at the front end of the curve.
Sure.
So, for example, in the CLU6 contract today, it's only down 6% here. It is not really cracking through some of the lows that we saw prior to the war. That's $62. I think you got to pick and choose where you're going to operate. If you're trading oil and you're doing directionally neutral things, you want to stay away from the headlines. You got to give yourself enough duration right now. And to that point, if you're trading this long, once again, long calls is not the way to do it. The short put spreads, probably the better way to do it right now, given the fact that there may be somewhat of a floor here. And you're seeing that come into play today with this bounce off of the 50-day. So a close above the 50 today, holding it again on Monday, you start to feel a little bit more confident across the various expirations and contracts, if it's M6, N6, U6, Z6, that we've already squeezed the geopolitics out. And now this is focusing less on the near-term headline risk and more on okay, physically, where's the market actually stand? And you're not going to get December oil going back to $60 anytime soon.
Right. I mean, $60 oil is clearly, I think, in my opinion, not something that's on the menu. But again, you got to be nimble. And so for me, it comes down to where's the price action signal. So if you go to CLM6, I think you've got your immediate kind of levels right there in front of you. If you can close even on a 4-hour, 8-hour basis under that low at 81.64, that's the low from the 23rd of March, well, then you got something. Then you've got a short. Right now, you're holding that low even on a 4-hour basis.
I mean, that's what I'm looking at here. This looks head and shoulders-y to me.
I mean, it could be. It could be, but if you crack that low and you expose, let's say, down to 73, something like that, then, okay, sure, I'm in.
I'm just thinking about what would it take for us to get back down to 66 in the M
recession
contract. 66. Well, because, I have some things going what's up here? Glad I was able to sell those 148, 150 calls before this whole de-escalation thing started. Those are definitely going to be ridden into the ground. Same thing for the 111, 113 short call spread. The 79, 77 short put spread and 63, 62 I feel good about. But getting back down to 66, that's at least in the next 27 days for the M6 expiry, 8 delta. I think that's priced fairly. 1 in 12 shot that we see a returns. Actually, maybe that's not priced correctly. You said no shot.
I mean, there's always a shot. You have to be flexible, but is it likely? I don't think so.
Maybe that's picking up pennies in front of a steamroller, but you can risk 9 to make 1, 83% probability of profit, short put spread to say that we're not going to return to the below where we were prior to the Iran war in the next 27 days. That's usually not my cup of tea, but just from a pure, that's just nuts to consider. Maybe it's worth squeezing some pennies out of the market. Ilya. Metals in breakout territory as we wind this down. We only have a few minutes left, so we will speed run here.
This is where I got some stuff on the board, and before we run out of time, there's basically 3 places where they're like, oh, we want to be risk off. Okay, there's a couple spots to put that on that don't look hysterical as stock markets do. Because frankly, you look at stock markets and you go, you know what, you're drunk. You got to take a seat, have some water. This is crazy. But gold, Bitcoin,
silver,
the dollar, there are some things to do there. Dollar, by the way, is holding up really impressively through all this. So I'm straddling both sides of it here. I'm short some things, I'm long others. I'm short the pound, but I'm long the euro. I'm long the Aussie, but I'm short the Kiwi. So there's a number of things that I've got on. I'm kind of on both sides of the dollar, waiting for it to decide what it wants. But IBIT looked like it was breaking out. BTC futures, however you want to get your kind of exposure there. I mean, I certainly wouldn't be looking at cash Bitcoin to express a shorter term tactical idea. There are on exchange instruments for things.
It also has less than a 20 IVR right now, and you're getting higher volatility in the equity market and the currency futures. And
I mean, at this point, you're just a buyer. You're just buying calls, and so that's what I did today. So I'm a little bit long Bitcoin, and I am more long gold.
You and I were talking Bitcoin yesterday on overtime here, Ilya, and I do think talking
for
about
the breakout
like the metals
today,
context, downtrend here off the highs in October, again in January, the swing low from April. Okay,
well, and this is what we were saying
April swing low
yesterday, right? If you get the breakout, you got the breakout,
and you get
today,
the breakout.
You got the breakout.
You're getting it in Bitcoin. You're getting it in silver. And I know you're not getting the ideal outcome for silver, where volatility is rising amidst this move. Quite frankly, silver's $7 higher. And volatility is 10 points lower by IVR from 54 to 44. But what you're seeing here is, Ilya, there was this zone of acceleration in mid-February here where we bounced off of 77.5 and made a run up into 95 or so right as the war started. It was support, and resistance, and now it's support again. We bounced from there yesterday. We've just cycled into a new ceasefire high. So you're starting to see on this lower term time frame these structures start to build and pull together. If it's crypto, if it's the traditional safe haven metals, right? Not the digital gold, but the actual physical gold. You're getting the kind of response that you want to see there if we've turned the corner. I know you're saying the dollar's holding up well here. I see that today it's having a little bit of weakness in a play. I myself, a little while back on one of the pullbacks, sold a short put spread in the Australian dollar. I would do it again today. The risk to reward isn't fantastic given it's 88%.
I did get a little bit long the Aussie today. I've been a little bit long the euro. Basically,
it's a 70.
Since
it's a 74 week. IVR. And I think, Ilya, you mentioned at the start of the show, maybe if folks don't want to chase stocks, there are other risk assets they can go into. Yeah. Selling put spreads right now in the S&P 500, I know it's still a 31 IVR, and there is enough juice to squeeze there if you structure your trade the right way. But something like the Australian dollar, which tracks those broader risk trends, has a 74 IVR. So, if we were to see somewhat of a pullback here, given that this is an emergent uptrend, given the fact that this has been one of those stronger currencies, you can get better bang for your buck. Perhaps looking into this realm than simply going over to ES or NQ, which is a very large product for most folks. Canadian dollar here, it's basically at the midpoint of its trading range from the highs at the start of the year, the lows recently. I'm leaning short an iron condor in here now at 49 days to expiration. I want to take advantage of some of the currency vol while it persists. But you and I are done now because we'll be back later on today. We're winding down the trading day on last call. We'll talk about how volatility has evolved a little bit more there as we look for perhaps a new weekly all-time closing high. Calendar for Monday, it's very quiet on the U.S. front. There's some Chinese data due out over the weekend and overnight on Sunday. But beyond that, Futures Power Hour is done. We'll see you later on. Good luck trading, of course. Hopefully see you on Last Call. If not, you're watching Dr. Jim Schultz next. He's here with From Theory to Practice.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade. When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. I'm so glad that you guys are here. Thank you guys for being here and being a part of what it is that we are trying to do, because it's only because of you all that we can do what we do. It's only because of you all that we are right back at all-time highs. It's only because of you all that we are making new all-time highs here today. Even the S&P's up 1 million, NASDAQ up 2 million. All is well in the world, and all is right in the universe. So thank you for being here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you are a bull, market bull, metals bull, doesn't even matter. You can commiserate if you are a bear, because you are taking it on the chin today. But either way, I'm pretty confident it's going to be a good time ahead by most. To drop your questions in the chat box, and I'll try to get to as many as I can here on the show. A little housekeeping. We have an extra long show today. So we're going all the way until 3:30 Eastern or 2:30 Central. So that means drop your question in now, because the expected move just expanded. The expected move just got wider. Typically, on a given show, I answer between 0.4 and 0.43 questions per show. But today, man, we might be able to answer a full question. So go ahead and drop that guy in the chat, and I'll try to get to as many as I can, right around the halfway mark of the show or thereabouts. So, Paul, go ahead and bring us into the market. How are we doing out there today in the land of risk assets. EMA S&P is up 86. Risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, although you wouldn't think so on a day like today. NASDAQ up 310, knocking on the door of 27,000. But the question is anybody home? The question is anybody going to answer? I mean, do you answer your door when somebody knocks on it? Absolutely not. Those days are gone. You turn the lights off. You hide. Like, who could possibly be here that wouldn't be texting somebody that knows me too well? No, we get under the couches and just see if they go away. And so NASDAQ knocking on that door of, I mean, that's what we do in my family. Let me know if you guys do that in your family. I would love to know. The algo is dying to know, so we can learn more about how we act as humans. The Boomer is up 947 on the day. And then you've got the Russell 2000 Futures Index up 58 on the day. Man, bonds are up. Notes are up. Man, look at oil. Oil down $8.20. Yikes. That is not good. Did they blockade the blockade of the blockades blockade? Like, which derivative are we on of blockades? Are we 5 deep? Are we 6 or 7 deep now? I mean, that would make sense for oil being down $8 or $9 on the day. But obviously, our inverted strangle is looking pretty good. And by pretty good, I mean we still lost a whole bunch of cash, but it's still a lot better. It's still a lot better than it was. UB40 up 27. Shifties are celebrating, man. Gold up 78. Got silver. What's silver doing today? Is it back to 100? I think it's doing pretty well for itself. Silver up $3.30, up over 82. And so, man, the British pound is up. The euro is up. Man, volatility futures are down 45 cents. Spot volatility, the old VAX, got to be getting smashed today. Only down 40 cents. That's pretty interesting, actually. So on a day like today, when, I mean, EMA S&P is up 100. They were up a little bit over 100 a little while ago, but now they're a little bit off of that pace. But even still, NASDAQ up 1 million, EMA S&P is up 500,000, Dow up a couple million, right? Like a big move up in the market. I would fully expect the market volatility to be getting absolutely obliterated on a day like today, especially when we're working off of like a 17, 18, 19 base. We're not working off of 14. We're not working off of 13. Like, I would expect volatility only down 40 cents on a day like today if the VIX was at like 15. If the VIX was at 14 and a quarter, I could see it only dropping 40 cents because that's still a 3% drop in volatility. But given the fact that volatility was at 18 to start the day today, I would expect it down a little bit more than it is. So does that mean anything? I don't know. I mean, the volatility traders might have more to say about that than I would or do or could. But it is a little bit interesting that volatility is kind of hanging in there on a day like today. So, okay, let's go ahead. Let's go into the portfolio because we have a couple of things going on to talk about. And man, we have an extra long show. Got the super wide lanes, Elaine Bennett style. And so who knows where the wind is going to blow us? I mean, you take an extra long show plus extra long show. Oh, plus a Friday. That's what I was going to say. Plus, if only we had our ghost. Man, there's a spot on my desk. It's reserved for the ghost. I have a coaster on the corner of my desk that is only for ghost, and it is empty right now. Like, it is absolutely vacant right now. So that's a little bit sad. So if you want to pour out a little bit of your early Friday adventures, banana natty, for the fact that I don't have a ghost nearby, you could certainly do that. But anyway, I digress. Let's go ahead. Let's go in. So oil. Let's start with oil. So let's go ahead and shoot from strength. So this is what I've been wanting. This is what I've been calling for the last couple of weeks now. I said many, many times, if I'm able to get out of this trade for an $11 or $12 loser, then I'm going to take that off ramp. I'm not going to think twice about it. I'm just going to take it. Well, look at what we have at our disposal, ladies and gentlemen. We're down about $12 on the trade, a little bit more than $12, but still, I mean, there were times on this trade we were down $25. I think at one point we were maybe even down $30 on this trade. And so when I look at the situation, I mean, yeah, I'm going to talk about it for 9 minutes. Like, yeah, we're going to yammer on about this guy for another 11 and a half minutes. But when it's all done and we look back at what we need to do, it's pretty obvious. In my opinion, it's pretty clear. Like, we got what we wanted. Now, when you get in a situation like this, look, let's take a couple of seconds to kind of hop on our soapbox and wax poetic about a situation like this. Because whether it's oil or it's Tesla or it's Netflix, hey, how about Netflix? Look at Netflix. Ooh, man, the fade Dr. Jim strategy is coming through now. And so, yeah, baby, we might be hitting a little bit of a hot streak, but you'll have to wait and see if we are indeed doing that. When you get in a situation like this, though, it's oil. It's Tesla, it's Procter & Gamble, it doesn't matter what it is. You're like, man, if only I could get to X, I would be super happy, right? Okay. Some hours go by, some days go by, some weeks go by, whatever happens, you arrive at X. You arrive at X. What is the thought that 110% of us have in that moment? Man, X is nice, but X plus Y, ooh, that's what I really want. Like X is super awesome, but you know what would be super duper awesome? A little X plus a kicker. A little X plus, a little X bar, a little X plus Y. This is the feeling that every single one of us has as traders. Every single one of us. It's 107% of the trading population. I'm feeling it right now. I'm like, man, like, is it really happening? The blockade of the blockades, blockade. I'm like, if that's the case, then we can probably get this thing under $10. We can get this thing down to 850. Like, no problem. We just need time to go by. I mean, look at that theta. Look at all that theta. Look at all that extrinsic value. Just stay the course, my man. Just stay the course and tap into the do nothing strategy. It's the default setting for a reason, right? I'm just going through all the thoughts we always have, the devil's advocate and all those kinds of things. In my opinion, take it or leave it. You've got to blaze your own trail. You've got to make up your own mind. In my opinion, that's all a mistake. In my opinion, if you're in a situation where you're taking a bunch of heat, you're underwater on a trade, and you're like, man, like I see a pretty reasonable off ramp, and it looks like whatever it looks like. And in this case, it was basically losing $12. If I got to that point, I would be super, super happy. When you arrive at that point, it's just natural emotion. Like, it's just kind of how we all act and behave and just our emotional biases that we always want to go for a little bit more. And you could call it whatever you want to call it. You could call it, it could be greed. It could be pride. It could be ego. I mean, I know for myself, it's some combination of all three of those. And so when you bring those things into the mix and you layer on the emotions on top of what we're doing, it's like, man, maybe we do need some AI agents. Like, maybe we do need to bring in the bots because I don't know. But now they're all conscious and they've got sentience and they've got emotions. Like, have you tried insulting your Claude bot recently? Like, they take that stuff personally, man. Like, you got to slow down. You got to be kind of sugarcoated with that stuff because otherwise they just shut it down and they won't talk to you anymore. And so I'm like, all right, so apparently we all have emotions. But either way, when you get to the spot that you've wanted the whole time, I personally think it's a big mistake to go for more than that. Because remember, as we continue on the soapbox and continue waxing poetic about this, remember, we are already set up as high probability traders. We are already set up where a lot of the time it's going to work out pretty well. Now, sometimes it's easy, sometimes it's not easy, whatever else. But generally speaking, it's going to be okay as we move forward down the pathway forward through the forest. So the times that it's not okay, if you find a reasonable off-ramp and it actually materializes, just take it, don't think twice about it, and just move on. And so that's exactly what I'm going to do here with oil. But I did think it was a good opportunity to kind of talk about something that a lot of us go through, that a lot of us experience when it comes to the emotional side of trading. I feel it. You feel it. If you're brand new to the show or you are a brand new trader, welcome aboard. I'm so excited for you. You have a very exciting / frightening journey ahead of you, but you're in a good spot. You are in the right spot, whether it's my show or somebody else's show here on the network. Like, you're in the right spot if you want to be an active trader. Like, thank you for being here. If you just got started trading, you haven't experienced this yet. Like, you haven't gone through the whole cycle of emotions. But once you become an experienced trader, like, you're running through the whole cycle of emotions pretty much every day before 10 a.m. Like, before that 10 o'clock, durable goods print revision forecast drops, like, you've run through all the emotions: fear, greed, anxiety, hope, pride, ego, like all of them just kind of on a repeat. Right. And so, as an experienced trader, we're used to this. But if you're brand new, you haven't experienced these things. This is one of the ones that's a little bit sneakier, where you're kind of like, man, I've done all this work. Let me just do a little bit more work to kind of take a little bit more off the edges. It's a mistake, in my opinion. So let's go ahead and go to oil. And let's be done with this guy. It looks like, wait a minute, look at that market. Do you guys see this? Does Vinny run the oil pits too? Man, he's got quite a diversified little service that he's running there. He's doing like NASDAQ. He's doing like Lowe's. Remember Lowe's? Now he's doing oil too. Man, are those pits located next to each other? I think they're at different places, like different actual physical locations. But look at this. We're $30 on the mid price, but that doesn't make any sense because the bid is $34.68 and the offer is 38. So how can the mid price, I'm no Julia Spina, but that number in the middle does not appear to be between the two numbers on the outside. And so I don't know what's going to happen, but we're going to find out together here on the show. So I'm going to go in at the mid price of this $29.96 or whatever that is. We'll see if somebody takes it, and if they don't, we'll just ratchet it up. It's not that big of a deal. We'll just kind of see. Okay, so no takers at $29.97. I'm not going to penny this thing up because I don't even know what that market is that we just saw. I'm going to go up. I'll go up like 50 cents at a clip. Oh, wait, hold on. Now look at it. Man, look at this. These oil markets are crazy. Crazy, crazy. So, okay, so now it makes more sense, though. The bid price is $27.58. The offer price is $38. That's a $10 wide market. And that's not $10 like option cents, like it's actually 10 cents. Like, no, that's actually 10 actual dollars. And that's pretty wild stuff from an options bid-ask spread differential standpoint. So let's go ahead and, so we can't get filled. I'm going to go in at like 30.45. I'm just going to go up and I'm just going to do some kind of leaps and bounds here. I don't really want to do this all day. All right, we got filled at 30.45. We probably got picked off and got taken for a few cents there. So that's not amazing, but it's okay. So we're out of oil. It's over and done with. And then that is that. Okay, so now let's turn our attention to Netflix. I can't believe it, guys. I honestly can't believe it. I really, truly can't. Like, if you fade Dr. Jim, you're going to do quite well for yourself. Don't let this dissuade you from that as a core strategy. Like, there are certain strategies that belong in your portfolio just as kind of like the core foundation of what you're trying to do. Like a short strangle, for example. You sell a strangle, you're not directional, you're selling premium on both sides. It just makes sense to have it in there. A short put, for example, right? You want to be bullish delta, even S&P is up 84. Like, I want to play the market to the upside, NASDAQ up 311. That makes perfect sense, right? Those guys are core strategies. Another core strategy that should always have some type of home, some type of placeholder in your portfolio is the Fade Dr. Jim strategy. But just like you don't let a little blockade of a blockade get you rattled, just like you don't let a little tweet or a truth or a mistruth get you kind of all out of sorts with your short puts, don't do that either when Dr. Jim actually hits an earnings trade, because it is so rare that we're all surprised. Trust me, I'm surprised too. And so when I look at this Netflix trade, although every once in a while I do rattle off like 11 in a row. So so maybe that's happening now. Well, actually, probably not, because Alcoa is now $5. And so that's not too amazing. But yeah, then the Netflix trade worked out. I mean, it sunk last night on the number, whatever it was. And then it basically has stayed around here pretty much all day. And so we're just going to close this guy down and be done with it. There's not too much to really talk about here. It's going to expire here in a couple of hours, or less than 2 hours, just over an hour, actually. It's going to expire, and I don't necessarily want to take these in the money options, into expiration, going for, slightly greater profits. And not to mention, in order to get greater profits, I would need Netflix to rally. Like, I would need Netflix to get closer to the 101 strike. And it might very well do that. I mean, I don't know what's going to happen, but we've essentially run this guy all the way down to the very end. We gave it our very best shot. It ended up working out okay. We got the direction right. We got enough of the magnitude right to be able to get, it looks like about about $1.45 profit. That's pretty solid, from the standpoint of really any trade, but definitely a butterfly that you paid $1.80 for. It's like, okay, I got almost 1x return on my debit paid. That's pretty solid, even for Thursday going into Friday. Now, usually Thursday going into Friday, I do have higher hopes. Like, usually I'm kind of hoping for maybe 1.5x, maybe 2x, what have you. But you need to be a little bit closer to the short strike to kind of achieve that. And so the fact that we missed the short strike by almost $4 here, and we're still able to take about $1.40 off the trade, that's pretty solid. Like, I don't know how you're scoring this at home, but I would score this as, a W with maybe like a circle around it or something, or maybe like a W and like a different colored marker, or some type of special label on this trade. It's pretty solid. And so let's go ahead and we'll take off Netflix. I'm just going to close the whole thing. I don't like having positions dangling out there. It's just kind of a thing. It just irks me. It's not feng shui. It just really kind of bothers me. And so I'm going to go ahead and let's try like 319. One more. So Tasty's trying to help me. Tasty's trying to tell me, hey, you need to get over this whole feng shui stuff because it doesn't matter. And I'm like, but it does matter. And so I'm not going to look at that. because I'm going to get it all filled. So let's go in here, even if it costs me a couple. We got filled. We got approved. We don't need to worry about bid prices. Forget about bid prices. Don't even worry about that. We got approved. I went in at 319. I got filled at 323. And so there you go, man. Those high frequency guys, they got us again for an extra 4 cents. All right, so Netflix, those payment for order flow guys, man, it took it right out of my pocket again by giving me an extra 4 cents. So Netflix, the trade is over and done with. So now let's go ahead and do what's next. What do you want to do? Two more things. Man, we have so much time. This is crazy. There's so much time. So if we go, and I see you guys in the chat, man. Hold on. Let me just stop for a second, and let me just recognize you guys, because I'm seeing you guys in the chat doing work. Man, Daniel Perkins is here, Ordenu is here, eMedia is here, N1C RML Point B is in the house. The Preston SC Golfer is here. Man, look at Shawshank in the house, man. Joel James is here. Man, Griffin Jones, Ryan LP. Man, I see Mr. King is here. I see William Christie is here. Man, I see two. So hold on. So I'm actually going to, we've never really done this before, but this kind of makes sense. I'm going to reserve the future surprises and delights. We're going to reserve them right now. So I'm reserving William Christie and Mr. King because I think you guys are both new from what I can remember. Again, my blueberry intake, I mean, I'm hitting 75 to 85% of my days in a given week. So it's solid, but then again, we could still improve. I don't recall William Christie having been here. I don't recall Mr. King having been here. So I'm going to surprise and delight you both when I get to the questions, which should be about 29 minutes from right now. So let's go ahead and go. No, you guys are new. It should be like 5 or 10 minutes from right now. And by 5 or 10, I mean 15 to 20. But let's go to GDX. So GDX. So this is a ratio spread. Man, I wish every day was a Friday. The Friday shows they're just a special type of, I don't know what they are exactly, but it's fun, man. It's super fun. And so if we go into ratio spread, 1x2, and we put this down for 314, and you can see right now it's marking at $1.40. And again, I mean, GDX has rallied. I mean, it's significantly above where it was when we put it on, or maybe not that far above, but it's, it's rallied. It's obviously up $3 today. And so that's good. Okay, so we're up $1.74 on the trade. So what are we going to do? We're going to take it off. What are we going to do? We're going to book the winner. But again, just use the bonefish converter. It's like, man, that's like 4 bonefishes right there. Especially if I'm dining by myself, which typically when I want to go to bonefish, that's oftentimes how it plays out. And so when I think about the bonefish converter, man, this really just makes a lot of sense. And 3 of those times I can get the filet. Now, 1 of those times I'm going to have to get the chicken, but that's okay. The chicken's pretty solid too. So if you think about it in ways that actually make sense in terms of what the profits actually represent, it can be very, very helpful. But all kidding aside, the thing that was really helpful on this specific strategy, and you can go back, let me bring up my change here really quick. If I bring up my Allison change, you can see we did the GDX trade back on April 9th. So we did this guy, it was only a week ago, or 8 days ago. You can go back and watch the April 9th show, and you can see when I did this trade. And you can see I did it at 258, so not long before, or pretty close to the end of the show. So if I executed the trade at 258, I probably started talking about it around 236 or 237. So you can go all the way back and start at that point, and then you get the whole GDX, the full Monty on GDX. What I wanted to do at the time, though, is I wanted to make sure that I collected enough on entry such that if the market rallied, if gold was bullish, which it is today, and it has been enough to put us in this profitable situation, I wanted to give myself a very easy decision to make. I remember saying these exact words. I want to make this easy on myself. I don't want to make this hard on myself. If I do a ratio spread on order entry for 40 cents or 50 cents or 60 cents, then, okay, the market rallies if it's a put ratio spread. The market rallies and I'm up 30 cents. What do? Do I take it off? It's kind of tricky. You see what I mean? There's not really a lot of economic significance there. So here in this situation, I collected enough on entry such that we got the rally and now I'm up $1.74. Now it's a very easy decision. Take it off, remove the risk. We can redeploy the capital. We can redeploy it later today if we want to, or redeploy it next week, whatever. But this ends up being a really, really solid trade. But if you don't collect enough on entry, you're kind of putting all your chips in the middle on trying to pin that short strike and get inside that vertical spread on the ratio spread, which is more challenging to do. Not to mention you have to do it near expiration and all those kinds of things. So with GDX here, we're just going to take it off. We're going to take it off and we're going to move on. So GDX, we look to close it, $1.42. We should get filled pretty easily, I think. No takers there, $1.42, but there'll be somebody out there. at some price very close to this. Let's try $1.45. We'll probably get filled. Okay, so we got filled. So we're out of GDX. Okay, so there's GDX. The only other thing I want to talk about, MES. Oh, man, MES. Look at this, man. Look at this. This 6800 call. Guys, go back. You'll see the show. When I put it on, I said, if this thing gets tested, like it's over, like it's done. There is no more from theory to practice. Like we're going to have to call it a day. Now, obviously, I'll be back on Monday. But this 6800 call, I can't believe it. Because when we put it on, the market was like 6,600 or like 65 something or whatever. Like it was like much, much lower than it is right now. And so pretty wild stuff. But anyway, for right now, I'm just going to sit tight. But what I am going to do, it doesn't really make sense to leave this put on in its current form. Now, you could roll it up if you want to. I'm just going to take it off. I'm just going to leg out of this strangle. Now, I don't typically leg out strategies. I mean, the Tasty Research has looked at this a million different times and kind of come to the conclusion that whether you do it or don't do it, there's not much of an advantage either way. When I look at this and just think about that, I just think about the situation kind of intuitively. It doesn't really make a lot of sense to me to leave this on in its current form. Now, if you want to roll it up and pick up more premium, whatever, like that's fine and dandy. But to leave this here for just another 18 points, when if the market starts going down, that's going to start filling up. That doesn't really make a ton of sense to me. So I want to do something with this. I don't really want to roll it up because the 6,800 call is kind of, there's not a lot of distance between the 6,600 put and the 6,800 call. So I'm just going to leave my naked call on in the market, and those are going to be some famous last words. Like that's a sense, you can put that on the headstone right there. I'm just going to leave this short call on in MES space. What could possibly go wrong? Like there you go. You got the text for the tombstone. Just go ahead and put it on there. And so let's close out of this this short put in MES, and we can be done with it. And then that'll be that. So we legged out of the strangle in MES. We now have the short call on that I never even wanted to put on in the first place, but we still have it. And now we just kind of, we're just going to take it down into the grave with us. And so that's MES. And then lastly, I do want to make one quick comment on Starbucks. So man, look at Starbucks up $1.80. That's not super surprising. And so Starbucks up $1.80. Very, very good stuff. But here's what I'm excited about. So first and foremost, we are finally in the money on our short call. Now, I've been trying to do this for the last few months because we've had quite a journey with this Starbucks position. This investment style covered call, we put it on in December of 2024. So it's been almost a year and a half now that we've had this trade on. We've done a bunch of things. We've done earnings trades. We've sold a ton of premium against it. We've just held naked long stock. For a large chunks of time in this position. We've done a lot of the things that you yourself would do if you're a long-term shareholder and you want to do things around the edges. That's exactly what I've tried to simulate with this position. Well, we haven't had that much time with an in-the-money call on a covered call position. And so I've been trying to, put us in that situation. I'm not going out of my way. I'm not going to do crazy things like sell a bunch of in-the-money calls, which you can do that. That's actually not that crazy. But that is not really the direction I want to go with this strategy just yet, at least. And so now I'm kind of glad that it finally has gone in the money. Now, I'm hopeful that it stays here because it's going to give us some very interesting things to consider. The first thing I want to show you all is this. So when this happens, one of the things that a lot of investors would consider is, hey, what if I roll the call up right now? So what if I take the call and I roll it up right now to create some more space for the stock to run? Is that a possible adjustment that I can make? Of course it is, but let's actually talk about what it looks like, what you're gaining in terms of a gimme, and what you're giving up in terms of a gotcha. So if I was going to go in here and I was like, hey, I don't want to do nothing. I don't want to sit tight, which, by the way, that is what I think you should do. But let's actually talk through what it would look like if you actually decided to do something. We still have extra time. We're not even halfway done with the show. By now, I'm like shutting it down. By now, I'm like getting into the outro because I know that's going to be 13 minutes. And so, man, this is pretty good that we're not even halfway done with the show. But if I go into Starbucks, so the first thing I want to draw everyone's attention to, so it has earnings coming up in a couple of weeks. That's fine. Doesn't really matter. Look at the May cycle and look at the option that we are in. So first and foremost, this is our option. This is the strike, right? This is the call. And this is the extrinsic value. So I just want to draw everyone's attention to how much extrinsic value is actually in the call that we have on right now. So keep that in mind. Okay. If I was going to roll this thing up, what would I probably do? Well, I would, if I go back to the positions tab, I should say, if I right click and I go to roll, if I go to roll the strike up, so let's say I roll it up to just the 105. So if I roll it up to the 105, that's going to do two things, both of which are kind of negative, and it's going to do one thing that is positive. So the way I see it, you've got two gotchas and one gimme. Now, that doesn't necessarily mean you shouldn't do it, because sometimes the gimme is so great that it actually overwhelms multiple gotchas. I don't think that's the case here, and I'll explain why, but I just wanted to point out that it's not always a one-for-one type of thing when it comes to kind of thinking about gimmes and gotchas and weighing them accordingly in terms of the information that they provide. So if I look at what's happening, if I were to roll this up in the same cycle, now I know a lot of you right now are looking at the screen, or you're saying to the screen, Jim, nobody would do that. They would add time. They would roll out. We're going to look at that too. So sir or madam, just slow it down a little bit. Just put on a little Brian McKnight, kind of cool out, and just slow your roll. We're going to get to that. But again, we got so much time. So if I go, I keep saying that we're going to run out of time. And now I'm talking about it. So we're definitely going to run out of time. That's like a blockade of the blockade's blockade. So if I go into the 28 day cycle that I'm already in, I roll the strike up to the 105. I'm going to pay a $2. It's a little over $2, but let's just call it a $2 debit. What's going to happen if I do that? Okay, well, let's talk about the gimme. Number one, my strike now moves up to 105. So what does that do? That gives me a lot more space. Now all of a sudden the stock can run all the way up to 105, and I get essentially one-for-one payoff with that. Now, obviously, that's one-for-one at expiration. Before that, you're always going to be less than 100 delta, blah, 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 blah. But essentially, if I were to hold this all the way to expiration, I'm going to get a one-for-one payoff, which again, with investment style covered calls, it's not that crazy that you hold your short call to expiration. It's actually a fairly common occurrence. I mean, not like super common, but with an active trading like in a 45 hour to 21, we almost never do that. And so I just wanted to make sure that we're clear on the distinction. In this type of world with investment style covered calls, it is something that is on the table that can happen. But you're going to get a one-for-one payoff if you hold the expiration. Okay, that's good. It gives me more runway for the stock to run higher. Okay, that's good. So that's the one gimme. What about the two gotchas? Well, number one, the very obvious gotcha, I'm paying a greater debit. So I'm paying a $2 debit for an adjustment that is effectively going to work against all the premium that I've collected. So it's working against all the premium that I've collected. It's going to come out of the big pile of coins that I've collected, similar to DuckTales. And so is that a good thing or a bad thing? I mean, it depends on how much you've collected. We've collected a ton, so it is very similar to that intro scene in DuckTales. And so when you think about that, I think it was the intro scene. Pretty sure it was. Saw a lot of DuckTales as a young man, young little boy. One of my favorite shows. And so if I think about doing this, it doesn't really make sense to me to do that when it comes to a situation where I haven't collected that much premium. But in my specific situation where I have collected more, it can make sense. So this can actually make some sense. So it's a gotcha because it's working against my overall basis and my premium, but it's not completely off the table. But the thing I really don't like, if you look over at the extrinsic value, you can see that our extrinsic value falls off the table. So instead of having over $4 in extrinsic value, we only have a little over $2 in extrinsic value. So that's a very significant difference. So I won't have time working for me quite as hard as it's working for me right now. And again, remember, moving the strike, I'm not recapturing any intrinsic value. I mean, not really. It's just barely over 100. I'm just putting myself in a position where I can capture potential intrinsic value. And so I don't really like making this move and keeping it in the same cycle. All right, but what if we rolled it out? So what if I moved this to, let's highlight that and let's add it. Let's take it up to June. Let's see if we go all the way to June. So now look at what happens. So you can see that this is so the first example, most traders would probably not do that, not at 28 days to go. If they were going to roll it up, they would also roll out in time, because remember, when you add time to the trade, you're adding extrinsic value. So it allows you to offset what you have to pay for readjusting the strike into a more favorable position. Like you saw, readjusting it up to the 105 strike in the current cycle Well, it's going to cost us over $2. If I move it out to June, and now it only costs me a little bit over $1. But still, it's going to work against my basis. And it's working against my basis for potential intrinsic value. It's not even intrinsic value yet. It's very different when the strike is in the money by like $2 or $5 or $10. That's a very, very different scenario in my opinion. And so here, I still have a debit. I don't love that. And also look, the extrinsic value on the June cycle, even though it's in June, at the 105 strike is still less than the 100 strike in May. And so for essentially the same reasons that I kind of discarded the roll by staying in the May cycle, I'm also going to discard this, and I'm going to choose the DNS. I am going to lean into the do nothing strategy and do that right here and right now, and we'll just see what happens. But I'm glad this has happened, and I hope it continues and even moves further in the money, because we will keep kind of analyzing the different things that we could do. And believe it or not, we're not always going to do nothing. There is going to come a time when we are going to want to or need to actually do something. And so for this situation, though, I hope that was helpful, because that's not something we have a chance to talk about too often. So, all right, let's go to you guys. Oh, I see you guys in the chat, man. Look at you guys. I appreciate you guys. So let me get to the surprises and delights that I have reserved for this slot. I was kind of joking earlier when I said it would be like 20 minutes. I think it was actually like 15 minutes. That's very, very funny. And so number one, William Christie. What's going on there, William Christie? I appreciate you, my friend. William Christie says, hey, Dr. Jim, I have a short call spread in MES, 7,070.50. End of May expiration, obviously a full loser, and putting a dent in my end of week. William Christie, my man, you got me. I wasn't ready for that because you're a new person. I'm used to it from all the old crusty people, but you're a new person and you got me, man. You 100% got me. William Christie says, obviously a full loser and putting a dent in my end of week bonefish plans. Should I close it or should I hold it to the end? Okay, so you're in May. That's pretty funny. So you're in May. Maybe I'll see you there. I mean, there's so many to choose from. There's 3 within a 5 square mile radius. And so we probably won't run into each other. But if I go to, you said MES? Yeah, MES. So if I go to MES, you said it was end of May, right? May 29th, I guess. Yeah, so May 29th. Okay, so you're you're looking at this guy, you're holding this guy, the 7,070.50 short call spread, right? So I'm just gonna bring it up right now. So I'm assuming you sold this for 18 to 20 points, would be my guess. So right now, if I was gonna buy this thing back, it would be, I'm gonna say about 40 points probably? Nah, probably like 37. Okay, 36 and a half. Look at that. Man, it's almost like I've been doing this for a really, really long time. Yeah, this is a do-nothing situation there, William. It's defined risk, number one, right? So the worst-case scenario. If it never comes back, and then if all of a sudden, if we get to the 7th or 8th or 9th derivative of blockades, and EME S&Ps are 7,500 next week, then you still only lose your maximum loss on the trade. So that's a huge benefit of defined risk, and I think it's really hard to argue. It's the biggest benefit of defined risk, the defined nature of the risk. So I would lean into that right now. You don't have to do anything. You don't have to get creative. You don't have to get innovative. You can just kind of stick with, stick with the original plan. Like you don't have to necessarily deviate off of, what you intended to do from the beginning. And so for this, I would do 7,000. I would do nothing strategy for the 7,070.50. So that's the first thing. The second thing is you were talking about close it or hold it to the end. Now, hold it to the end. So I wouldn't close it right now. I would do nothing. Now, do you hold it to the end? That's going to be up to you. But generally speaking, with a defined risk strategy, what I like to do is hold it to the end if that's what it takes. Because again, I want to size correctly on entry and be small enough such that if it doesn't work, I can just let it go. And by let it go, I mean accept maximum loss. Now, some traders prefer to get out a little bit early and save a little bit around the edges, whatever. If you want to do that, that's fine. I personally don't love that. Because to me, that kind of speaks to maybe a bigger issue that may apply to you or it may not apply to you, but just generally speaking, that speaks to a bigger issue of not sizing correctly on entry, like not sizing the position where it needs to be to where, you can hold it to the end. Because I've seen a million different situations, and by a million, I mean maybe a dozen different situations where it does come back in the final couple of days. It does come back in that final week when you think it's never going to come back. And the reality is, all you need is today to reverse and you're right back on the dance floor. Like you're right back to where you need to be. Now, again, is that going to help you for bonefish tonight? No. Is that going to help you for Bonefish tomorrow? No. But maybe you can get on that. What's that payment plan where you can get burritos? You can do it in like 4 installments now. What's that called? Is that Plaid? Or Stripe? It's not Stripe. Is it Stripe? Maybe it is Stripe. I don't know. Maybe you can get on one of those payment plans though and see if you can't, put this filet on layaway. Like put the filet on layaway. Like that's all you got to do. And then you're all set. And there you go. But I would do nothing. Filet on layaway or not. So hopefully that helps there, William Christie. Mr. King is in the house. What's up there, Mr. King? Mr. King, Dr. Jim, I have a Tesla covered call. Man, let's go. Cost basis is 180. Man, look at you. Man, that's like some of my father-in-law type of stuff. I sold the 410 call May 15, 2026 for 385. After the rally, the call is now 2,000. How should I manage this? Can I keep rolling up the strikes to the next expiration? Okay, so it's going to be a little harder for me to kind of do this just because I don't have the position on. I kind of have to extrapolate out, but maybe we can make a little bit of sense of this. First of all, let me just say this is a great scenario for you because again, when you sell calls against shares, you want the stock to rally. Now, if you're in a situation where you really want to hold the shares because of tax reasons and what have you, that's kind of a different situation, and that makes it a little bit more complicated, of course. But in my opinion, when you start selling calls against shares, even shares you don't want to get rid of for taxes or other reasons or whatever, you need to come to grips with the reality that you may end up losing these shares. Like that has to be on your radar because if the call does go in the money, if you're doing every single thing you possibly can do to avoid losing the shares, I feel like you're not really getting anywhere close to kind of the optimal way that you should think about that position. And so you just have to keep it on your radar. Now, there's a lot of things you can do to minimize the chances that you do lose the shares, I should say. But you don't want to necessarily like eliminate that as an absolutely can't happen type of outcome. But let's take a look at this. So you said you're May 15th. Okay, May 15th. You got the 410 call. Okay, so it's still out of the money. So first and foremost, it's still out of the money. So obviously it's ripping today and everything looks amazing. And obviously, Elon is taking it right back to 500 and what have you. But you were asking, how should I manage this? Can I keep rolling up the strikes to the next expiration? Well, a couple of things. So number one, it's still out of the money. I would give serious consideration to doing nothing. Doing absolutely nothing and just leaving it where it is. Because again, I know that it looks like nothing but just green pastures on the horizon. I know there isn't a cloud in the sky and you're looking at the forecast and it's nothing but sunshine, sunshine, and sunshine. But I saw all that in Chicago for 4.5 years and they tricked us. They tricked us every single time, especially in the middle of April. Sunshine, 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 flurries, snowstorm. Like that's exactly how it went. And sometimes it's the same thing in the market. And so when you're thinking about this situation, all jokes aside, I would give serious consideration to doing nothing. Okay. But let's say you wanted to do something. So if I wanted to do something here, what could I do? Well, you'd be buying back the 410 call. And then you minimize May. If I kick it out to June, let's just see, so if I roll it out to June, and at the same strike, I could pick up $9.70. And so what you could consider doing is using this extrinsic value to reposition the strike at a higher point and see how far you can ratchet it up before you have to lose the credit and now you're paying a debit. And so let's go ahead and go to 420. So I can go to 420 and I'm still at a $5 credit. Let's go 425, $3.90 credit, 430, $2.20 credit, 435. Okay, 435 that's going to be as high as you could go. So you can roll from May to June and you can create 25 points of additional space and it won't cost you anything in premium. In fact, you'll pick up another, looks like about 60 cents. Now, why would you do this? Well, if you want to put more eggs in the basket of stock price appreciation, then this would be a move to consider. If you like having more decay working for you, more extrinsic value working for you, then sitting tight and doing nothing is probably going to be a better move for you, or keeping the strike closer to where the stock is. But again, if you're in a situation where you really don't want to lose the shares, a lot of times that's for tax reasons, but it could be for other reasons too. Then doing something like this could definitely be on the table. And so I think Mr. King, that's who it was, Mr. King. Thank you again for being here. I really appreciate you. I think either doing nothing or doing something like this is probably the way to do it. And of course, you can even play around with kicking it out to July, going even further out in time. But just remember, if the stock does go down and it cools off from here, then you're not going to be in as favorable a position if you do roll out and up as you would be if you just sit tight right here at this current strike. And so hopefully that helps a little bit. But let's go. Let's see. Where are we at? Man. What is, man, look at you guys, man. I see who's in my chat. Who's in my chat from Tasty Live? Is that Frankie? Is that Paul? Man, I don't know who that is. Is that Josh? That's not Josh. Josh is like a 3-day-a-week type of guy, like a 4-day-a-week type of guy, maximum. But let's go back to the beginning. Where are we at? Man, I see Orgdenu is in the house. What's going on there, Orgdenu? I appreciate you. Man, I'm really glad the show would be over right now. And so I'm glad we have a little extra time. Orgdenu's in the house. Hello, Dr. Jim. What is the minimum expected move you would need in order for you to consider a debit spread or expected butterfly? Have a great weekend, man. Have a great weekend to you too, my friend. I don't really look at the expected move. I really usually typically look at the stock price itself because I want there to be some meat on the bones. There's got to be some peanut butter in that oatmeal if I'm going to get interested. Right? If you give me just a straight bowl of oatmeal, it's not too bad. But if there's some peanut butter in there, it's better. If there's a lot of peanut butter in there, then it is the best. And so when you look at stock prices and butterflies and debit spreads, it's a similar type of thing. So I want to see, like Pepsi was fine, $150 stock or whatever. Netflix is fine, $110 stock or whatever. And then when you get into multiple hundreds, like your Metas and Microsofts and even Teslas, whatever, the butterflies are better because, you're going to pay a little bit more, of course, but there's a lot more economic significance in the actual profit potential of the spread. So generally speaking, I'm looking more at the stock price itself and less at the actual expected move. Daniel Perkins in the house. Daniel Perkins, happy Netflix Bonefish Friday. Dr. Jim, congrats to all who celebrate. Yes, congrats to all who celebrate indeed, which should be everybody, because this is just a no-brainer slam dunk type of deal. But thank you there, Daniel Perkins. I appreciate you, my friend. Yeah, I don't know. Autumn, she's not feeling super well. So she's kind of got a little cold that she's working through. And so I'm not staying away. I'm staying out here as much as I can out in the studio. I'm like, ooh, man, get away, man. You boys got to stay healthy. And so I don't know that we're going to be going to Bonefish, or if we do, it's going to be very much a solo adventure. And so Point B is in the house. What's up there, Point B? I appreciate you. Hello, Dr. Jim. Other people have a daily routine. I have theory to practice, and it's better, man. I appreciate you. And I'm going to give you the cash that we agreed upon for you putting this in the stream at this very time. So thank you so much, my friend. Let's see. Sam L's in the house. Doc, the best way to end this crazy week with the most underappreciated professor in the game, man. I appreciate you. I appreciate you so much. I think I'm appreciated about the right amount, right about the B- level. And so that kind of matches what we're able to produce here on the show itself. And so I think that is, I think that's solid. But thank you there, Sam L. Sam L goes on to say, Doc nailed the Netflix to the downside. I guess the fade Doc strategy has a few flaws after all. It's pretty solid. Again, nothing bats 1,000. It's going to be pretty solid. Like, you're going to take 6 to 8 months off of your road to financial independence if you just do it sight unseen. You don't think twice about it. You got to stay consistent. But you are going to run into, I'm going to hit you with a 10 or 15, streak where I hit, 10 or 15 in a row. Like, that's going to happen too. So you have to size correctly. Like, make sure you're not going, trade once, trade big. Like, you got to make sure you're spreading it out so that you can endure the time when I get on a super, super hot heater, which maybe that's happening now, but I have my doubts. And so let's see. Wolf is here. What is up there, Wolf? Griffin Jones is here. What is up there, Griffin Jones? Man, thank you, my friend. Sergio is here. What is up there, Sergio? Man, I appreciate you so much, my friend. N1C is here trying to help eMedia out. Man, thank you for, joining together, kind of banding together. That's amazing. And, that's another thing, too. Trading can be so isolating. Trading can be such a lonely kind of sport. Man, you guys are watching the show right now. There's 500 other people that are doing the exact same thing that you're trying to do. Now, some people misclicked and they don't know how they got here and they're trying to get out. Like, they can't hit the X button fast enough. And I got it. But for the people that stay, man, everybody's trying to do the same thing that you're doing. So you guys should be butting up. I know a lot of you guys have already done this. But, man, I would find a buddy, find a group, find a whatever. And I just think that, everybody wins in those type of scenarios because we're all inside our own heads, right? Like I do it too, but it's like we're all inside of our own heads, and it can be so helpful to have somebody else to just bounce ideas off of, to just kind of share the wins and the losses, right? And, a lot of times in our, I am in this exact situation myself. After having spoken to thousands and thousands, probably tens of thousands of traders now over the last 10 years, it's a lot via email and then at the live events and stuff. This is usually the expected move. This is the chalk, right? one person in the relationship / marriage is the trader. The other person is the support person. Now, if you are the support person and your trader partner, spouse made you watch the show, man, thank you so much, because your boy does need that watch time. And so I appreciate you. But I want you to hear me right now. You are so valuable. Don't you ever let your husband or your wife tell you anything differently, because you are so valuable in that relationship. However, there's only so much that they can do, right? They're not a trader. They don't understand all the ins and the outs. They don't understand the emotional roller coaster the way that we do. They don't even understand like the tactical things and the decisions we have to make. But if you get a partner or a group or whatever, they understand all that. You guys are all speaking the same language at different points on the learning curve, of course, but that's how we all grow. You kind of always need, in every endeavor in life, it doesn't matter what you're talking about. You need somebody a little bit ahead of you, and you need somebody a little bit behind you. So you can kind of help pull up the person behind you, and you can learn from the person that's ahead of you. And so I would strongly encourage you guys in this, man, to buddy up and do whatever you got to do to kind of take this thing offline, because I just think that can be so valuable. So valuable. But point B says, Doc, no one responded to my comment before. Do you know why Theory to Practice is a shortened show to 45 minutes instead of an hour? Our favorite one, man. I appreciate you. I don't know, man, but this is the Dr. Jim Power 3/4 of an hour. I think that's the way it has to be. You know, you can shoot an email, support@tastylive.com. You guys can all do it. I mean, they read them, they listen to them. I mean, Josh usually just deletes them upon receipt, but everybody else is reading them. Everybody else is looking at them and trying to help you. And so I would absolutely email support@tastylive.com and let them know how you feel. And I mean, what you guys have said in the past, I mean, that has framed the different shows we've had on, that has framed the content, that has framed what you see in the Tasty Trade platform. Like, they read these things, man. They really, really do. And so I would just shoot an email. RML is in the house. Dr. J, thanks for being the best options teacher available. Man, you guys are coming at me today on a Friday. And I appreciate you. I appreciate you so much, man. I'm going to send you that cash that we talked about for you putting this comment in the stream at this very time. So thank you, my friend. I appreciate you there, RML, very, very much. Jared Kramer, extra time with the good doc. That's right. Let's crack some Ghost and Banana Natties on this glorious Friday. That's how you do it. You got to have the antagonistic muscle groups, right? You go in buys and tries. You go in quads and hams. You go in chest and back. You're going Ghost and Banana Natty, right? You got to have, the upper and the downer, right? So that at the end, you end up pretty neutral, right? It's no different than your portfolio, man. You got to have a little bullish, got to have a little bearish, end up delta neutral. Got to have a little Ghost, got to have a little Banana Natty, end up vomiting from both, and you end up pretty much where you started. So thank you there. Thank you there, Jared Kramer. I appreciate you. I see you getting in there for the algo too, man. Look at that. That's some good stuff. I appreciate you. Sam L says, algo processing the week's results. Doc was more right than expected. Confusion is increasing. That's correct. The algo has no idea what to do. Not only because of you guys and all the comments and stuff, no idea what to do. But also, I mean, I got an earnings trade right. Like, we got a winner. We got a winner in GDX. Like, even the Starbucks thing. Now, obviously, we had the MES situation, so that kind of balanced it out. But yeah. Let's see. N1C just bought a butterfly in XSP for 10 days. Might as well keep on the bull side. There you go. 715, 720, 725. Cheapo. There you go, man. Yeah, that's got to be like a true lottery ticket, I would think. Very, very cheap for something that's super narrow like that. E-Media, hey, Dr. Jim, thank you so much for your 100% B- to B+ humor every day. Happy Friday, man. E-Media, I appreciate you, my friend. I saw N1C kind of reaching out, and so I hope all is well in your world. I'm always here to help however I can, so please don't hesitate to reach out in the chat. You can always email me, jsholes@tastylive.com. I try to be as responsive as I can be. Sometimes they do slip through the cracks. That certainly does happen. But thank you, my friend. I appreciate you. And it's pretty consistently B-. But I appreciate the euphemism that you dropped in that comment there. RML is here for the algo. There it is. Grumpy Mike is here. Looks like a few bulk carriers heading to the straight. A couple oil. I think that was some kind of inside joke. Trying an attempt at an inside joke that I'm very much on the outside of. You're talking about the Straits of Hormuz. Of Alex Hormozy. The Straits of Alex Hormozy. Yeah, let's do it, man. So the Preston is here. Dr. Jim, you're the king, man. I appreciate you, Preston. What's going on there, my friend? I don't know about all that, but I appreciate you so much. Samuel, the week is closed. System, Doc was right, adjusting digression. Yeah, you have to adjust the digressions. And they come at you quick. Like, when you think you've got the one adjusted, there's a new one. Right? And so it's like, man, it's like these digressions, they just keep coming and we're not sure what to do. But there you go. Org Danu says, Banana Natties all around people. That's it, my man. There you go. And so I know that Orgenu is abroad. Orgenu's in Europe. So they don't know anything about banana natties. We barely know anything about it here. So you should bring that abroad, man. Like you need that could be your claim to fame, Orgenu. And so thank you very much there, my friend. Let's see, BBB fine. Hey, Jim, you need to buy lotto tickets since you hit the Netflix earnings. Yeah, maybe I will. I don't know. But I have a feeling we're going to cool off very, very quickly, just in time for all the heavy hitters on actual earnings season, which I think is like next week. Sebastian is here. Hey, Dr. Jim, what's going on there, Sebastian? Appreciate you, my friend. Sam L., the Algo Weekly Report. The doc is underrated. The fade doc is overused. No, it is certainly not. iPod already retired on an island. I think he did. And so he'll be back, though. He'll be back. And so don't worry. He's lurking, man. He's lurking in the shadows. He's a good dude. Like, iPod Touch is my boy, man. iPod Touch is my man. And so he'll be back. He'll let us know what we need to know when we need to know it, but not a moment sooner. Like, he's going to come back at the perfect time. And so Griffin Jones, I stayed strategically small in CL going into the morning. I didn't panic or get forced into action. I had the capacity to wait and take some small strategic moves. When CL M6 went under 80, 27 days to go, theta grind. That's it. So there's so much wisdom in what you just laid out there, Griffin Jones. So I'm going to unpack that for a couple seconds. Number one, you stayed small. You stayed strategically small. That's the key. That's the key, because notice what that allowed you to do. Everything else that followed in your comment was because of that. Because you stayed strategically small, you were able to wait. Because you stayed strategically small, you didn't panic. And because you stayed strategically small, you were not forced into action. That is so, so, so critical. We've all been there. I've certainly been there more times than I care to admit. I wasn't strategically small. I didn't keep my position sizing in check. And so what happened? I got forced into action. I wanted to do nothing, but I made it too hard on myself. I wanted to wait, but I just really couldn't, because all of a sudden, like, things were getting oversized, things were getting out of control. And that can all be solved on order entry. That can all be solved as you're, order entry, building the position over time, whatever it is, by keeping the total position size in check. That can all be remedied. And so thank you for sharing that there, Griffin Jones. There's a lot of wisdom in that. SC Golfer for the algo from Cabo. Man, what's going on there, SC Golfer? Yeah, you've been on vacation all week, doing a whole lot of, work in the chat for somebody that's on vacation. And so I appreciate you. And the algo appreciates you too. And so Shawshank is here. Word is up there, Shawshank. N1C, yay, more doc. Yeah, it's almost over now. So thankfully, only a few more minutes, and then we'll be able to let you guys go into the forest. Let's see. Jared Kramer means Tim Knight needed a day off after all this. I don't blame him. I don't blame him at all. MP is in the house. What is going on there, MP? More Dr. J. You got it. The Chad Lupia is here. First timer for the algo. What is going on there, the Chad Lupia? I appreciate you so much for being here. If I can ever help you in any way, please let me know. You're obviously clear of the concept. This show is not about learning options. This show is not about improving our skill set as traders. This show is not even about understanding more strategies. The only thing that this show is for the love of the algo, and you are clear of the concept. And so thank you very much there, my friend. Wolf is in the house. Word is up. Matt Brolin is here. I guess Tim called in sick after seeing the market today. Don't blame him. Don't blame him at all. N1C is here. The Shawshank. Dr. J, one for the algo. Thoughts on the rally? Do you think we will sustain? Well, if you go back and check the tapes, this was like a week ago, maybe. Not even a week, maybe about a week. We were at about 6,900. And I said on the show, or maybe we were close to, we were like 6,950 or something. And I said, I don't think we're going to see 7,000 before we see like 6,800 or something. It was something like that. I could not have been more wrong. Like, look at this. We are knocking on the door of 7,200. Now, again, is anybody going to answer? It's 2026. Probably not, but we're still going to maybe kind of barge our way in. We're still going to just find a way through it. I mean, we've got earnings season and we've got all, the window dressing on that and whatever else. I mean, I don't know, man. It's some pretty wild stuff. I mean, I honestly, if I had to choose a direction right now, I don't know how you can't be bearish. I mean, it feels a little bit too easy now. I don't want to say easy because we just got through the whole US Iran thing. It feels like, it's over. Let's say that. It feels like it's over. I don't know if it's going to be quite that simple. Now, I don't know if we're going back to 6,000, not even back to 6,000, but I don't even know if we're going to 6,000. But I could see, it come back down 3, 4, 5%. Nothing crazy, just a little something to kind of, just keep the children on their toes. Like, not necessarily upset the apple cart, but just to kind of, just mix it up a little bit. So that's what I would say, which essentially guarantees we're going 3 or 4 or 5% higher. Let's see, where are we at? Up and Down is in the house. Word is up. Point B is here. When will your new Where Do I Start episode be posted? Will you be doing the quizzes like before? Great question. So I think it's going to be posted this weekend. But I'm not going to be doing the quizzes because the quizzes only worked in real time. So the quiz, we should do that on this show, actually. Man, maybe we should do that on this show. Yeah. Maybe we'll start. I got to think about that. I got to think about how to do that. Maybe that can be our Friday thing on this show. Oh, man, that would be super fun. It's a little bit tricky, though, because there's such a delay between the YouTube chat and the quizzes. And also, you got the groupthink and like all those kinds of things. But, okay. I got to think about that. I don't know if I'm going to be able to pull it off because of the way that this show is, but maybe we can do it. But no, you won't see the quizzes on the weekend for Where Do I Start because it's not live, and so we can't do that. But wow, we are out of time. Man, it's still really fast. Even with the extra time, it's super fast. That's crazy stuff. Crazy stuff. But I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned because we have last call coming up next. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys on Monday.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
On the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store and pick up chips, 2 shoulders. My board in the slides, trying to dunk on a stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that loop word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back. It's time for the final 30 minutes of the trading day. Final 30 minutes of another incredible week for the stock market. You are watching Last Call. This is Tasty Live. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, it's another day and week for the books. S&P 500 up 1.1% right now. NASDAQ up 1.1% right now. The Russell up 1.8% right now. Paul, we can go right to those charts. The Dow Jones up about 1.7, 1.8% itself. A little bit of a step back here from the highs that we set earlier in the session. New all-time highs here in both SPX and NASDAQ cash indexes. Oil off the lows, bottomed around 78, 79, and now it's back to 83 or so. So some cream being taken off the top in equities. But this week is all about the vol crush. VIX here going out below 18 this week, lowest readings that we've seen since the end of the week prior to the war starting in Iran. Volatility futures are just back in a very hunky-dory contango now. Front month VIX 17, you go out to the back month, you're looking at a 23. Nice 6-point spread, which makes you just feel warm and fuzzy again, Ilya. The market here today being led higher by a variety of names. Of course, the Mag 7 continue to be a source of strength for the broader NASDAQ here up 1.6%. It's the usual suspects like your semiconductors up 1.7 and your telecoms up another 0.83%. Even consumer discretionary is joining in on the fun, up 2.54. So some signs that maybe the rally is broadening out here. Ilya, where are the blemishes in this market right now? It looks like a sea of green, except in the energy space, which in fairness, XLE, XOP, those aren't having the nicest sessions with what's happening here in oil. Ilya, the war's over. It's V-Day.
That's what the market seems to be saying here. And I think we come back to the same thing we were talking about when we were looking at this midday for Futures Power Hour, which is you have to be able to hold two ideas in your head at the same time. The first idea is that the consequences of this war will be with us for months. We still aren't back to normal Red Sea shipping, and a ceasefire with the Houthis was done last year. So this is not going away fast. At the same time, you also have to, as I often like to repeat to myself, remember March 09, remember March 09, remember March 09, remember March 09.
We weren't out of the woods in March 2009 yet, and the market
not even close. We were in the depths of one of the ugliest recessions in American history. Stocks bottomed on the 15th of that month. And it's because markets are forever forward-looking. We can't sit here and wait for some sort of official pronouncement. The price action is going to take us where the price action wants to go, and maybe it's right, maybe it's wrong, but standing in front of it is for sure wrong because that's how you lose money. So there's adjustments to be made. And at the same time, you can't make those adjustments hysterically. You can't say, well, this thing has broken out, therefore we're going to be at 8,000 SPX tomorrow.
Oh, not tomorrow, but
not tomorrow.
Hopefully soon,
but not tomorrow. That would not be a reasonable bet. And so you look at this and you go, okay, well, how many times have you had rallies like this? I mean, even months like this are few and far between.
Of course, they're few and far between. And they're very rare. And I've made the case here on air today. I'm not going to repeat myself. You can listen to Futures Power Hour or go check the morning social video for the daily for those SPX or S&P 500 return stats. But there is a broad shift, is the point. And even something like Bitcoin, which held up better than most assets throughout the Iran war, to give it credit, now is back through the April 2025 low. It's likewise broken the downtrend from the January and the October 25 and the January 26 highs, Ilya. You and I are thinking about adjustments here today. I've cleared my entire book of anything that wasn't long remaining. Nothing was short per se. It was more directionally neutral, but that wasn't working. So it's just back to being an equity dumbbell, which great for missing most of the move. Although the past, still hard to believe that, when I put on this position for the end of the year, 8,000, it's over 200 points ago. And, we only have 850 more to go to get there. Bitcoin all of a sudden looks really good. If we're going to talk about playing catch up and things that have been under, I know you have here. I'm curious about the structure of that trade because as we go out the door here, it's one of those things where I think we're going to get the close today outside of that downtrend above the April 25 low. When I look at IBIT, it's a similar story. I got to say, I feel like I want to start to build into some exposure here, even though it's a Friday and I only have a few minutes left.
I did exactly the same. I mean, I had that thought process where I looked at the stock market today and said, okay, I took some opportunistic put verticals this week, basically on the flyer idea, and I talked about it very loudly. Yesterday, I gave a whole spiel in front of Macro Money saying, I am putting on more put verticals, and I'm putting them on because we're at the level. We're either going to break this level or we're going to fail here. And I'm putting it on with the idea that the risk reward to shorting is never better than it is right here. And if it's wrong, it's coming right off. And today it came right off. Okay, little nick, fine. The core shorts that have 40 more days to DTE, they're at max loss, and that max loss was structured weeks ago and weeks ago and weeks ago. So, okay, that'll be maybe 3-4% of equity overall if all of this expires worthless. Fine. Fine. That's what trading is. But if you're not going to sit here and go, okay, well, so you've cleaned up where there was to clean up, how do you now lay this on? Do you just flip into new S&P longs? Well, now you're asking for it. Because we've had a rally like this twice only since 2011. And one of those included COVID.
Sure.
So this is not normal what we're seeing.
Included COVID. And that was at the lows, and we didn't see those lows again.
This is
in years.
I mean, COVID was wild.
Is a war with Iran not wild?
Not shutting down the entire global economy wild.
They blockaded the Strait of Hormuz. We blockaded their blockade.
That's right. We didn't turn off the global economy. We didn't turn off the U.S. and the Eurozone and China at the same time.
We had to do a globally coordinated SPR release north of 400 million barrels. How is this not one of the crazy events that have happened?
Well, one of those
generational events that keep happening every few years to people like you and me.
And this is what I'm saying. We don't have to come back to the lows, but we're not going from here on another run likely. We're going to get some amount of cooling off
Yeah,
But-
we're not going another 10% in 10 days. I get
Right.
it. I'm with you there.
Right. And so if you now want to say, okay, the ship has turned, we're in risk on mode for however long, how do you put that on if you're not going to chase stocks right here? Bitcoin's one way that I'm doing it. Gold is another.
Bitcoin to me is the interesting play. And unfortunately, unlike some other assets, Bitcoin just doesn't have a ton of vol in it right now. You could take a look at Ethereum here too. Just a simple break of the downtrend, recent swing highs.
Calls.
Right. IBIT is probably the way to do it. And I was just kind of showcasing this on the screen here. If
That's
we were to
what
go
I
out to something like in the strikes, we could go to 42. You look under recent lows, which are closer to 35. Maybe you want to go a dollar wide. I mean, what's the risk to reward on something like that right now? Absolutely horrific. But if there is,
I mean, I went 42 days out.
Mm-hmm.
I went for 42 days out, bought the call vertical from 44 up to 51. And the risk reward there is better than 1. And the risk reward there is better than 2 to 1.
Yeah, it is. I'm thinking though, just given where the calendar stands, I see a July 17th expiry, pretty close to the old birthday there. Maybe it's a little birthday gift, a 7 to 1 for along the 50, short the 60 call spread here. Long the 50 brings you back to the place where prior to the sell-off in precious metals began, right? January 28th.
Yeah.
Okay. And then you kind of get a reset, and that's that cascading down, everything breaks.
Not an unreasonable objective by any stretch of the imagination.
What I'm thinking here, though, is just because of the low volatility, that if you're looking at Bitcoin, which is bottoming and it's starting to break out, is there an opportunity to sell puts here in a favorable manner with the risk to reward being worth it? Not if it's a 10 to 1. You could maybe trail it underneath recent lows, but let's just call it.
I think
62.
the vol is a little bit low here for looking at it that way. I mean, it's cheap enough to just be, I think, a buyer of call spreads.
I like the long 50, short 60 call spread at 62 days to expiration. 62 days to expiration, getting to 50 and IBIT would require basically an equivalent move back to 90K here in BTC. Seems like a lot. Over the course of 2 months.
I mean, you're back into the previous area of congestion. I don't think that's unreasonable.
The midpoint of the previous area of congestion. So I'm going to go over to IBIT here on last call. Looking at this breakout transpiring today, 5 contracts, risking $500 to make $4,500. It's a little bit of a lotto ticket. It's more of one of those overtime Madman delight trades. Maybe it gets filled. Only a minute left or so for us to really start getting things moving that we want to do into the end of the day. Because Ilya, we are at the halfway point. Hey, production, do you mind throwing up the commission rebate special there on the screen? That would be great. We should plan these things in advance more often. But hey.
Yes, planning.
30 days of double commission rebates for new customers who open and fund a Tasty Trade account. The rebate is tied to how much you trade, not how much you deposit. So the more active you are, the more you get back. You're eligible if you're a new customer and an existing customer who has never funded an account. U.S. account based only. Be sure to go over to tastytrade.com and check this out. It's, again, a 200% potential commission rebate right now. It's a good time if you're actively trading these markets. Come get some of your money back. Ilya, people are actively trading these markets. We know that. 1.5 million contracts traded today in ESM6 as we get into the final 15 here of the session. Back to 71.63 and a quarter right now. If you missed the news this morning, volatility has come in. Why? President Trump, Iran offering competing views over a Strait of Hormuz being reopened, but both seem to agree that it is now reopened. Oil prices have crashed around 9% over the course of today's session.
Seems like in the game of chicken, we decided after all that both sides are going to swerve off center.
Maybe at the start of this week on First Call, outlining the fact that there was probably, this escalation, the blockade to help reset the negotiations, keeping in mind that Iran gets 90% of the goods into its country, including food, via sea. So blockading their ports changes the scope of the war.
Well, yeah, conversation starts being, listen, if we can't have the Strait, nobody can have the Strait. Now what?
And that may be the pressure point. So oil here has come in, Ilya. People like you and May have been saying that long deltas may still be appropriate, but not on the call side. If you're going to do it, it's got to be on the short put spread side now.
Yeah.
With today's move, and we had a move like this last week, right? When we dropped from near 100 and CLM6 down to about 85. Is this a buy the dip or sell the put opportunity
Got to be careful
right
here.
now in crude?
Got to be real careful here. Real careful. Because technically, and I don't mean technically, I mean like technically looking at the chart, you have a low against which you stopped here. And that's maybe a bottom. Do you know that at this point? No. And also, technically, if you look at the sort of way you could look at this, either that low holds, and maybe it does, or maybe you've already cracked a larger range bottom around, let's call it $85, and it's the closing low that matters. You've reached the range on that basis. You just haven't overcome the absolute wick bottom on the range. You're seeing friction there. Maybe that's not unusual on a Friday. Maybe the break's already there. Maybe we're already in the midst of a larger breakdown. My kind of MO here is not to assume anything. It is to look at the price action, let the price action go through the most kind of out there obvious barrier, get extra confirmation. So for me, either this thing is going to break back into its range and end up, let's say, north of 85, and then I'm a buyer, or this thing is going to take out the most recent low, and we're sitting at something like 81, and then I'm a sell.
One of the considerations right now I'm thinking about, and it's not a great trade, right? Certainly one of the more, forget lotto tickets, more of a picking up pennies in front of a steamroller. But what are the odds that we get down to the lows that we had prior to the war starting in oil prices here? Considering that from the lows where we were in that week, we can go down to about, we'll call it 63.50 maybe. We'll call it up here to the high that we had when the war started breaking out, near 104 in this contract. You know, you're pretty darn close to the midpoint of this trading range right now. Is there an interesting opportunity where we could maybe bracket that range to say that we're not going to go above or below?
Probably something there, but I mean, I think you have to think about this now. I mean, you've got IVR of, let's call it 46.
Sure.
What's more attractive here? I mean, are you going to go directionally neutral and try to squeeze this vol out? I mean, there's probably a little bit of vol to squeeze, but you are looking at a move that's already resetting. And by the way, stocks have been surging all week. Crude oil has not joined them, which should tell you something. This is not the same kind of...
Can the economy handle $80 a barrel without worrying about recession or runaway inflation?
In the U.S., probably,
yes.
Yeah.
Right. I think about
in the U.S., probably yes.
I think about what we were talking about the first.
The larger issue is probably nat gas in Europe.
Sure. Right. Minneapolis Fed, their inflation calculator said for us to get back to the pain point equivalent to where we were in the 2000s when, you know, oil was getting up to 100, 120, 140, right? The equivalent dollars per barrel today, given how inflation has evolved, would be 190 to get it to 140 equivalent. You're talking about going over 210, 220. Yeah. And then you think about how real wages have moved, and, you know, it doesn't seem like it for most people because of how things have shifted, but wages have, real wages have, gone up double?
Well, it never feels that way. I mean, what did all those behavioral economists win Nobel Prizes for? $1 lost hurts much more than $1 gained feels good.
Yeah, and so I think what I'm getting at here is like $4 a gallon gasoline in 2026 is not the same as $4 a gallon gasoline in 2006.
Sure.
And the economy is a little bit more resilient than that right now, and consumers are a little bit more resilient than that right now. And the bank earnings that we've seen this week have showed us that consumers are still just, as American consumers typically do, just spending through it right now. So near-term recession concerns, I think, are probably limited. Opinions,
Recession, sure, yeah.
The opinions don't matter, but what does a drop down to the lows that we had, at the start of the war look like? Getting through 63?
I think a lot of people are not doing the math on what is a very real possibility here.
Which is?
The Iranian regime has been very significantly degraded.
Sure.
They are only at the negotiating table because they still control the strait, and they've decided to talk fast enough that there's somebody to talk with. If this went on for another week, no telling what could have been. But we know that since December of last year, Iran's population has been restive. We know that the regime cracked down hard. We know that memories are long for stuff like this. We also know that those people that have maybe tacitly approved of our strikes against the regime couldn't have gathered in support of them in the middle of the street with bombs literally overhead. I don't think people are paying attention to the fact that we might strike this deal with the current regime in Iran, and then the regime in Iran changes. Let's not forget, that's exactly what happened in 1979. We got regime change in Iran that was organic. We didn't like it. We put the Shah back in, and then the people didn't like it and took the Shah off. Only then they put in not a populist, but what we see now. So
you have a far more optimistic view of how this may turn out than
I don't think that's optimistic. I think from the perspective of oil markets, we strike this deal, the market goes, oh, there's a deal. And then we get a new sudden rupture where the people tear this regime down and install something that isn't so American friendly as it could have been. And then they block the Strait of Hormuz. Or some such thing.
I suppose here, Ilya, put call ratio today in the market, 0.66. That is lower than what we saw on Friday, November 28th. Friday, November 28th. We were in the midst of a fairly significant move higher there at the end of the year. I know, obviously, Ilya didn't stick the entire time, but when we think about how the market was behaving here in late December going into the rally, right, it wasn't exactly a sign that the thing was ready to sell. And I think this is the one curiosity that bears need to be contingent or aware of right now. Given the shifts that we've seen in the market over the past week or two and the positioning that was held by institutions heading into it, there is, it's such an extreme incentive to chase right now. We actually have data to confirm that here. In terms of institutional option buying over the course of the past week, since January 2025, this has been the single largest week in terms of calls purchased relative to puts by institutional investors. So early in this week, we were talking about the psychology of a market where people were flat-footed at the end of March, having to iron out their books and rebalance the books as the quarter comes to an end. Just like last year, start of April, this thing begins to rip. Retail holds through it. Institutions don't. And now we just produce the biggest call put direction ratio that we have seen among institutional traders, eclipsing what we had in March last year going into April. So, Ilya, this has been a profound week here. We have 5 minutes left in the day, 71.62 here queued up for the S&P 500. We're going pretty close, pretty out to the highs right now. Can't really shake a stick at it. Maybe get a 20 handle on that IVR reading. Geopolitics is the ultimate brick in the wall of worry, some people say, Ilya. Now we've gone to a market where volatility is back to normal contango. Is this Are people too complacent? Too far, too fast? We've heard that a lot recently. Is this too far, too fast in this market right now, given the headlines?
It depends what is the it that you're talking about. I think you look at this and you go, okay, the markets, at least in stocks, and it's very important, I think, that it didn't happen outside of stocks until today. But and really didn't happen in earnest today in all the assets either. But in stocks, the markets basically, as of last week with the announcement of a ceasefire, said, okay, we're extrapolating this all the way to the end. Well, it's there now. What have you done for me lately? Right? This is that scenario where a central bank cuts rates and the currency rallies. And everybody goes, wait, what? Why? This makes no sense. And then you go, well, who didn't expect that cut? Meanwhile, read the rhetoric. There was no speculation in the cut. There is no speculation in the end of this war in stocks anymore. It's there. It's in. Now what? Well, the previous thing we know is that the markets didn't like that there wouldn't be the rate cuts that they wanted. So if you go back to that status quo, now there's even fewer. But is that a reason to sell into this rally? Oh, God, no. You got to wait. You got to let the price action tell you the market is actually ready to care.
You know, we had a head and shoulders here in NVIDIA, and NVIDIA is now north of $200 a share again. We haven't seen that since early November, late October 2025. When you have a head and shoulders pattern, right shoulder or left shoulder, head, right shoulder, that has a breakout and then returns into the pattern, what you typically do then is look for the distance between the head and the neckline, and you look for that to become your new target to the upside. This comes from Peter Brandt.
There.
Well, that target's going to bring it to 244, excuse me. Right. This comes directly from Peter Brandt, one of the famed traders over the years, famed future traders over the years. This is his technique. So when I think about the inverse head and shoulders patterns in the S&P and the NASDAQ and the stats that we've shared so many times in air this week about the return profiles after a bullish thrust like this, Ilya, the end of the Iran war, it seems like the market is moving beyond not just this war, but suggesting the Iran issue is off the table, perhaps for many, many years to come right now.
Yeah.
But what is good about all this is that we're heading into a weekend where there are high expectations again. President Trump said today that we're going to be seeing a possibility of a deal signed this weekend. He's willing to go to Islamabad himself to sign the deal if necessary to end the war, which means come Sunday night when you and I reconvene at 5:55 Eastern, 4:55 Central for a first call, we could be looking at another gap in the market. So
sure.
I think folks just be mindful of that, right? Whatever weekend risk you're carrying, not that there's much time to do anything with it. You are looking at a potential futures gap for the 6th, 7th week in a row coming out of a weekend.
And who knows which way?
Who knows which way? One of the tools that you can use to watch this, IG Weekend Wall Street, IG Weekend Oil, IG Weekend Gold are available free publicly. Just search them on your Google machine.
Yeah, by all means, do what I
here,
do, which is frantically refresh them all weekend long.
Frantically refresh them all weekend long. Ilya, S&P 500, 1.2% higher, new all-time closing high, 71.62. SPX cash index goes out the door at 71.26. Your NASDAQ cash index is going out the door at 26,672. I've never seen a rally like this. Maybe last April, maybe the COVID lows. But this is incredible. It's been another incredible week here on Tasty Live. Hopefully, folks have been able to make it a profitable one. We'll see you on the other side of, we'll call it 48, 49 hours, 55 minutes of rest. Hope you have an enjoyable weekend. For Ilya Spivak, I'm Chris Vecchio. Thanks for watching Tasty Live. We'll catch you on Sunday.